This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Good morning, Security Token Summit. How we doing? How we feeling? Welcome to the third annual STS. Guys, we have a very, very special day for you. My name is Adam Levy. I'm the operations manager here at Draper Goren Holm, the big bad company that's producing the big and wonderful Security Token Summit. And we have a very cool day planned for you. We have one full stage dedicated solely to the future of security tokens, digital securities, and all the magical things that it brings. Me personally, I don't find it as sexy as a lot of other people that are going to be sharing the stage with me, but I'll leave it to them to kind of guide our way through and to share all the insight, the announcements, and all the jam-packed stuff they have for us. And I really do hope you guys enjoy your time here. If you're watching through these streams, make sure to join securitytokensummit.com. Come join the conversation live. Come be a part of the discussion. Come network. Come take advantage of the platform itself and interact with everyone that's watching with you. So securitytokensummit.com. Come in, come enjoy. And I'm really excited to kick things off, especially with our first session. I'm going to bring up our team, Alon and Joseph. What's going on, guys? How we doing? How we feeling?
Thanks, Adam. Thank you. Doing great. And good morning, everyone, and welcome to Security Token Summit 2021. It's our third one. I can't believe it. And we're still online.
How crazy is that?
I know, right?
How crazy? What, the first one?
Amazing event for you guys today, featuring the leaders in digital securities and talking about all the big topics in our industry. There was a lot of interest in the event with over 3,000 registrations, which is just amazing. And we're live streaming this also on Twitter, Facebook, and LinkedIn, as you said, as well as to our media partners, Cointelegraph, Securities.io, Being Crypto, Crowdfund Insider, and Coin360. So if you're watching this on one of the live streams, go to securitytokensummit.com, log in, and join the live discussion and networking. There's already a lot going on. I can see it in the chat. It'll be an amazing day. I'm looking forward to it.
Guys, we've been planning this event for the last a little over 2 months now, and over 70 speakers are going to be participating. Everyone from the SEC Commissioner to Senator Lummis to executives from IBM, eToro, Namaru. The list goes on and on and on and on. Everybody that knows way more than I do about this space is going to be sharing their insights, their knowledge, and all that the digital security tokens bring. And I want to give a quick shout out to the people who are making the Security Token Summit possible. First and most importantly, Accrue. Accrue is the title sponsor of today's event. And props to Mohsin and the entire team at Accrue. They just rebranded and launched their brand new website, so go check it out. And they make real estate investing super easy, super simple to invest and to invest into. And I really suggest you guys go check him out. And also we got Symmetria, we have Onera, and Vertalo, 3 partners that are making this event possible. I'm very excited, specifically because This has been in the works for a long time, and these events are bread and butter. It's what we do best outside of early stage investing, and Alon will tell you a little bit more about that.
Yeah, thanks, guys. Such an exciting day ahead of us. Adam and Joseph, hop off. I'm going to take a moment to we'll take this 1 second. I know when you come to conferences a lot, it's not super fun when the organizer comes on and throws like a 1-hour presentation, snooze fest as to what they do or promote the thing they work on. So I'll keep it super, super, super fast. I'm going to give 5 minutes about Draper Goren Holm, and then we'll be on to the show. I think next is Anthony from Onera. Really excited. So we're Draper Goren Holm. You might know us because we produce this event, and we produce a lot of other events. We are an early stage venture studio and fund, and what makes us unique is that we host, between Adam's Blockchain and Booze and my weekly live streams, we host over 100 blockchain events a year, which basically gives us unparalleled access to early stage startups. We're a team that actually uses this type of technology, uses the technology. So because of that, we're very, very unique. We're not just investing in companies, taking a step back and watching them grow. We're very, very hands-on. Because we're hands-on, because of our events, we get unprecedented access to the best entrepreneurs in the world. Our business model is really, really simple, right? We get that early access. We use the events to meet people. We use the events and our hands-on approach of amplifying portfolio companies, growing them and helping them with business development to amplify what they do. And then our fund doubles down on the teams as they grow. We've done incredibly well so far. We have, these world-class event brands like today. We've got over 21 portfolio companies now, and we've seen already over 10x growth in our venture studio. A little more about our events. We've had over 100,000 event attendees over the years, over 150,000 email subscribers, the best media partners in the world, and the best sponsors in the world. I'll tell you a little bit more about them as we go. And as you can see, the past event speakers are a testament to all of that. And of course, the current event speakers that we have today. The quality that we bring has brought on, I said the best sponsors in the world, but really the best sponsors in the world. Here you can see a few companies who are even going public this year. And what's exciting about these is they didn't just come on and sponsor one of our events. So many of them are returning sponsors. So many of them have become LPs in our fund, co-investors with us, and some even our portfolio companies. When I mentioned media partners, Joseph mentioned all of the stream partners that we have today, our friends and family in the crypto space, but also mainstream media covers so many of our events. And that's really important when we're talking about amplifying our portfolio companies. And all of this stuff combined has given us this outsized impact for such a small team. We're really excited to have worked with and co-invested with all of those funds. I think you know who we are, but Tim Draper is legendary venture capitalist. He's our other founder. He's a special limited partner and board member with us, and of course, a legend on his own right in the blockchain space now as well. I'm Alon Goren. I'm an early stage entrepreneur in previous companies. I've built online investment platforms. That's a lot of what brought me to the security token space, of course. And Joseph, my partner, also a serial entrepreneur, techie, and investor with over 20 years of experience. Him and I met in the online investment space, in the crowdfunding space, and that's part of what brought us here today. We've got venture partners all over the country that help us with amazing deal flow, but also with helping our portfolio companies. And we're a part of the Draper Venture Network. It's the world's most active VC network. And through it, we've got a dedicated support team in Silicon Valley that not just helps with distributing deals, with getting access to certain things, but also with corporate development for our startups and for our community. And that's us, right? We invest in proven teams. We work alongside them to amplify them, to bring them deal flow, to help them grow. And we use our network to do that as well. And really quickly, I wanted to show you our portfolio companies. This is just this is most of them, but go to drapergorenholm.com. That's the most important thing. If you're interested in getting involved in one of our future events, if you're interested in submitting your startup to us to invest in, or if you just want to learn more about what we do, go to drapergorenholm.com. There's plenty of information there, and we would love to have you as a partner. Thank you so much again for being here. This is really, really an exciting day for us. The security token space is sort of a melding and coming together of all of the things we've worked on over the year, and it holds a special place in both Joseph and my hearts. I know Adam said it's not so sexy for him, but what does he know? Thanks, everyone.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Adam, you were just muted when you came on, so start this intro again.
There we go. There we go. We got it, guys. We got it. All right. I was basically saying that I'm biased. Alon, great presentation, and I'm excited to get this thing kicked off, especially with the one and only who's gonna basically lead our very first session. His name is Anthony Woolley, and he leads business development at Onera. Please help me welcome him as he briefs us on the current global state of digital securities and what he imagines his outlook for 2021 being.
Hi, Adam. That's great. I have to say, you had to do the classic Zoom. Adam, you're on mute. But it's great to be here. Hi, everyone. I think it's good morning to all of you in the US. Good afternoon to those of us over in Europe. I'm sitting in London right now. Let me just bring up a presentation, and we'll get going. Okay, there we go. So my name's Anthony Woolley. I'm the head of business development for Onera. Onera are digitizing the private markets using digital securities. I also have the privilege of being the co-chair of the Global Digital Finance Private Markets Steering Group. Global Digital Finance are a fantastic not-for-profit organization working at a global level, promoting digital finance across the whole ecosystem. And I'll talk more about that in a minute. So just to kick off, I'm sure that many of you are experts in digital securities, but just so we know we're talking about the same thing, talking about digital securities, also known as security tokens. I think as the whole token ecosystem grew, security tokens first latched on as a phrase to differentiate from other type of tokens. Coming from an institutional background, I like the term digital securities. It does what it says on the tin. What are we talking about? We're talking about a digital representation of traditional securities, whether they're equities, debt, funds, etc. And being securities, they are subject to all of the securities regulation that any other type of security would be. And as I just referred to, they're a subset of the broader digital asset ecosystem. So we're talking about digital securities, but it does bring in other topics in the ecosystem. For example, custody of digital securities is a very important element for institutions and other parties to enter this market. And most importantly, when you're paying for a digital security, you really need digital money to be able to leverage the power of digital securities and settle them instantaneously. Digital securities aren't so great if you still have to wait a couple of days for your transaction to settle. Okay, so what am I going to talk about? Well, there is a massive opportunity here, right? We know about securities that trade in the public markets. They've traded electronically for 30, 40 years, now sitting on what I would refer to as quite a lot of legacy technology. But you also have the private markets, which is arguably the world's largest offline market. So people often don't understand the size of this marketplace. So the equity private markets are 4.5 times the size of the public markets, debt 2.5 times. And if I extend a bit over into real estate, then you're talking about, you know, over $300 trillion of assets globally. So the private markets is a big place, but historically there's not been so much going on. Right, and this is the thing. If you look at the relative size of private and public markets relative to the capital raised in the secondary markets, there's a complete imbalance there. We estimate there's around $5 trillion a year being raised through the private markets, only 1.4 trillion through the public, and yet the public markets are almost 330 times larger than the secondary markets in private markets for lots of reasons, but not least because this market is offline. Having said that, if you look just in 2019, the SEC published some data saying that there was still $2.7 trillion of Reg B exempt offerings made in that year. So that capital really is out there. Okay, so in this presentation, I have to talk a little bit about the broader digital asset ecosystem, because there's been a few little things going on the last 6-9 months in 2020. So I have to start with the granddaddy, with Bitcoin. Bitcoin, obviously, you're all aware, has climbed dramatically the last 6 months. I think what's most interesting here is that at the start of 2021, many people thought it would fall back after it broke through $40,000, and it didn't. It stayed. It's held itself well, and I think a lot of that is to do with institutional participation, and we'll come on to that in a minute. So this is one market that's really broken through. The next one I would reference is decentralized finance. Again, massive. Now that DeFi tokens have been issued, took off the middle of last year. The market cap moves every day, but right now it's around $80 billion. Stablecoins, and stablecoins brings us a bit closer to the world of digital securities and institutional engagement in digital securities. Stablecoins do provide one of those essential ingredients for payment against digital securities. Right now, there's about 60 billion stablecoins in supply. They're invariably US dollars, so that relates to $60 billion of stablecoins in circulation. And I think any presentation you see out of a conference nowadays, people always try and get this image in. So the other thing that's been going on, I have to make reference to it, is non-fungible tokens. So non-fungible tokens, you're probably aware, Beeble just sold this digital image for $69 million. You can screenshot it if you like right now. Seriously, non-fungible tokens have many important uses and applications. I won't comment on whether the application of digital art is in a bubble or not, but I did observe the other day that there is a virtual digital bunch of tulips being offered. Last but not least, where does that leave us with digital securities? Well, in the past, we've had we have the STO market, so security token offerings happening in the permissionless blockchain space. Total market cap of security tokens is only $641 million right now. Most of that is in the top 3 tokens. And STOs are currently issuing about $14.5 million a month. To give you a sense of perspective, that's about half the amount of securities that the state of Wyoming issues every month alone. And I won't tell you what New York is. So it really hasn't happened yet, right? So the whole digital securities market hasn't quite reached its takeoff moment. And yet there is tremendous engagement and interest in this space, and tremendous engagement from institutions. So all financial institutions, I would say, and I come from an institutional background, many years working for large investment banks, agree that the future is digital. And if you look in the press, there are many projects out there. This is just a small set of them. And those are all pushing forwards, but they lack something. They lack interoperability, the ability for these different projects to interact with them, to share and distribute assets. So why is that? What is the recipe? How do we get institutional growth in the digital security space? I would say there's really 4 key ingredients to that. The first one is supply and demand. You need a market, you need a business case. You need to know that the goods are there and that you've got people who want to buy the goods. Assuming you have supply and demand, in this space, you need regulatory clarity, regulatory guidance, and the right technology. Once you have these things, supply and demand, regulatory and technology, then institutions will and are starting to engage. Right? But with institutional participation, there is still one important piece of the equation missing, and that missing piece is distribution. You really need that capability to bring that supply to that demand, and you can only do that if you have distribution at a global level. Once you have that, then you can start to turn this flywheel and start to drive growth in the digital securities market. Okay, so let's understand what's going on there. Supply and demand. I think I've already talked about that. There is a lot of supply and demand out there, but let me just focus, for instance, if I spotlight, for example, private growth companies, just in 2017, I think there were under 200 unicorns. Now there's over 530 unicorns. Those unicorns are owned by founders, employees, early stage investors who are sitting on often life-changing amounts of assets, but they're not liquid. Is there an opportunity to provide some liquidity for those people? Private equity market, massive in Europe and the US, 4.5 trillion, estimated to double in the next 4 years. So there is plenty of supply out there, as we've shown. Demand. The demand for the investors are there. We've seen the growth of individual private marketplaces, and we see that secondary deals are now largely a part of late-stage VC rounds. So I think we see around $30 billion of VC-backed activity a year, and over $85 billion in secondary deals in the private equity space in 2019 alone. And if you're anywhere close to financial services, you'll know the last 18 months what's been going on with SPACs, special purpose acquisition companies. This number, 73 billion, has now been doubled up to date. But these SPACs are basically empty vessels sailing the seas looking for unknown private companies to take public, right? So again, it's an evidence of the investor appetite for these private companies. So this tremendous supply and demand is there, but this is in a context that every one of these transactions is manual, laborious. It can take up to 60 days. And we looked at some data recently, indications of interest in some of these private market venues, up to 90% of those are lost in the pipeline. So if we can remove friction, if we can take the private markets online, there is tremendous potential. Regulatory and technology. So regulatory clarity has been so important for institutions. I put these press cuttings against a Bitcoin graph because I think there is a correlation between institutional engagement in this space, in the whole digital asset space, and what's going on with regulation. It really started for a number of years. Regulators were saying, well, it's best practice regulation and, do the right thing. But it was really back in 2019 when FATF published the travel rule that it started to provide some real clarity. The travel rule, which gave guidance on virtual asset service providers, saying you have to exchange identifying information on transactions, which seems eminently sensible. And it really went from there. And it's really over the last 6-9 months, we've seen a lot of developments. And you'll be hearing from Hester Peirce, the SEC Commissioner, shortly. But we had, back in October, the European Commission published MiCA, basically saying these things are securities and they should be regulated as such. And then we had the SEC Chairman, Jay Clayton, commenting that all stocks could become tokenized. At the end of the year, there was a lot of activity around custody and stable coins. So on the custody side, the SEC issued a statement and a no-action letter around the ability for special purpose broker dealers to custody digital asset securities. And then really important, the OCC, the US Office of the Comptroller of the Currencies, green-lighted national banks to run nodes and stablecoin networks. And this institutional engagement with stablecoins is essential for the payment leg. You'll also know there are other institutional developments and ultimately central banks down the road, I'm sure, will be in a few years' time, maybe issuing central bank digital currencies. But these stablecoins give us a way to settle digital transactions in real time today. And then just the last couple of weeks, FATF have also classified stablecoins as virtual assets. All of these things, some people think this is regulatory restriction. I see it as the essential guidance that's needed for institutions to be able to engage in this space, protect their investors, protect their clients. Okay, so where does that lead us to? Institutional participation. Who would imagine where we are? I mean, we haven't talked about COVID yet on this summit. It's been quite a year. I wish you and all your families, I hope they're keeping well. But what's happened is quite a dramatic cultural transformation. So I spend every day online, on Zoom. I talk to a lot of institutions, so I need to use a lot of different video technology. But those institutions have been going through a rapid cultural transformation. In the last year, they've probably gone through the next 5 years of cultural transformation around the ability to work online. The fact that not just can you work from home, but maybe you can issue securities online. Maybe you can talk to investors online. Maybe you don't need to buy an airplane, first-class airplane ticket and travel across the road to do an investor roadshow. And so I think this is another important variable that's taking us to the tipping point of institutional engagement in this digital landscape. And I'll give you the same graph I did for the regulatory slide. Institutions have been engaging actively in the whole digital asset space. So see COVID-19 on the left, and then through the summer, we started to see institutions start to hold some of their treasury in Bitcoin. It started with MicroStrategy, arguably. They, in August, put $250 million of their treasury reserves into Bitcoin. They now hold over 90,000 Bitcoin, worth approximately $5 billion. They were quickly followed by Square, MassMutual Insurance, and then the famous Elon and Tesla. In February the 8th, Tesla disclosed they'd bought $1.5 billion of Bitcoin. Anthony Scaramucci over at Skybridge Capital launched a crypto-centric fund, and then the big payments players got engaged, right? So PayPal announcing that you'll be able to buy and sell crypto through PayPal, albeit you can't buy goods and services with it yet. And then MasterCard followed through and said, yeah, later this year, you'll also be able to transact Bitcoin on our payments networks. At the same time, there's then been a lot going on in custody. So BNY Mellon, one of the largest custodians in the world, just a couple of weeks ago, I think, made announcements around their ability to custody digital asset for their clients. And just a couple of days ago, you may have spotted you can go out and buy a Tesla car now with native Bitcoin. So we've got all of this going on. We've got all these projects going on. How do we take this to production at scale? It's about distribution, right? So this is the reality, right? Let me say it, that lack of distribution has shut out institutions and institutional investors. Permissionless blockchains, I've shown you things that are going on in terms of the ability for institutions to custody crypto assets, to trade crypto assets. But putting securities, regulated securities on a permissionless blockchain is a bridge too far for the time being. And so therefore, private assets require multi-venue distribution to reach scale. And the reality is private blockchains and DLT technology that I've been engaged with for quite a few years now do not interoperate. In fact, if you take the same DLT technology, implement it in a different way in two different networks, you still might have trouble with them interoperating. And last but not least, there are no standards for the global distribution of digital securities. But the institutions haven't been sitting on their hands. So over the last year, I mentioned at the start of the presentation, I had the opportunity to lead what is now a large industry group, over 70 companies coming together to tackle this distribution problem. And the result of that is the development of a new protocol called FinP2P. FinP2P enables you to distribute digital securities across disparate markets, across different DLT technologies in different parts of the world. That cross-DLT technology offers instant settlement capabilities, multiple custody solutions, ensuring regulatory compliance across jurisdictions at points of transaction. This isn't just a theory, or this isn't just a specification on paper. So we're going into a session now. I think we've got a senator to follow. We've got Hester Peirce, SEC Commissioner. But then after that, members of that GDF group, led by my colleague Amy, are going to show you this and demonstrate these capabilities so that you can see they are real. We have, I think, 10 contributors who have all come together to integrate their technology to demonstrate you can do this distribution internationally and you can do it across diverse DLT technologies. So 2020 was quite a year, quite a landmark year for tokenization. I would say 2021, that's when we're going to see digital securities really go institutional. We're really excited about it, and we welcome you to come on us with that journey. So there we go. I hope you have a fantastic day. It's an amazing agenda, and I will be seeing you on a panel a little bit later, and I will hand you back to Adam.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Anthony, what a great session. I'm very excited for the Spin P2P reveal. They've been working on this for quite some time now, and it's led up to this moment today. And with me on stage, I have Jessica Walker from Be in Crypto. How's it going, Jessica?
It's going good. Adam, thank you so much for the invite today. The conference agenda looks amazing. I'm really excited to see what is in store.
And I'm excited for you to take the lead here. Guys, Jessica is wonderful. She's going to be hosting the remaining of the show and guiding us through session by session. And shout out to Be in Crypto for being a dedicated media partner for live streaming this and for sharing it with their community. Jessica, kill it. I'm very excited for this. Thank you, guys.
Thank you so much. And speaking of excited, we're going to bring on to our next conference agenda panels for today. So the state of Wyoming has really been making headlines lately. And as you all know, really been positioning itself as a true blockchain leader on the regulatory side of the sector, and also paving the way for how the US will interact with this revolutionary technology. So today we're going to showcase one of the true fighters who's really helping creating the Wyoming blockchain ecosystem. We have Chris Land joining us now in an exclusive fireside chat, accompanied by Julian Silviano from the Security Token Summit. So enjoy.
Well, good morning, good afternoon, or good evening, depending on where you are in the world. Thank you very much for the opportunity, Security Token Summit and Draper Goren Holm for this fireside chat with Chris Land. Chris Land is the general counsel for Senator Cynthia Lummis, the freshman senator from Wyoming. He is the former general counsel for the Division of Banking of Wyoming, and the architect of most certainly is the very first kind of digital assets regulatory framework, which we're going to talk about in a lot of detail. I'm Julian Silviano. I'm a managing director at Promontory Financial Group, and I lead our digital assets group. And I've had the privilege of working with Chris Land and team for quite a while now. So maybe we might jump right into it. Chris, your team and Senator Lummis have been strong advocates of Bitcoin for quite a while. Senator Lummis is I think the first senator in history to actually own Bitcoin, and she has founded the Financial Innovation Caucus in the U.S. Senate as well, an initiative to educate members of the U.S. Senate and their staff about Bitcoin specifically and about other opportunities for cryptocurrency and financial innovation and uses of blockchain. So clearly for your office, Bitcoin and digital assets are kind of a national priority. Can you talk about why that is the case?
Thanks, Julian. And I'll also let everyone know that Senator Lummis was originally going to be doing this panel, but we had a couple of votes called last minute. That has to be our top priority voting. So I decided to deputize for So, one of the first things is China is testing their central bank digital currency right now in several cities. A lot of other countries are really serious about central bank digital currencies too. And also, kind of the coronavirus pandemics kind of hastened the adoption of technology in our financial system because people are nervous or not so fond of cash, or they at least see the advantages to not using cash now in a way that wasn't present before. So I think a combination of those two things is really kind of enhance the focus of everyone on fintech and digital assets and security tokens.
And can you talk a little bit about why your office and the senator specifically supported the nomination of Gary Gensler for SEC chair, and what do you think the impact? What kind of impact do you think he'll have on the digital assets industry?
No, that's a great question, Julian. Gary Gensler, has a great deal of experience in the financial markets. First of all, we were quite nervous about his views on ESG, environmental and social governance, and shareholder activism, because that smells a little bit like the politicization of regulation. But at the same time, he is very, very pro innovation and pro digital assets, pro using blockchain and a distributed ledger for settlement and for tokenization. So that was kind of where we ended up. Was his commitment to innovation is the reason why I think Senator Lummis was so committed to ensuring that he has a good start at the SEC and can hopefully help the U.S. catch up to the global race in fintech that we're seeing now.
Yeah, and Mr. Gensler obviously has a technical background in digital assets, having taught a course in MIT on blockchain. So he's very familiar with the technology. So hopefully he'll be an ally to the industry.
Yeah, very hopeful. Senator Lummis and Gary Gensler, if he's confirmed, will hopefully be working very closely together and interacting a lot, and we'll be engaging in a healthy dialogue between our agencies that's appropriate, and hopefully we can shape a regulatory framework that's both enabling innovation and promoting responsible and safe and sound operations in the market.
And there certainly has been a lack of guidance. And how do you think that lack of guidance on digital assets has impacted the development of the digital assets industry?
No, I think it's definitely had a negative impact on the industry. Let's call a spade at this point. I think it's kind of restricted the development of securities and distributed ledger technology probably by several years. That's the SEC has been very happy to engage with industry, but it's typically a one-way conversation where they're collecting information about what they're seeing in the market and not providing anything in return in the form of rulemaking, no action letters, guidance, and that kind of thing. So we need to move from a one-way conversation to a more inclusive conversation where both parties are engaging and sharing information and working together towards a common goal where we can responsibly integrate this technology into the market.
Fantastic, and it couldn't come any time sooner. Obviously, other countries are ahead, and for example, the first Bitcoin ETF was launched in Canada, and we're working on a couple of other projects for ETFs also being launched in Canada. So, would be curious about your thoughts about how the U.S. can catch up.
No. As you mentioned, I think you're spot on. I do think other countries are ahead, but I also think the U.S. can definitely catch up. Canada, as you mentioned, just recently approved the first exchange-traded product for Bitcoin, and the European Union's working on a new comprehensive market regulation. And everyone knows about Switzerland too, right? Zug, and Switzerland's integrated digital assets, including security tokens, into kind of every aspect of their financial system. FINMA is a very, very regulator that's focused on innovation, and that's good to hear. And China, of course, sees this as a way to kind of undercut the U.S.'s leadership of the global financial system. They want the banking industry and the finance industry and securities industry and commodities markets to come to China because the U.S. has it now, and we're kind of in a global race with China in a lot of ways. I don't think many people really understand that. Especially my generation, we grew up with Wall Street controlling the global financial system, right? It's not our birthright. Like, it's a privilege we have to earn, and we have to work hard to maintain that privilege for the future. And that means innovating in a responsible manner.
Yeah, Chris. I mean, I couldn't agree more. And honestly, this technology, blockchain technology, in a sense, lowers the barriers to entry so significantly that those competitive advantages can disappear quite quickly.
Yeah.
So let's talk a little bit about your state in Wyoming, your home state of Wyoming. In contrast, actually not your home state of Wyoming, but your adopted state in Wyoming has been extremely forward thinking in developing a sound legal and regulatory foundation for digital assets. There's a lot of attention on Bitcoin now, but this hasn't happened overnight in Wyoming. You've been working on this for quite a while. Now we see other jurisdictions following your lead. For example, my hometown mayor, Francis Suarez of Miami, is making a big deal about using the Wyoming framework to support his own digital assets foundation in the city of Miami. So tell us a little bit, what got all of this started? What got you and a small group of other people in Wyoming thinking, we have to invest a lot of time and energy in building the right framework. And can you talk a little bit and share some details on the foundation that's been put in place in Wyoming for digital assets?
Thanks. Someday a movie might be made about this. Probably a B movie, not a particularly good one, but it is pretty interesting. Wyoming is pretty much the only U.S. jurisdiction that really has a more comprehensive and fully built out legal framework for digital assets. And the reason why that's so important is, when you lend someone your money, you want to be able to get it back, right? Like, you're not going to lend someone your money if you think, you don't have some kind of legal rights against them. So, that's kind of the building block for everything else we've done. Wyoming's legal framework, again, recognizes responsible innovation, and it's a good place that for people that want that legal clarity and want to comply with existing laws. Wyoming's legal framework just provides that kind of nexus between distributed ledger technology and digital assets into existing banking, commodities, and securities laws. As you know, Julian, Wyoming created kind of a new bank, depository institution to serve as a custodian for digital assets. Custody is one of the big issues, as we've heard from some of the other panelists today. Custody is one of the big remaining issues, and it's critical to the approval of an exchange-traded product and all the other fun stuff that everyone wants to do. It's that building block that can't be ignored. Banks, unlike trust companies, there's plenty of trust company custodians out there now, and they're doing good work, but banks have certain exemptions under the Exchange Act and the other securities laws that trust companies just don't have. So it's important to have a bank in this space, Wyoming thinks. Wyoming's also done a lot with providing regulatory clarity around what is custody. We have a utility token law. That's everything that kind of started Wyoming's project in 2017. That was kind of what kicked off all the attention. We even created a DAO, a legal framework to allow DAOs to be incorporated in Wyoming, decentralized autonomous organizations, and lots of other stuff. It started 3.5 years ago, and here we are still working on it. So it's a never-ending project. But Wyoming's trying to diversify its economy right now and get away from the the extractive industries and kind of build a financial services industry. South Dakota did it in 1981 with credit card banks and trust companies, and there's no reason why Wyoming can't have a strong, vibrant, healthy financial services industry in Wyoming. It's a beautiful state. Yellowstone and Grand Teton are there. So if you haven't, for those on the panel who haven't been to Wyoming, please Google Grand Teton National Park. You'll see some beautiful photos.
It absolutely is. I've had the benefit of driving across the entire state of Wyoming, so I can attest to that. Yeah. We've got Kraken and Avanti. I guess we're the two banks that have already been approved as speedies, and there's a very healthy pipeline, I understand, of other applicants, and so we'll be hearing some really interesting news coming soon from Wyoming, I'm sure.
Yeah, and from other people too, hopefully. Hopefully the federal government as well. So, yep.
Yeah, and I guess that brings me to my next question, right? What do you see as the biggest regulatory impediments to the growth of digital assets, specifically digital assets custody and token issuance? Has the recent guidance been helpful?
So again, it all begins and ends with legal clarity. You can't get around as much as people want to. You can't get around things like the Exchange Act and the custody rule. Like we think the responsible people in the space are looking for a way to comply. They just need a signpost on how to do it, and that's what Wyoming is really focused on. The devil really is in the details. Nerdy regulators like me love examination manuals and policy handbooks. And because, if you think about the hierarchy of law, you have like the Constitution up here, you have statutes below that, you have regulations, but no one ever remembers to think about that fourth level of abstraction below regulations. And that's like the manuals that bureaucrats use to check boxes and determine whether you're complying with the law or not. Those aids, there's more practical, owner's manual that people use when bank examiners go in to examine a bank or look at a broker dealer or something like that. So that's one of the cool things Wyoming's done. They do important things like, ensuring people are complying with AML BSA requirements, and, how do you prove exclusive control of a security token? I know the SEC is obsessing about that. Wyoming had just actually completed a 771-page exam manual for bank digital asset activities that covers everything you can think of. So, that's kind of the next step. The SEC hasn't even taken that step. We need to get them there. And hopefully, they're working on their examination manual and documents in the background, but that's kind of the next step, we think, is getting that granular level of detail and providing that legal clarity to the industry.
Yeah, I mean, that's a great point, Chris. And I mean, a lot of people talk about regulation in the digital asset space as a negative. And oftentimes, I always think about it slightly differently in terms of the right level of guidance and guardrails. And if they're given with the right level of prescription, they can actually really enable growth in digital assets in a way that regulatory uncertainty, you're providing more certainty to the market at the end of the day.
Agreed. Yeah, it's really important. We want right-sized regulation, as my friend Albert Faulkner, the banking commissioner in Wyoming, says. We want right-sized regulation that does its job and no more.
Yeah, absolutely. And so that brings me to some of the other regulators that have been issuing guidance on digital assets recently, such as the OCC. National banks can now support digital assets activities. I'm sure you welcomed them to the party last year after Speedies had already been around for about a year or so. And so they can issue, they can hold custody, they can manage stablecoin networks. But as of yet, they really haven't issued a lot of guidance on safety and soundness expectations, which leads me to my last point. How do you think traditional banks will approach these new powers?
I think they're going to be, banks are typically very cautious, because it's a heavily regulated industry and they're dealing with, billions or hundreds of billions or trillions of dollars in many cases. So I think we'll see some, cautious adoption. They're waiting on the regulators. I think they want more legal clarity from the regulators before they even dip their toes in. And in many cases, the federal regulators aren't completely up to speed on, the nuance that Wyoming has done already. So, we think we have a good answer in Wyoming right now, but the federal banking regulators and securities and commodities regulators are catching up.
Yeah, and several digital assets firms have also applied for OCC national bank licenses, either de novo licenses or conversions from state trust charters to national trust charters. I think there's even one application which is for a full national bank license as well. How do you think this is going to impact the banking landscape? Will they be competing with national banks? Will they be partnering with them? And what are your thoughts?
Well, I'm not completely convinced we're going to see another OCC charter. It depends a great deal on who's nominated to be the OCC comptroller. That's one of the disadvantages of having a banking regulator that has, someone who is appointed by the president, because they have to be, the president's going to put his person in, whether Democrat or Republican in any administration. They're going to put their person that they want in there and that they trust. Comptroller Brooks is no longer there, and he was responsible for the two charters that were issued largely. And so I think we'll just have to see how that plays out. There's a lot of uncertainty at the OCC at the moment. I don't think existing banks should, fear special purpose charters. We have a very healthy and vibrant banking industry at the moment in the U.S. And, no one should be afraid of competition. These banks are all subject to the same banking regulatory standards as, the large national banks. Just look at the details, and it's not regulatory arbitrage. It's, just wanting to have a level playing field in the market.
Yeah, and so finally, and you alluded to this, that the Fed has been very silent in all of this. Any thoughts on their point of view on banking and payments activities for digital assets?
Yeah, great question. That's the $1 million question, as it were. The Fed has dozens of folks at both the Kansas City Federal Reserve Bank and the Federal Reserve Bank of Boston, and the board of governors here in DC working on innovation, digital assets, faster payments. So they're taking it very seriously, and they're very thoughtful and knowledgeable, and they do a great job. I talk to them a lot. Wyoming's been working with them closely over the last 2 years too, and we think developed a pretty robust supervisory framework that kind of fits digital assets into the banking system in a pretty elegant manner, and guards against some of the unique risks that digital assets posed. And I think the Fed's going to be issuing some thoughts on all these issues in the coming months, and we'll all have to stay tuned. I'll let you know shortly after I know.
Yeah, I'm waiting as well. And finally, I'll put you a little bit on the spot here. Wanted to ask you about, I mentioned during the introduction about Senator Lummis's initiative to start the Financial Innovation Caucus of the U.S. Senate. And maybe I might ask you to talk a little bit about, more broadly speaking, what is your office's and Senator Lummis's office's kind of objectives? She's part of the Senate Banking Committee. And so what are your all objectives, as it relates to digital assets? And we know that you're leading voice, and the industry is very much, is very much looking towards your leadership for help in a lot of the things that we've been talking about, right? Crafting and driving responsible and innovative regulation to enable growth for this industry and to provide regulatory certainty.
Thanks, Julian. That's an amazing question. Kind of the same way I mentioned with the regulators, the learning curve for digital assets and distributed ledger technology is very steep. And there's a million things going on in Washington, and before now, there's a lot of factors that have played into this, but before now, it wasn't kind of as high a priority as it should have been. That's the primary mission of the Financial Innovation Caucus, is going to be to educate our fellow senators and staff and the other regulators, for that matter, on how you can responsibly integrate security tokens and digital assets into the financial landscape. We're going to be doing a lot of activities at the member level and at the staff level, and we're also going to try to do some more practical hands-on experiences with security tokens and digital assets. The whole GameStop saga that happened a couple months ago has given us an opportunity to talk about how security tokens can, lead to faster settlement in equities markets and, provide more liquidity. So, we're talking about innovation as much as we can, but it's really about just FaceTime, making connections, and educating folks on, trying to provide a balanced perspective and educating folks on why fintech and digital assets and security tokens can both promote financial inclusion and create new markets and help maintain U.S. leadership of the global financial system.
Yeah, that's a great point, Chris. And I focusing on the innovative aspects of blockchain and technology and digital assets that help drive transparency, that help drive efficiency, are really not necessarily what people talk about in the front page of when they think about digital assets. So that level of education is very, very much welcome. And so I want to thank you, Chris, for taking the time and for your leadership in this space, not just at the Senate, thankfully, but in the last 4 years, as you mentioned, in the state of Wyoming as well. We really appreciate it. I'm sure that everybody on this call is very much looking forward to what the future holds in terms of regulatory guidance in the U.S. In order to kind of continue to enable the growth of the security token and digital assets industry as a whole. So thank you very much.
Thanks, Julian. It was great seeing you. And I guess we'll turn it back over to the host.
Yep.
Complicated? Accrue lets you focus on what is really important. Life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Well, some really valuable insights there from Chris, and thank you so much for Julian for some great questions. Now, our next guest is no stranger to crypto. We all know her in the industry as Crypto Mom, a really resilient figure for finance paving and a crypto-friendly voice for us all. So leading one of the most crucial financial departments in the US government, our next guest is Commissioner Peirce, who will be sharing what's in store from the regulatory side of digital securities for 2021 and also beyond that as well. So unfolding her insights and asking some pressing questions, we also have Andrew Dix from Crowdfund Insider. So take it away for the next panel.
Hello, everybody. My name is Andrew Dix. I am the founder of the Crowded Media Group that publishes Crowdfund Insider. And I would like to thank SEC Commissioner Hester Peirce here today. Everybody knows Commissioner Peirce, also known as Crypto Mom. She's become a favorite of the fintech and digital asset sector. And this is due to her ability to embrace innovation in financial services. Commissioner Peirce, she is originally from Ohio. It's my home state, so I can't hold that against her. She's a graduate of Case, Western University, and she went to Yale Law. Commissioner Peirce, thank you for joining us today, and thank you for participating in the Security Token Summit.
Well, Andrew, thank you for having me here, and thanks to the organizers of the summit. It's a real honor to be here. I do have to start with my standard disclaimer, which is that my views are my own views and not necessarily those of the Securities and Exchange Commission or my fellow commissioners.
Awesome. Thank you very much. So since we have very little time together, I want to jump right in and ask you a few questions about the digital asset industry. First of all, recently, speaking to the British Blockchain Association, you asked an interesting question. You said, when is a digital asset a security? And I'm going to read this so I can get it right. Despite the frequency with which this question is asked, clear answers are rare. The breadth of our statutory definition of the term security and the complexity of the guidance the Commission has provided contribute to this lack of clarity. People planning to distribute digital assets have to determine whether the federal securities laws apply to those distributions. The SEC staff has provided guidance to help people make these determinations, but the guidance is difficult to apply. So is Howey broken? Is this 70-year-old rule unable to adapt to the fintech era?
Well, as a general matter, I would say we need to have something like Howey. So we need to have a concept like investment contract that captures things other than stocks and bonds, which are typically what we think of when we think of a security. You need to have a way to capture something that when someone says, hey, I'm trying to build a company and I want to raise money to build the company, will you buy a part of that? Will you buy some of these things that I'm selling so that I can build my company? We need to have something that captures that. And so that's the purpose of investment contract, and then Howey, which is the Supreme Court decision that interpreted what that meant. But I do think that Howey has had its challenges over the years, not just with respect to crypto, but in other respects as well. And I think we've really had the chance to think about it a bit more in terms of crypto. And I myself have had a bit of an evolution on that, and really think that it hasn't worked that well in this area because we've almost used it to turn. So Howey was about orange groves, the sale of orange groves, along with contracts to take care of the farming of the orange grove so that the person who bought it didn't have to do anything. In this case, we're sort of treating the orange grove as if it is itself the security. And I think that has led to all kinds of really complicated problems when you try to apply that to a token, which is functioning in a token network. Because if you're treating that as a security, there are all kinds of rules around how it can transfer from one person to the next and who's allowed to do those transfers. And it really implicates all kinds of securities laws. And so it does matter how we think about this and how we apply it. And I think that's why my complaint has been, we need to provide more clear guidance. And my ideal would be if we could come up with a safe harbor along the lines of the one that I've proposed, which would allow people to kind of not have to ask the difficult questions at first while you're building a network, and then maybe later down the line we can think how the securities laws apply. But sort of addressing some of the concerns underlying the securities laws, which are, we want to make sure people who are buying these things are getting good information and that they're not being lied to. But we do want people to be able to build these networks. So it's tough.
Yeah, so it is tough. I think everybody in the industry would agree with you there. And I want to get to your proposal, the safe harbor proposal, in a second. But first of all, the previous panel mentioned Switzerland. So earlier this year, Switzerland made some amendments to legislation or regulations to facilitate effectively digital securities. Now, they didn't mention blockchain or DLT within the rule changes, but obviously this was, at the top of their mind. Is this something that the United States should be pursuing? Should this be, bespoke legislation, or should we do this as a rulemaking process at the commission? I have to be honest with you. Every time I think about Congress creating legislation around digital assets, I get kind of terrified about it. I'm a little bit, leery as to what could be created. So which direction should we go? And is Switzerland kind of heading in the right direction?
Well, I understand your concern because some of these things are very technical. And so when you try to have Congress work on them, it can be difficult. So sometimes it is better for the regulator to try to take an existing regulatory framework and apply it in a way that works for digital assets or digital asset securities. And, we're trying that. We're taking baby steps toward that. At the end of last year, we put out it's sort of like a pilot program so that broker dealers can engage with digital asset securities. Now, it's limited to digital asset securities, and that's a pretty important limitation because a lot of people who would want to do that would also want to be able to, have people pay with Bitcoin or perhaps other crypto. So it's limited, but I think it's a start down that road. What we have to learn, though, from Switzerland is, they've been thinking about this, I think, very strategically, right? The answer is not, we'll just throw up our hands and say, you don't have to be covered by any regulation at all. It's to say, no, let's craft a regulatory framework that we think will work so that the rules are clear and people know what they need to do, and then they'll come here and build it here. And that's kind of the message I've been trying to give here in the US. I tend to be a pretty deregulatory type of person, but I also realize that, you're going to want to have a regulatory framework in place. And actually what people are asking me for is not hands off. They're just saying clarity. And so I think that's where Switzerland is making a lot of sense. And they're putting this framework in place. They're thinking about it from a clarity perspective. And Congress can help to push us. They can do that by either adopting some pretty broad legislation that kind of draws clear jurisdictional lines, what belongs at the SEC, what belongs at the CFTC, and so forth. And they can direct us to do rulemaking, which is one way to approach it. But we might learn from somewhere like Switzerland or Wyoming, for that matter. You just had Chris on talking about work here that he's doing here in DC now, but he did a lot of work in Wyoming to set up a framework that was specific to digital assets, which is something we can learn from.
Okay, so that's interesting, and I like your answer. I'm kind of curious. I don't know, how much digging around in this you've done. Have you looked at what the French have done in the whole ICO, utility token thing, or have you had a chance to review the proposed legislation at the European Union level? I'm curious if you have any thoughts on any of that.
I mean, I'll be honest. I haven't spent as much time as I should thinking about those what they're doing in Europe and France. Although France specifically, I think, has taken a really interesting approach, because they are wanting to build something that allows people to do these token distribution events in a way that does do some of the same kinds of things I'm trying to do with my safe harbor, which is get information out there, but also make it clear that you can do this kind of thing. And then I think the European Union, again, I've looked a little bit at what they're trying to do, and I think they're doing this. They're taking the approach of, we need to have something in place so that people have something to grab onto. And I think the initial reception that I've seen is fairly positive to the fact that they're trying to do something like that. We'll see how the details play out. I don't know how it will all play out. And again, I have a lot to learn from what's going on in Europe, also what's happening in Asia, what's happening in the Caribbean. There are a lot of places that are taking much more forward-looking approaches than we. And by forward-looking, I mean really trying to provide some clarity.
Okay, so that's interesting. Now you just mentioned your safe harbor, and I'm going to ask you to kind of explain it. My recollection is there's like this period of time where you can figure out whether you've created a network and the token may not be a security, or it could be a security later. And maybe you can give a brief explanation of that. But does your safe harbor have a chance of becoming part of the rules?
Yeah, so just briefly, the idea is that at the beginning, when you want to take advantage of the safe harbor and you want to start distributing your tokens broadly, you say, hey, the timer is starting now. I'm providing this information about what my plans are for the network, and providing information about who's behind the network and what you get a little bit of a picture of what's going on. And then you have 3 years to develop the network so that the token is actually usable or the network is decentralized. And at that point, it's clear the securities laws don't apply. And everything that you say will be covered by the anti-fraud laws under the securities laws. So that part of the securities laws will apply during that 3-year period. We're thinking about how, if at all, we need to refine it. But it is something that I plan to talk to Chair Gensler with if Chairman Gensler gets confirmed, as he's expected to get confirmed relatively quickly. It's something that I'll talk to him about. I'm not wedded to the particular safe harbor.
Right.
I think the French approach is kind of similar, but maybe even more open and less prescriptive than the safe harbor would be. But I think something along those lines would be helpful. So that's what I'm going to advocate for. We'll see if I'm successful.
Okay, or should we anticipate a version 2.0 soon? Are you going to update this?
Yeah, that's the plan. And I mean, the plan is, again, I believe in crowdsourcing things. So the idea is to put it out there again, get some more feedback, see how we can improve it even more. And obviously, if it were to go into place, it would go through a formal notice and comment rulemaking process, probably. That's the most likely form.
Okay, I like that. I think this is a good idea. So I'm going to switch gears here a little bit. NFTs. So recently we had a securities attorney provide some insight. Louis Cohen, who you may know, he's focused on the blockchain sector, because first you have Elon Musk selling a tweet of a song. Actually, it's a song as an NFT. And you have Jack Dorsey selling his first tweet. And then Beeple sells a work of digital art for $69 million. And I think when, everybody saw that he's selling art for $69 million and it's digital, that kind of made the world stand up and take notice, because now you're starting to talk about some real money here. In my discussion with Louis, I was like, well, when does something like this kind of, cross the line into becoming a security? And in brief, he said, well, it doesn't have to be a security to be a thing, but it could be an investment contract, which I thought was interesting. Is this something the SEC is taking a look at? Do they have an interest in this booming market right now? What are your thoughts on NFTs?
Well, we have an interest in anything that could be a security, so we're paying attention. But I mean, the whole concept of an NFT is supposed to be non-fungible, so it's supposed to be unlike anything else, which means that it's, I think, in general, less likely to be a security. But you could certainly, I mean, people are being very creative in the types of NFTs they're putting out there. It's a wonder what some people will pay for, and so I think, given that creativity, as with anything else, you should be asking questions. If you're doing something where you are saying, I'm selling you this thing and I'm going to build this, I'm going to put a lot of effort into building something so that this thing that you're buying has a lot of value, I mean, that's going to raise the same kinds of questions that these ICOs have raised. And so you've got to be very careful when you do something like that. You also have to be careful if you decide, you're going to take a bunch of these NFTs and put them in a basket and then break them up and sell fractional interest, or even if you take one NFT and sell I mean, if they're selling for $69 million, you might want to break them up and sell fractional interest, and then you better be careful that you're not creating something that's an investment product, that's a security. So you've always got to ask those questions. I think, as we've seen, the definition of security can be pretty broad.
It can be. That's correct. So yeah. So thank you for that. So I'm going to shift back to, you mentioned the incoming chairman of the SEC, Gary Gensler. I think everybody assumes that he will be confirmed soon, any day now. I would, and looking at his history, I would say that he's probably the most sophisticated chairman in regards to fintech that we've ever had, and fintech's relatively new, but he obviously understands this stuff. He has researched it intensely. He taught a class at MIT on blockchain. I mean, he knows his stuff. I'm not certain if you've had any chance to interact with him yet. My question is do you see areas where you think that the two of you, I mean, you've been the most innovative commissioner, I think, ever, at least in recent history. Are there areas where the two of you agree? Do you see areas of possibility where the two of you can work together and kind of forwarding this innovation sector of securities?
Yeah, I do. So I've known Gary for quite a while now. I knew him when I worked on the Hill. He was heading the CFTC, the Commodity Futures Trading Commission, and so got a chance to know him then, and then have kept up a bit with him since then, including I went up to MIT and actually did a conversation with him at an MIT conference on crypto, and that was a lot of fun. And he has been thinking a lot about this stuff. He sees the talent in this area, and I think he sees the potential of the technology. And he's also someone who really appreciates the importance of a good regulatory framework. Having had this chance to run a regulatory agency before and he built a whole regulatory framework around derivatives after the financial crisis. He and I had our differences about that framework, but I think he's someone who knows how to build a framework from scratch. And so I definitely see areas where we're going to be able to work together and try to build a framework that works, that achieves the regulatory objectives, but is effective. I think he'll be someone who's going to look to what other jurisdictions are doing and learn from that as well. So I'm enthusiastic about his arrival. I think the most important thing is to have someone who's coming in who doesn't take a lot of education. I mean, I think Chris was just talking about in the last segment how important it is to build that base of education. And with him, I don't think you're going to have to do that. You're going to be able to jump right into conversations with them. So I think it's a really a positive thing for the agency and for innovation.
Yeah, so I think that's good to hear, and it's nice to know that you have a rapport with him too, because I think that's always helpful. He's a known quantity, so that's exciting. I mean, I think that this is an opportunity for him to kind of make his mark on an area that's not only innovative, but it's fascinating, and And so that'll be cool to see if that develops. Any thoughts or comments?
I would say too, and I think it's always important to say this to audiences in the digital asset space. He's going to come in, and there are a ton of things on his plate that are going to slam him on the first day he comes in, because anytime you're running a regulatory agency and one that deals with the capital markets, there's always a lot going on. And so getting the bandwidth is always going to be an issue for any chairman. But I think it is something that, that he and I will certainly be able to talk about. And so I'm optimistic, but I think people also need to be realistic and a little bit patient.
Yeah, I understood. Any thoughts on the broader Biden administration and what's coming out of the White House in regards to interest in fintech and digital assets, or not so much?
I mean, it's still early days. We'll see what happens. There are some things that could be done, coming out of Treasury or the White House in terms of thinking about fintech more broadly and what can we do to cultivate an environment in which fintech can thrive, in which maybe we have cross-agency sandboxes or something along those lines. So there's certainly work that can be done. I think this is going to be an important moment for the administration and for us as the American people to think about issues like privacy and the importance of having regulatory barriers low enough so that new competitors can come in to a space, and thinking about what are the trade-offs between privacy and security. Those kinds of issues are conversations that we really need to have, and this is a natural moment for us to have those. So I hope we'll take advantage of that as well.
Awesome. That's really interesting. So let's jump back to Wyoming, because you mentioned it just a few minutes ago that Wyoming is doing some really innovative work in regards to digital assets, and other states have looked at or are looking at doing similar things. And there's always a bit of friction between the states and the federal government. What are your thoughts on what Wyoming is doing and how it gels with the federal regulatory environment when it comes to securities and digital securities?
I think that's an important question to ask. The states are laboratories of democracy, is what we always call them, and they're places where people can try different things. And Wyoming has certainly been at the forefront. Others are now trying to get into that game as well. You see places like Miami, where the mayor is really trying to encourage a community to develop there. So I think that's important. One area where we saw a little bit of a clash, and this is natural because the states have a role in financial regulation. The federal government does too. So recently, Wyoming took a position with respect to one of their entities, whether it could be a qualified custodian under the Investment Advisors Act, which is something that we administer at the SEC. And so the staff at the SEC came back and said, "Whoa, not so fast! You gotta remember that we're the ones who run the show here with respect to qualified custodians." And while that's true, I think that it illustrates maybe a broader question than just crypto. It's a broader custody issue, and it raised some new questions that I'm not sure this was the right context to raise those questions in. And so I think that's one example of where we really need to provide some guidance so that things can move forward. It's very helpful what the states are doing, but sometimes the onus is really on us to do something.
Okay, so that's interesting. Another topic that I believe you've commented on before in the past is kind of the whole regulation by enforcement, and it's one of those things that the industry tends to criticize. They don't like it. It can establish some actual guardrails so people have a sense of whether they're doing something wrong or not. I don't know, maybe you can share your thoughts on that commentary. And also, I've got to ask you, you recently tweeted something out about the digital assets custody, and I think every response following was from the XRP army. I mean, do you read all these tweets from those people that are very committed to this digital asset?
Well, look, I welcome feedback from anyone, and so I'm always happy to hear. There are some issues I can't speak to, and one of those, which I know has been frustrating to some of those people who have tweeted at me, I can't speak to Ripple and the XRP litigation because that's ongoing litigation right now, and so I just can't speak about it. But more generally, enforcement is sometimes a tool that we use, and it's a necessary tool for the agency. So I'm supportive of using it, but I always underscore, and not only in this context, but every context, we're a regulatory agency first. And what that means is that we're supposed to write clear rules so that people know what to do to comply with them. And they know that if they don't comply with them, they might be facing an enforcement action on the back end. But good government means that you spell out what the rules are before you start enforcing them. And I think that this is an area where we haven't done a great job at spelling out those rules in advance. And so we have provided some clarity through our enforcement actions. I think people have been watching them quite closely to see what we might and might not find to be acceptable. But why not just take the much more positive and proactive step of putting something out there and saying, all right, look, we understand what you're trying to do, and we don't think it's bad to try to do a token distribution. We understand why you need to do that to move forward. So here's how you need to do that to move forward. Now, if you don't comply with what we lay out here, you could be facing enforcement action. And I think the fact that we've done this through enforcement actions, many of which are settlements as opposed to actually going in front of a judge, further complicates matters, because what people agree to in a settlement may be driven by a lot of factors: how much money they have for lawyers, their desire to move on and move forward. So it is good that I guess that we've gotten some judicial opinions in this space, although I have some. I've expressed some concerns about the way the judges have come out as well. But I really do hope we'll at some point provide clarity through a means other than enforcement.
Okay, that's interesting. Another hot topic in the news right now is Coinbase and its looming IPO. And I don't think you can really comment on that per se. But we recently published an article where Lee Schneider, who's a GC of EOS Block 1, he said he posited that this is going to define the digital asset industry going forward. If and when the offering is approved. Do you view this as kind of a seminal event? Is this not something you can comment on? I'm kind of curious as to what your thoughts are on like this first digital asset company with this enormous IPO.
Yeah, I mean, I can't really comment on it on any specific IPO or company, but I think that it is an interesting moment for the industry because you're seeing traditional finance and decentralized. I mean, we're not DeFi specifically, but you're seeing traditional finance and crypto sort of meet, and that was inevitable that would happen. But I do think it's sort of symbolic of this broader trend of institutions around and saying, there's something going on here, and maybe we want to participate ourselves or get our clients access to this new asset class. Again, I'm not advocating any particular asset class, but that's what I'm hearing and seeing from institutions. And so I think it really is symbolic of the moment. And I suspect that we're going to have a really interesting 2021 where we're going to see more of those moments where traditional legacy institutions are looking and saying, yeah, we want to get involved in this in some way.
Yeah, that's interesting. Some people in the industry have been frustrated with the lack of clarity in securities law in regards to digital assets, be these securities or not. Believe that the United States has fallen behind or is at risk of falling behind in regards to some other jurisdictions that we've already discussed. Some industry participants have made a decision to set up shop in other jurisdictions. Is this a problem for innovation in financial services in the United States? Is this something that, because the market's so big, we can just bounce back immediately? What are your thoughts on complaints from the industry on this?
Well, I mean, we do take for granted that we have the best capital markets in the world, and we have the best atmosphere for innovation in the world, and we take that for granted. A lot of people want to come here and want to build things and want to work with other people here, but we do need to be nimble, and we need to be nimble from a regulatory perspective as well, and we need to accept the fact that change brings with it, experiments, some of which work, some of which don't. And it's sometimes a bit messy, but that's okay. And so I really hope that we can do a better job at cultivating that environment here. My piece of that is to try to build rules for our capital markets that make them as dynamic and as innovative as possible. And that's something that I really am committed to doing. There's so much more talent in our country that could be tapped. And so getting capital to those parts of the economy, to those people, and there are people who should be participating in our capital markets who aren't. And so I'm excited about both of those things. I think it's a real opportunity for us to rethink our approach.
Hi, everyone.
To try to be a little bit more nimble.
Awesome. I have one quick question for you, because I think our time is up. Will all securities eventually be digital? And I'm not saying using blockchain or DLT. Is that an inevitability? I kind of assume it is. I'm curious as to what your thoughts are.
That's kind of my assumption too. I don't have a time frame, but that is my assumption.
Great. So I believe our time is up. And I want to thank Commissioner Peirce for joining us and sharing her perspective, her unique perspective. And I think that the industry is very fortunate to have your voice on the commission. And I hope that someday we'll see you as the chair of the commission. So thank you very much, Commissioner Peirce.
Thanks, Andrew. This was a lot of fun. And my door's always open, so come talk to me.
Thank you very much.
Take care.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
Well, what a great discussion there. Just to echo Andrew's points, a huge thank you to Commissioner Peirce for her insights there. Now we have over 12,000 of you viewing from all over our different live streams. And if you are watching us live, thank you so much for joining in. But I do recommend you go over to securitytokensummit.com so you can join some of the networking that is live. Now, our next panel marks a revolutionary breakthrough announcement that's been in the works for some time, and our audience is really excited to share it with you. So here to share with us their grand reveal, please help me to welcome Amy Ben David of Onera, Michael Sholov of Fireblocks, Dan Trucchi of Symboid, and Alison Kaufman of Circle, and also Mark Mayerfield of GK8. So take it away.
Hi, everyone, and welcome to the panel. So today we're going to talk about digital securities in the institutional space. And we're going to talk about a project that is aiming to solve one of the biggest problems in this space, and that is holding the market really, which is interoperability and interconnectivity between different platforms. We have been working on this for quite a while as a group under the GDF. Anthony, my partner, spoke about this earlier. And we'll speak about this in more details. But first, let's have some introductions. So I'm the CEO and founder of Onera. And our role, our kind of mission is to interconnect the digital security space. Michael, let's move over to you.
Yeah, sure. So my name is Michael Sholov. I'm the CEO and co-founder of Fireblocks. We provide secure infrastructure for financial institutions, primarily for custody technology, digital asset transfer technology, and also the ability to issue and mint tokens. Excited to be here.
And congratulations on your latest news and cooperations with institutions. So it definitely seemed like the institutions are coming.
Yeah.
We'll talk about it in a minute. Ellison, please.
Hi, everyone. My name's Allison. I'm a solutions engineer over at Circle. Circle is really focused on building payments and treasury infrastructure for the internet, so helping people to update their businesses and digitize. And we work together with Coinbase to make up the Center Consortium, bringing the USD stablecoin to the world, which is backed 1-to-1 with the US dollar.
Thank you. And Mark?
Hi. GK8, I'm Mark Mayerfeld, Chief Revenue Officer of GK8. We're a blockchain-based cybersecurity company. We offer an end-to-end custody solution that's really geared for both private blockchains and public blockchain, both key management solutions as well as wallet management infrastructure. Similar to what Michael mentioned, we also provide minting and burning of tokens, as well as an entire infrastructure, soup to nuts, for our bank to get into digital assets.
Thank you. And Dan, please.
Hi, everybody. How are you? I'm Dan Truque. I lead business development for alternative assets at Symbiont. Symbiont is a permission blockchain company. We're one of the old timers on the industry. We've been around for 7 years now, and we've launched some large networks with key financial players in the industry. So we have several clients, like the most notable one is Vanguard, who has been using one of our networks for managing 1.5 trillion worth of assets. And we're currently working on several other solutions with large financial players to drive adoption at the institutional level. So that's why what we're about to announce, it's really exciting.
Great. So I'll give some context about what we've been working on, and then we'll jump into a discussion. I think we just heard from Commissioner Pierce that effectively all securities will be digitized, and I think all institutions agree with that. And we're seeing a lot of projects within institutions to digitize private markets and other securities. But the problem is that there are so many technologies out there and so many technology providers, and there's no way for them to actually interconnect and connect between them. And without this interconnectivity, we're just going to have a lot of islands and silos, and the market cannot grow in the same way that Bitcoin can grow or other markets, DeFi and so on. So it's a critical component for the creation of this market. So over the last few months, we've all connected in a group called GDF, Private Markets Digitization Group, which collected some 70 group members from across the industry. And we worked on a protocol that will enable us to interconnect the market. This protocol is called FinP2P, Financial Peer-to-Peer. FinP2P is now published as an open source specification, so anyone can go to Google and look for FinP2P, and you will find the full specifications there. And what we've done is we've done a POC, because we didn't want just to do a protocol. We also wanted to show that it's actually worked before we publish it. So we did a POC at the beginning of the month where 10 companies connected together for an hour and a half of going through script that actually prove interoperability. And in practical terms, what it means is that every asset can launch with a specific institution running on any platform with a custody provider, with settlement solution, with digital securities platforms, and then they can offer and publish their asset on the network. And then from across the network, other users using other platforms can come in and do transactions. Those transactions are routed through FinP2P, which is a routing network. It's not a blockchain. It's a routing network that routes transactions. Every user has a unique ID across the platform. So as the user, I can hold private securities on multiple platforms, and it's completely transparent for me. So before we go into discussion, I want to show a video of that hour and a half, which we condensed to 8 minutes. And what I will show you is 10 different integrations. It's going to be quite a lot, so buckle up. But I think it's important to see that this is an initiative with some serious force behind it, where the industry is kind of really committed to interconnect and bring digital securities to the market. So let me put on the video. It will take a second. Hi, everyone. Over the last few months, we've been working on the FinP2P interconnectivity network. It's a routing network that connects financial institutions for the issuance, trading, and instant settlement of digital securities.
We're interconnecting 10 different diverse platforms through using the FinP2P APIs. And I don't think that has been done to this scale with this amount of diversity.
The first interoperability functionality we're going to show is going to be based on Fabric. Let's imagine I'm in with Bank UK and I'm going to go as an admin into the Node dashboard. And one of my assets is called Huli. Now, let's assume I want to share Huli with other institutions. Now let's look at the user from Bank US. Let's say Bob. Choose 1,000 shares for $1,000. Confirm transaction, and the transaction is done.
Okay, great. So for those that aren't familiar, for this FinP2P integration, we integrated our Project Whitney demo. The idea is that it's a centralized platform that connects to multiple blockchains to allow for the tokenization of assets. So the scenario we'll look at here is for our issuer 21, who is Driftwood Interiors, a Delaware-based corporation. So I'll come to our security master file, and I'll go create an asset for issuer 21, which is Driftwood that we just saw. It's going to be a Reg D 506C security, US Delaware-based corporation. Here we'll use public Ethereum. Next is the rules that we can associate with the security. So when I create those, we'll see a new TSIN, that's a tokenized security identification number of 131. You can see there's Driftwood Interiors. So the next step would be to do our book upload process. So this is really the primary offering, if you will. Now we have the option of those 1,000 outstanding shares, some to investor 73, which is Alice, who we can give her 200, but then the other 800 shares will push out into the FinP2P network here. Admin can enable this asset for its owners, which will allow them to take part in this primary offering. We'll come and we'll allow, of those 800 shares available, Rob can take 250 of them, confirm that transaction, trying to buy those assets, and we should see an approval here, and as that transaction is validated.
Moving on, I'm going to now do a Corda script. So I'm going to click invest, and effectively on the front end it should look exactly the same, but we will see in the back end that the transaction is actually registered on Corda rather than on Fabric. So this is a Fabric to Corda example. Again, I'm going to put 500 shares just to see different numbers. Confirm transaction. The transaction is done.
On an asset, an ETF, where they are the control location associated with that particular fund. I'm going to bring it into my brokerage and engage in transactions with that particular asset on a variety of different networks. Now, what's cool about the FinP2P framework, of course, is I actually don't care which ledger was used for the issuing of that asset. I think in this case, it might be Corda, it might be Symbiont, or maybe Fabric, I'm not sure. Actually, it doesn't matter. From my perspective, we're going to pull it out and transact in the Stellar network. And now he's going to actually transfer it via the Stellar network, peer-to-peer. And again, this is an atomic cross-ledger transfer. It has been a very straightforward process. It's cool to be able to interact with all the other financial institutions and all the distributed ledger technologies that are connected in. And that general focus that I and team have had on hub and spoke model, where you basically make your connection, and that allows you to connect to all the other pieces without having to do point-to-point connections, is the way this market is going to need to evolve.
I'm going to show the integration that we've done with Fireblocks. Let's start with the custody process. We're going to try to buy the Monsters shares with the Fireblocks custody service. Let's say 1,000 shares for $15,000. Now, what's going to happen now when I click confirm transaction is that the custody process will start. I'm supposed to get a message on my phone, which I just received. And I'm going to, on my phone, I'm doing the approval, and then it's going to do my face recognition as well. Okay, I got it approved here, and you can see it's approved here as well. Now, the second transaction we're going to show is we're going to try and show a transaction through Fireblocks USDC through Ethereum. You will see that we furnished Bob in advance with some money on the USDC Fireblocks account. Now they can go to Duke, click invest, choose the Fireblocks USDC account, 1 share for $25. Let's go back to follow live what's happening in the Fireblocks platform. So the first thing that happened is a transaction that basically puts the money in freeze until the security is actually being transferred on the Corda blockchain. And you can see that it's now broadcasting. We can find the transaction live, and you can see that ERC20 tokens. There's a transaction from 42 seconds ago.
functionality in Fireblocks that is called Transfer Assist that basically is able to coordinate two digital legs. And one of them, in this case, is transferring the shares, and the other one is transferring a stablecoin.
So here what we're seeing is the Symbiont node. So you see here up on the left, it's Symbiont. We've had the two companies that I mentioned that we have. So if I click here, for example, on Macmillan Toys, we can see who are the investors. We are going to see that the investors are Bertha, Michael, and Dan. Bertha, and actually see the asset because Macmillan Toys was shared with the FinP2P network. So Bertha has invested in it. Michael from Symbiont has invested in it directly through the node. I'm going to have Michael buy some more stock on Macmillan Toys. So I just go here, I click invest. This is essentially the view on the Symbiont network itself. So this is looking at the blocks directly.
So now the way that it works with GK8 is that when I create a transaction, GK8 is doing their two-factor authentication through an SMS. So when I click confirm transaction here, I'm going to soon get an SMS message, waiting for it. It's arrived now. I'm going to click the link here. It was successful on my phone, and it was actually executed successfully as well.
In this particular case, GK8 is providing the MPC solution to for the Onera environment, but GK8 does provide a full end-to-end digital asset platform, including very unique cold vault as well as a patented MPC solution.
Victor, a custody solution in this model. When I click invest, confirm transaction. Now what happens is I need to go to the Pictor screen, and now you will see that there is a request for signature. Now I have a physical dongle that is connected to my computer. So at this point I need to click approve, and then I need to click platform, and now I need to touch this device. And after touching it, it's approved. And now if we go back, then the transaction is done.
So Pictor is doing both the custody of digital assets, so any type of assets being on public blockchain or private permission blockchain, security token, or crypto assets. What is specific about Pictor is a network of financial institutions that we use to decentralize the custody.
Okay, so here we have a user, and Trent today will attempt to purchase some shares of Sirius Cybernetics. So we click invest. We use IVNO USD. It's worth noting that IVNO tokens can be of any denomination, and we click confirm transaction. We'll see the transaction sign in the background and validate, and the shares are actually moving from the Fabric chain. The settlement's occurring on quarter.
IVNO is all about instant value transfer based on a tokenized underlying asset. One of our out-of-the-box solutions is BlackRock money market funds.
Circle is actually the company behind USDC, and therefore the connectivity here is to accounts within Circle itself. I'm going to make an investment, and this time I'm going to choose the Circle, and I'm going to take, let's say, 3 shares for $30. The money is being transferred from the buyer's USDC account within Circle to the seller USDC account within Circle.
Circle is a money services business, so we do fiat to USDC on-ramps and off-ramps. And this is kind of like the anchor product for Circle, which is just a USDC bank account, essentially. And then you can create a sub-account architecture for clients or sellers, for example. Beyond the anchor product of the USDC bank account are the APIs.
Okay, so thank you, everyone. Thank you. So this was a kind of, I think, a power show of so many ledgers, custody providers, settlement, everybody connecting and doing something that was considered a few months ago impossible, but is now possible. So, and all the front ends you've seen, it's all API based. So any platforms can be connected and built on top of that. Let me start with you guys. What was your experience in interconnecting to FinP2P? Maybe I'll start with you, Dan. You have a ledger that you wanted to connect. So how was the experience actually?
Sure. So I think overall, like our integration with FinP2P was very straightforward. We had already been working for a while with large financial partners for over 2 years already, like developing functionality to eventually release a private securities network that runs on our permission blockchain platform. So prior to engaging with FinP2P, we already had all these smart contracts created that were callable via an API. And given that FinP2P has a very well-documented API, really all we had to do was create a simple adapter, essentially an API sandwich layer that would translate our APIs into FinP2P's APIs, just kind of like connect the piping. By the way, Onero was super helpful in helping us clarify a few points, but overall it was a smooth process. Also, as Ami mentioned, like in this case, actually the UI, the user interface, was provided for the pilot, so we didn't have to worry about creating a front end, which is something that our clients on the permission network can provide themselves, or in the future we can make something available. But I think that's one of the powers of the FinP2P protocol, that because it's API driven, you can just plug it into whichever user interface you need.
Thank you. Alison, what was your experience in the connecting to FinP2P from Circle?
Yeah, I'd like to echo a lot of the points that Dan made. I think it's a pretty seamless connection between the FinP2P protocol and sort of Circle's infrastructure as well. As my colleague Nikhil kind of went over, USDC is kind of at the heart of everything that happens within Circle, but we've built a host of APIs on top of that people can use to kind of integrate with us to create that kind of on-ramping and off-ramping functionality, as well as that sub-account kind of ledger functionality beneath it. So it's a pretty, obvious fit with what Onera is doing and with the FinP2P protocol, and being able to kind of provide these institutions with not only kind of this ledger infrastructure for instant settlements, but also for a way for them to do on-ramps and off-ramps for both the crypto and the traditional world.
Thank you. And Michael, we've done integration with Fireblocks on two fronts. We did both custody service, and I know that you're providing custody service for crypto. So we'd love to hear what it means for you to provide custody services for digital securities as well. And separately, we also provided settlement through you. So that was two integrations. So what was your experience like?
Yeah, two birds in one stone, right? I think that overall, I mean, I think that the teams worked fantastically together. I think it was a pretty smooth integration, right? And we've seen clearly it's not trivial in this space, especially as the ledgers that were introduced were private ledgers across like multiple different ledgers. So that was a fairly streamlined process from our end. Clearly, you guys were very knowledgeable about and learned very quickly our APIs and how to trigger them, and also how to basically set up all the policies and be able to demo the power of the platform, and the power not only like the platform as something that can sign on transaction like typical custodians, but really the power of all the workflows and the approval flows, and how you can really simulate a real scenario. And then I think you guys really took it farther to not only on the custody side, but really take real life examples where you need to settle the entire flow, including with USDC, right? That is a great partner for us. We just generally speaking, I think right now 15% of our flow is basically USDC. So the power of basically using the settlement rail against the custody is a really cool integration that we were able to show here.
Great.
And by the way, in my conversations with the banks that we are working with and the banks that we are contemplating on working with, I think that this settlement aspect against issued securities is in the heart of what they're looking for.
Yeah. So in effect, if your custodian service is provided to a bank or an institution through FinP2P, you can basically offer digital securities as well through one connection, rather than connecting to all the institutions separately. Yeah.
Yeah.
And Mark, lastly with you, you're pretty strong on you come from the cyber world and security, and I know that you're doing cold wallets as well as hot wallets as well. So how was your interconnectivity to FinP2P?
Exactly. I mean, I think it echoes similar to what other people have mentioned. I mean, the FinP2P network, the beauty of it is the single API integration, where once integrated, pretty much we normalize all the various blockchains, and there's no need to be aware of it. So the cold vault that we have together with the MPC solution provides both a custody aspect of it, as well as a high frequency type of transaction perspective. So the integration was pretty much painless and done in record time. I mean, literally in a matter of days. And that provided both the cold and as well as the MPC solution.
Great. And later in Anthony's panel, you'll hear we'll see somebody from DTCC as well. So tune in later for Anthony's panel as well. And what I wanted to ask you now is really beyond the technology integration. What caused why was your company interested in connecting to FinP2P? Because obviously it is a new protocol. You have to put some resources in it and connect. So what drove you to connect into it, and what services do you think that you can offer to this market of digital securities through this connection?
Should I start?
Yes, please.
Yeah. So I think that just like for the audience, I know Ami for quite a few years already, right? We go back to the fun days of 2018. I think that what you guys basically built is a pretty powerful team that was able to bring quite a lot of the institutions together, which is sort of non-trivial to create a consortium. So many people that they have basically came together for one cause. And I think what is really powerful about this, not only the technology, but just generally the goal, is that it really came in the right timing, right, for the industry, where I think that the economic around us is changing. Right? We seeing what's going on in the public markets. I can, and also on the private markets. I mean, I can probably share quite a lot given our latest round of funding, but it's not only Fireblocks. I mean, there are a lot of other basically private companies that are approaching valuations where you sort of trying to figure out, okay, what kind of a securities infrastructure is really required for everything that is going on. And without question, the dynamics that you guys created was sort of like the promise of creating this streamline or liquidity, essentially a real liquidity functionality for private market. I think for us, when we choose with who to partner on the long term and who should be a strategic partner, I think that there is a really strong alignment on the mission here. But nevertheless, I think also that partnering with someone who knows what to do and understand the where things have failed in the past and what needs to be done now correctly is important. I think that you guys have the team in place to really do it.
Thank you. Nelson, where do you think that where does Circle see the digital securities market, and what services are you offering for institutions? Obviously, one of the things that is critical for digital securities instant settlement, which is FinP2P, is one of the biggest kind of things that we worked on, was to enable instant settlement of transaction from any blockchain to any blockchain, from any currency to any currency. So, in order to do that, you need digital money. And to get digital money running, you need off-ramp and on-ramps and so on. So tell us a little bit about, why you joined and what sort of services you can offer on the digital securities market.
Yeah, absolutely. I think in terms of kind of where Circle sees ourselves coming into play with the FinP2P protocol, I think at the heart, our missions are one and the same. We want to help update and bring these traditional financial worlds and institutions kind of into this digital atmosphere, into this world of blockchain technology. And we want USDC to kind of be that underlying currency for all of that, because we believe that, it's, as a stable coin, it's one of the most accessible and kind of realistic ways to get these institutions to kind of update and digitize and start working with digital securities and assets. And like you mentioned, part of that model and part of Circle kind of moving these businesses towards that place of the future is allowing us to connect the traditional worlds to the digital worlds. So, I think all of us are in agreement that in the future, we expect that digital securities are probably going to be the only securities. We're not going to be talking about the traditional world and the crypto world. We're just going to be talking about the crypto world, and that's kind of where everything's heading. But for the time being, that's not the world we live in. We live in a world where we do need to connect traditional methods of payments, things like wire transfers, ACH, debit and credit cards, and we need to allow people to have an accessible means into actually getting their hands on USDC and getting their hands on cryptocurrency. That's kind of where Circle comes into play. We offer that on-ramping solution for both cryptocurrencies such as USDC and for traditional payment rails, and the same on the way out. So we can also initiate those payouts as well through crypto and through traditional rails there. So kind of bringing those worlds together for the time being when we need to allow these institutions access to USDC. And then once they have USDC, kind of giving them all of the benefits that entails. So both kind of on-chain and off-chain settlements and transfers between accounts, allowing them access to a variety of different blockchains the USDC is supported on, and as well as what you all had mentioned with the instant settlement and just being able to kind of make payments globally in the blink of an eye, which is not something that you typically see in the traditional finance world today.
Yes, and when we connected USDC, one of the things that we've seen is that a lot of the institutions were talking about CBDCs, and there's going to be a panel about CBDCs later. And that's actually, that's definitely going to come, but it's not here yet. And I think that it's important to have solutions that are available today. We also connected IVNO, which is also a settlement solution for banks, and other options are available as well. But I think that one of the reasons in today's kind of panel is to say to the ecosystem, if you want to come in and connect your stable coins, your digital securities platform, your ledgers, and so on, then you're invited to do so. It's an open protocol, and you can connect as well. Mark, over to you a little bit on the custody side. Where do you see custody connecting to digital securities from your point of view? What are you seeing in the market there? This is one of the things that you're kind of focusing on.
Absolutely. GK targets the banks and the exchanges. Custody is clearly the starting point for digital securities and any aspect that banks need to deal with. We're very much involved on the regulation side. We're focused on very much being compliant with the OCC regulations, the BaFin, FINMA, etc. We have the largest insurance available in the market. So when banks are getting into the digital asset side of things, they need the comfort of having insurance together with the assets they're dealing with. We also have, among other things, some unique relationships with one of the big four, providing balance attestation. So when it comes to auditing and taxes, we're very much there. So a lot of the different variations people need in order to provide, to really get into the digital asset space, the G-Gate solution provides. And as I mentioned before, the custody side of things, as well as the trading and high frequency aspects of it. And keeping in mind, one of the unique aspects of, as opposed to cryptocurrency, which of course we're focused on both tokenization, cryptocurrencies, things like CBDC, but the performance level of crypto assets and traditional assets are quite different. And our performance on our MPC, as an example, handles thousands of messages per second. These are different aspects that a lot of the existing solutions are for cryptos may be sufficient, but when it comes to the digital asset world, the need for more higher performance is really paramount.
Yeah, and Dan, I left you for the end because your integration was unique in this group because you're bringing an entire blockchain effectively, Symbiont, and I wanted to ask you about your decision process in coming into a project like FinP2P because you're a competitor in the market as a blockchain provider. There are other multiple blockchain providers connected to FinP2P. I mean, Ethereum, Corda, Fabric, Stellar, and a few others. And once you're connected to everybody. So what was your decision process? How do you see this strategically as a provider of a blockchain in order to connect to a platform like that?
Yeah, so like in general, so we've been working on launching what would eventually be an enterprise private securities network for over a couple of years now. We've been working with some of the largest financial institutions to make this a reality. This network would offer like multiple services throughout like the full asset life cycle, from company registration to capital formation, secondary trading, and the overall governance of the securities on the network. But one of the challenges when launching a cross-company exercise like this, you have multiple parties that need to come together at exactly the same time. And one of the issues is that the network works if everybody kind of like jumps in at the same time. What we see in FinP2P is essentially an away liquidity solution. One of the advantages of FinP2P is that even if initially in the network liquidity is not plentiful, the party shouldn't be worried about joining because the liquidity can be accessed through FinP2P with investors in other networks, and by the same token, pun intended, you actually can have the investors in the network access assets that are somewhere else. So you get the benefit that you are attracting both the service providers into your network, because they won't feel that they're kind of like stuck in this ecosystem only. But at the same time, you're also attracting investors to your network for the same reason that they know that if they're on this network, because we're connected to this broader ecosystem, they will be able to see those other opportunities. So really, also like in terms of kind of like the strategic point of view, like, okay, we are connecting to other blockchains that are technically competitors. In the future, like the reality is that we're going to have multiple digital asset marketplaces or ecosystems. It's very unlikely that there's going to be one to take it all. A solution like this actually lets the investors and the different issuers and service providers to try the different networks, and maybe somebody starts in another network and then they try ours, and then they if we have a superior product, then they'll stay on us and execute more of their transactions through our network. So I think it's also like in the future there's going to be multiple marketplaces, and this is a good way of positioning ourselves in that future ecosystem that's going to have like multiple venues where digital assets will trade.
Thank you. And I think this is a good segue to talk about, the future of digital securities. Once we have this shared rails that everybody can connect to, and through one connection get access to everything, it's interesting to see what are the kind of digital securities types that you see kind of coming into this market first. So maybe we'll do it the other way around. Then we'll start with you now. What sort of assets are you seeing kind of in your ecosystem that are coming on board, platforms that could trade down the line on FinP2P?
So the areas that we're focusing on are twofold. One, on the private security side, so shares of private companies that would be trading within, within private markets. That may also include companies that would trade on Regulation A or Reg CF type of offerings, so kind of like mini IPOs. But then on the other side, we're looking at large financial institutions. They're very interested more on the fixed income side. So looking at bond issuance, and for example, like the ABS pilot that we did last year alongside Vanguard and Bank of New York and Citi and State Street, those type of like fixed income instruments, I think they have a lot of importance in the ecosystem, because they're also compatible, for example, with the smart collateral management that we're doing, where companies can actually exchange collateral with one another, facilitated by the blockchain, which allows for intraday collateral management. And if we actually then have native fixed income securities on chain, then those securities could actually be the securities that you're moving back and forth through this smart collateral management. So kind of like everything comes together from the fixed income side to the collateral management to the private securities. Everything really becomes like the same, like an ecosystem that builds upon itself. And then actually earlier today, I was talking with Alison, of course, about the idea of having a stable coin also on the network, because you're also going to need like some type of payment rails. So, I mean, something like Circle Coin, for example, would be an ideal candidate to also add to that whole ecosystem of different securities. And now, like, of course, a currency that these large financial institutions can transact on.
Yes, you mentioned collateral, and obviously, once you tokenize a digital asset, you can start seeing things like we're seeing in the DeFi market. Alison, you wanted to add something to that? I can say that.
Oh, yeah, absolutely. I think just what Dan is talking about, I think our goal is to have USDC kind of be this backbone for all of these infrastructures that in these ecosystems that other companies are building. So whether it be kind of larger institutions or smaller startups who just are trying to kind of get their way into the crypto world, USDC can kind of be that kind of easy on-ramp for them, where it's not as risky as sort of investing in Bitcoin. Like, this is kind of just a new type of cryptocurrency for a lot of people. And I think it's really exciting to kind of have that be something where, maybe it's not so crazy for a bank to now invest in something like a cryptocurrency if it's a stable coin.
Yes. And going back to something you said earlier, Michael, about private companies, and you're in that space now, growth companies, raising capital. This is an area that's going through another parallel revolution right now with SPACs, kind of offering a lot of money for private companies to become public. In some cases, I think, it makes a lot of sense for, a company like eToro to go public. Makes total sense, in the valuation. I don't want to make any suggestion, but it seems to me like it makes sense. But we also see a lot of SPACs going down to the bottom, or offering, to go public to companies that are very early, or that are too early to go public. And the private market does not have an alternative that provides liquidity and capital almost at the levels of public, but while allowing the company to stay in control and stay private and so on. So just wondered, what do you think about it, Mike? What are you seeing in the market?
Yeah, I mean, look, I think that I don't have, you know, I don't think I want to really share my opinion about SPACs in general. And of course, like there
Go
are
ahead.
very,
Feel
there are very credible companies like eToro, which is like an amazing company. You know, there are and quite a few others. But you know, some cases that you see over the SPACs, it remind you the dark days of the ICOs, right? For people in this market. So I think that you know, if you sort of really want to build a big company and you don't want to basically deal with, I think, a negative, if it's not just like, you know, something that you want to throw out there and run away with it, right? I think that there is a lot of money right now in private markets, right? And a lot of companies will likely remain private for a long duration of time. And yet, on the flip side, there is a question around sort of valuation optimization. There is a question around earlier investors. I mean, and I'm speaking about it not only on behalf of Fireblocks, by the way, also as a sort of an angel investor in a lot of the most successful cybersecurity companies. I'm saying, like, you know, between me and my peers, that sort of as an angel investor that comes in the seed round and then a company you invested goes through $1 billion valuation. And there are a lot of questions that are being asked around, okay, how do you access liquidity if you already got to that point? And I think that really what we're seeing here with, and I know that, by the way, some of our customers, the banks that are also part of this project and part of the association, they're really looking at the private securities and essentially what FinP2P and those kinds of initiatives can bring them in. You know, they are clearly envy in the dynamic that is being created between among the big, you know, the big investors. You mean you see all the big asset managers jumping into the private market and investing in tech startups. And I think the banks, given the fact that maybe their investment banking is not going to see sort of the benefits of those companies IPOing every Monday, are trying to figure out what's their strategy, right? And how they're basically going to play in this market as well. And I think that really sort of this kind of infrastructure gives them the optionality to join and create something which is unique, that has a real value proposition for all parties involved. You know, and by the way, this is not like, you know, just speaking in my own behalf. This is really sort of representing some of the voices of my customers on the banking side.
Yeah, and I think that, you know, if we are in a position to offer the market a shared network that allows people to trade digital securities, private companies can take, you know, a portion of the cap table, make it digital, and then have that trade among institutional investors in a very, very simple way. So that could be a you know, a solution for many companies in the space that are looking for this type of not just capital that they used to get from VCs, but also kind of more open liquidity, but while staying private.
Yeah, I mean, look, just to add to that, from my standpoint as an operator, it's sort of very clear that this is going down that path. And, you know, over the next couple of years, we won't see, like, you know, lawyers, you know, with a lot of paperwork writing SPAs. It will be digital.
Yes, I agree. And Mark, maybe to wrap up with you,
sure.
Strategically, where do you see digital securities as becoming the key market for you? Because we've seen, the way that I look at it is this: we've seen in the last 6 months, we've seen the market explode in digital. We've seen Bitcoin become institutional, seen stablecoins become huge. We've seen DeFi become successful. We've seen NFTs explode in the market. Well, we know that when the market goes digital, it suddenly goes boom. So the question is, with digital securities, given that now we have a shared network, when do you think that it will start to happen compared to crypto and take more and more of your kind of revenue potential and so on?
Sure. First of all, I won't knock eToro because they're one of our largest customers. So what they're doing is quite good. But there's clearly a place for the private market, as everybody's just mentioned. I mean, what we're seeing is, obviously we're involved with a lot of projects in the security side. NFT you mentioned earlier, whether it be things like fine art or real estate, gold. Of course, these are all areas of interest that banks are working with. Many banks that have 20 to 25 different use cases over blockchain. Obviously, security, as a cybersecurity company, security is a key component of what the banks need here. But you mentioned something earlier with regard to institutional. How does it really explode? And I think I have a background quite a bit in the traditional markets, and I believe that prime brokerage is really the major step that needs to take off with regard to providing credit facilities in order for really for the institutional space to take off in the securities market.
Okay, I think we're kind of the connection is bad. I'm losing you a little bit. So let me wrap up. I think wrap up with a question, because I think we're all. When do you think we're going to start seeing digital securities become significant for financial institutions? Do you think it's 21, 22, 23? What is your kind of horizon on that? Let's do it around the clock. So Ben, we'll start with you.
Sure. I think towards the end of this year and next year, we're going to start seeing more and more adoption on big projects. So in terms of when is this going to go mainstream? I mean, I'm actually on the shorter end of the estimates. I would say that within the next 2 or 3 years. Also, just keep in mind that I'm biased because since 2 years ago, as I mentioned, Vanguard has been rebalancing over $1 trillion worth of assets. So that's, for us, we're already feeling that adoption.
Okay, so one thing I want to say about the FinP2P is that we are now in the process of, we just finished the POC where we integrated all of you, and we are now calling everybody to join and participate as well. The next stage of the pilot that we're doing is going to be to actually look at real assets, real use cases, and that's happening right now in process, and this will take probably 3 or 4 months. So if I had to answer the question, we're talking about probably the summertime as the beginning of this, with the first assets coming online, kind of really in force, and that will be the asset that will probably show the industry the way, and then from there it can grow. Alison, what is your expectation from Circle? When do you see this market kind of picking up steam?
Yeah, I think definitely sooner rather than later. I think next couple of years we're just going to see more and more adoption of people getting into the crypto world, into the blockchain space, wanting to kind of move their investments there. I think there's just a lot of value there that we can add, and I think with things like the FinP2P protocol that are connecting people together, connecting these partners together, and making it even easier to kind of join this new ecosystem. Yeah, I think it's really going to take off quite quickly.
Great. And Michael, you're doing now, I think I heard 7% of the crypto market is running through your platforms, Michael. So when do you expect to start seeing significant numbers, or do you see this as something that's going to become a significant portion of your business in the coming future?
I think 18 months. If I had to give a reasonable estimate, given where those projects are now, I think 18 months will actually be, what I would consider like a real production beginning, right? I mean, there are a lot of things that are happening now, of course, but sort of something that includes more than one participant and not an internal use case or a POC, I think, we start to see it in 18 months. Yeah.
Okay, I'm hoping to see it earlier, at least with some of because
I mean production. This is sort of
production. I think that the first kind of test cases are coming up really soon. The first 10 assets and so on, and then it will start growing from there. And as we know, financial institutions take their time to build adoption and grow the market. Mark, I can see you're back with us. Do you have any closing?
Back with us. So we're definitely seeing the first movers with the tier 1 banks that we're involved with that are handling proof of concepts right now. But I think realistically, 12 to 24 months to really get mass adoption. I think the important piece is it's got to be as easy and secure for the banks to take part in this and customers, so that their experience is going to be from day one similar to what they're doing in the traditional asset space.
Great. So I'll just end the session with a call for everybody who's watching to go to FinP2P, to search FinP2P on Google and go to the specification document and work with us and just join the network and connect. As you've seen, it's quite easy to connect, and there's a lot of value in being part of the ecosystem. And thank you to the panelists. Thank you very much, and handing back over to Adam.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
So a huge congratulations to the entire team for what they've done with their Fin P2P project, especially to Onera, and thank you so much for sharing it with us. Now, our next discussion will be discussing central banking digital currencies, and they've become quite the talk of the town this past year, with obviously China, even the Philippines, and even the private US companies like the MasterCard really getting involved and experimenting with the endless possibilities. So next up, we have a discussion that I'll be leading myself as I chat with Dr. Amari Ross of eToro, Nitin Gawa of IBM Blockchain, Jalak John-Putra of Future Perfect Ventures, and Daniel Eden of R3. And we'll be taking a look at the development of CBDCs, its adoption to date, and also some various use cases being implemented in the sector. So everyone, thank you so much for joining me for this discussion. I'm really thrilled to be on a panel with all of you. And maybe just to start, it would be great to give our audience just a little bit of a run through of maybe some of your prior and also your current work experience in just 1 or 2 sentences that really help position you for this conversation that we're about to have today on CBDCs. And maybe Daniel, would like to start with you.
Sure. Thanks a lot, Jessica, and thanks for having me. So Daniel Eden, I'm a solution architect with R3, and we've been fortunate enough to be involved with the CBDC work for quite some time. So I really picked up probably around with Project Jasper about almost 4 years ago now. Project Jasper with the Bank of Canada evolved to Project Jasper Ubin with the Monetary Authority of Singapore. We've been involved in Inthon Line Rock with the HKMA and the Bank of Thailand. We're currently involved with Riksbank's retail CBDC project, with the SMB, with Project Helvetia, with the BIS, and with the Banque de France with their CBDC project as well. So lots going on, and it's incredibly exciting to be part of this space.
Lots going on, you're absolutely right. And maybe, Jalak, maybe we can turn to you now and just get you to introduce yourself to our viewers today.
Sure, I'm Jalak John-Putra. I'm founder and general partner of Future Perfect Ventures. We're an early stage fund that I founded in 2014 to invest in decentralized technology and obviously blockchain tech, and cryptocurrency make up the bulk of our portfolio. We're early investors in companies like blockchain.com, Blockstream, BitPesa, Abra, The Graph, and Dot. We really operate at the intersection of public and private applications of blockchain technology, and have maintained the thesis that it'll be on par with, or at least 10x of the opportunity that internet provided. And we believe that CBDCs are certainly going to be part of the story.
Well, it's great to have you join us today. And Nitin, maybe you can give our viewers just a little bit of a short summary on yourself now.
Thanks, Jessica, and it's really glad to be here. Really glad to be with the panel. I've been in this space for quite some time. I founded Blockchain Labs, and subsequent to that, I founded Digital Asset Labs. In my current role, I serve as Director of Financial Sciences and Digital Assets. And similar to Daniel's experiences, my team early days, this is the phase 1 of CBDC, delivered about 19 plus different CBDC projects. Project Salt, which was in Brazil, Project Arbor, which is the most recent work we have done in Saudi and UAE. Bank of France, we've had some engagement there as well. Early days, we also were involved with Jasper and Ubin. So I think we have a similar journey in terms of seeing the evolution, both evolving from a wholesale RTGS systems and moving towards more retail-esque systems, and addressing everything in between those two. So really glad to be here and looking forward to exchanging your perspective.
Great to have you too. And finally, Omri, it'd be great for you to introduce yourself as well.
Yeah, so nice to meet you all. I'm Omri Ross. I'm the Chief Blockchain Scientist of the eToro Group. I joined after they acquired my previous company. And as part of the work, we are sort of opening the market for 20 million plus users to actually be able to easily trade a variety of assets. Apart from that, I lead the Financial Transparency Group at the University of Copenhagen, where I work as Associate Professor. where we lead different research around DeFi technology, KYC, and automation of financial contracts and derivatives using DLT and blockchain technology.
So I'm really excited to see where the conversation goes. Thank you all so much for the introduction. Now I'm going to jump in and just ask, and Nathan, I'd like to start with you, discussing the key arguments for implementing a CBDC with DLT and also blockchain technology. What is your outlook on this?
So we started the journey as a resiliency strategy. We've had failures in RTGS systems, and every time there's a failure in payment systems, it sort of it blocks the economy from moving forward. We've seen early days failure, which is the genesis of early days Ubin, is to address and induce resiliency. But there's also an element of moving the payment systems and moving the overall economic agenda from keeping up with digital times. I mean, you have a massive increase in volume of transactions, you have massive increase in digitization of the commerce and the capital markets ecosystem. And the payment systems have sort of resided in that space of dealing with moving the relay of the batch system, as we call them, in the background. So I think the way we are looking at this is keeping up with the times, modernization of payment ecosystems, providing resiliency in the ecosystems, and going towards real-time movement of assets. And that's something which is the genesis, and we'll, I'm sure, discuss more in terms of inclusion of stablecoins in the ecosystem, is to address the need for real-time, payments and real-time sort of fungibility that's needed in the digital asset space. And I think that our projection is that we have now, from a BIS report, about 80% of all central banks in the world looking at digitization, whether DLT or non-DLT, and we see this massive movement forging ahead. One, modernization. Second thing is addressing the real-time payments agenda of many countries.
And what needs to be addressed certainly isn't an easy task at hand. There's enormous amounts of work to be done as well. So thank you so much for your answer there. Now, Daniel, I'd like to turn to you because you have a slightly different outlook to Nathan. And I'd like to ask you some of the economic advantages, but also some of the risks that come with rolling out a CBDC, and especially focused in emerging markets.
Yeah, thanks, Jessica. Well, I guess I'd start by saying the risk is that it can't fail. I mean, it's really that simple. When you're talking about central bank digital currencies, when it's launched, it has to work. And I think that's a very kind of adversarial environment to be doing innovation in. I think the broad theme of innovation is, do it quick, break things and move fast, and that iterative cycle. And I think it's interesting kind of seeing the risk-averse central banking community and by and large, kind of the financial community engage with this type of, agile process and innovation. When I think about kind of the business use cases and the drivers, I guess I would split it up between retail and wholesale. And Nitin did a great job of kind of ticking the box on a lot of the wholesale use cases. The only thing that I would add there is it's not just about instant settlement. It's also about atomic settlement. When you think about the world that we live in today, and I can't not pay attention to the fact that this is part of the Security Token Summit. So why are we having a conversation around central bank digital currencies as part of a Security Token Summit? Well, when you pay for something, especially in the wholesale world, you're paying for something. And today we have systems for custody for digital assets and assets at large, and then we have a completely separate system for payments. And the idea is if we could bring these two things together and create atomic transactions, meaning that one leg of the journey, the delivery of the instrument or the security, only happens if the payment is executed against it. Creating an atomic structure for that would eliminate a lot of risk that's internally kind of clogging up the system today. So outside of that wholesale use case, I would add on the retail side, a lot of economies are seeing a decline of cash. I think that COVID and the unfortunate pandemic is definitely kind of accelerating behavioral change. It's interesting. Some economies are seeing a decline of cash, like in Sweden with Riksbank's work. Some economies are actually seeing cash pick up. I think that the reality that central banks are facing today is that at the end of the day, retail users, people like you and I, don't have digital access to a central bank liability. And that has different implications depending on where you are in the world and whether or not you're included as part of the financial system, which is ultimately the gateway to the digital economy, or not. So, the Bank of Canada, for example, is looking very seriously at a retail CBDC. That's probably more of a reaction to Libra and other large private actors, because at the end of the day, as a Canadian citizen, I have access to digital cash, at large. Whereas, maybe some of the work that we see in more remote kind of emerging economies, it's more about the resiliency of the ecosystem. It's more about the cost of payments. It's more about getting access to unbanked or or poorly banked individuals. Things like that are really driving factors on the retail side.
Fantastically put there, thank you. And Jalak, I'd love to turn to you now, because obviously Daniel's identified the difference between wholesale and also retail there. So maybe if we focus on retail a little bit more, because a lot of people could argue that is probably where one of the main challenges of implementation comes through. When it comes to some of the main challenges, what would be there for retail CBDC in your eyes?
Well, look, I think that we need to pay attention to the privacy implications. I believe that CBDCs at the wholesale level and the retail level have a lot of potential in terms of getting people involved in the financial system, of being able to borrow money at rates that that make sense, that there's not this tax the less money you have. We've seen that happen in the United States as well as around the world. But one thing that we pay very much attention to, and a lot of entrepreneurs that we work with want to make sure that all of this kind of inclusion doesn't come at the cost of privacy. And certainly we're interested in investing in companies where entrepreneurs are very aware of using the latest technology in a way that offers, fungibility, the access that CBDCs can provide. Also understanding that this is a way for central banks to control their money supply and track it in a way that cash really can't do. So I would say that's one of the things that we pay attention to as we look at the rollout of these CBDCs.
Fantastic, thank you. And now, Omri, I'd love to turn my attention to you now, because I think one of the crucial elements here is interoperability, and it seems to be such a pressing point of this discussion. So maybe just to start, how would you define this? Because every answer is potentially different, especially when it comes to CBDCs.
I will, but if you give me a second, I want to comment on Jalek's comments before, because I really got connected to what you said in terms of privacy. I want to say there are a lot of very interesting sharing key techniques. Some of them are actually built by many of the people around here that can actually offer you a lot of sort of the benefits of real-time seeing transaction by central bank, by at the same time agreeing on a group of signers that can together sort of recap the KYC or whatever, or partial KYC. And in many elements, also if we think about today's system, a lot of officials have access to a lot of private information of people when they actually check them. And we can use a lot of this also to protect that. So I think you made an amazingly nice point, an important one. But I think also the technology, if executed right, as well as Daniel mentioned before, can actually solve a lot of really nice stuff. Back for your question, sorry, Jessica. So interoperability is a major thing. And we see it also in sort of much in other markets. I think Jalek mentioned before DOT and other projects that are actually really focused on these areas. And I think these are very interesting, because you know how hard it is to coordinate things, right? Politicians exist because it's almost impossible to coordinate among things. And I think in these areas, we want to see much more standardization of how you will actually execute this interoperability specifically from central banks. And we can also be really interested to see how it will actually work. I mean, one of the key elements that was mentioned by Daniel is the implication of doing atomic swaps, or which practically mean that whenever you are moving some asset, possibly between two different central banks or between two different providers, they can actually happen at the same time and getting all of the guarantees. These are one of the technological challenges that we see in many blockchain-related projects. And one of the areas where I'm sure that there will be very different of opinions around the panels is where that should be. Now, I'm obviously a huge supporter in transparency and huge supporter in giving more roles for individuals. And I think a lot of the financial sort of services has been for a while, let's call it putting bricks in the way of retail. And I think, these things have to happen extremely carefully, but I think we should also be very careful when we create these bricks. And I think that if we use a lot of really good tools of using right way of using cryptography and hiding issues around transparency, again, going back to what Jalek said, I think we can see a lot of it in the public blockchains. I think there is, of course, ways to connect public and more private DLTs, but I think for the sake of transparency, I would think that I would go on very hardcore cryptography, a lot of challenges in knocking them out, but I would definitely support the public sort of elements. Maybe roll it back gradually to check out that these things are really important, But I really see the future is adding transparency and open a bunch of interoperability possibilities within the public space.
And I'd love to get someone's thoughts there on that coordination from Omri. And I can see, Nitin, you're desperate to answer, so please go ahead.
So I've spent, to Omri's point, I classify interoperability into 3 different buckets. The first bucket is the technical currency, or I would say technical debt, which is the system. We have a system that works. We have, every central bank has an RTGS system. They have a retail distribution system. And these are systems that have been evolving over the past 50 plus years. And that technical debt is still, that needs to be addressed. And then you have things like Omri's talking about, which is the interoperability between DLT systems, which is protocol level, consensus level. So this is like technical things that we need to address in terms of how do you have 2 different systems that can talk to each other. The second bucket that I would like to address is financial interoperability. And this is something which we learned in Project Arbor, is when you look into cross-border payments, when you look into atomicity of using currency as a fungible asset between different asset classes, whether it's digital securities or bonds, and all the conversation that Onera had previously in FinP2P, a network, you still need a fungible unit. And when you bring that fungible unit in, you have the notion of FX and exchanges and desks that deal with things like arbitrage, and how do we sort of move this fungible unit between different systems. So that's the financial interoperability, which is taking this cash or digital fiat into various systems in a seamless way. And the third bucket, which has taken majority of my time, is around interoperability between existing systems. These are treasury management systems, cash management systems, financial institutions who are designing the systems based on the traditional way of doing batch processing and reconciling these batch systems, and the various systems that are connected by relay of batches, which allows us to move value across the systems. And now you have this digital fiat that shows up as a tokenized asset, which doesn't adhere or conform to any of the old way of doing business, but they still have to coexist. And so you have various business layers, and Circle has done an amazing job, I think, in providing a business layer on top and saying, let's let the system coexist till we are sort of ramping up the system. So looking at these 3 buckets, I think the overall system integration, and I'd love to hear Daniel's thought because we're in the same boat from enterprise perspective as well, is a Herculean task, not just from investment, but the army of skills and army of folks who are needed to solve this problem. And FinP2P has done that for digital securities, but we need to address that at a banking back office system which still exists and runs. I'll pause at that and love to get opinions from the folks here.
Mm-hmm.
Yeah,
Daniel,
I can come in on a little bit on the interoperability. Nitin, I think I have a similar kind of taxonomy to you. I also kind of have 3 categories, and I won't go into it, but the way I would look at it is there's a notion of horizontal interoperability and vertical interoperability. Some of the things that you're mentioning, so if I start from vertical interoperability, this solution for a CBDC needs to live within a vertical stack. It needs to connect downwards underneath the stack to core banking systems, payment systems, treasury systems, and so on and so forth. And it needs to connect upwards into merchants and retail wallets and so on and so forth. On the horizontal level, Omri, the things that you're talking about with interoperability are very much horizontal, the ability for 2 different protocols to talk to each other. I think about that kind of like taking a file from a Mac and loading it up on a PC, something that, we need to remind ourselves that wasn't possible when those 2 different disk formatting things were first available. Now it is. And then a layer on top of that, that's really about the business processes. And that's more akin to running Zoom on a Mac and a PC. So horizontal interoperability can be achieved at a business kind of application level. It can also be achieved at a platform level. And then you have the vertical that kind of cuts across both of those. And I think that every one of those is, to Nitin's point, almost every one of those is a Herculean effort. So there's a lot of work for us to do. Maybe another thing quickly to mention that Omri kind of teased, and I think that may be something that we have a little bit of a different perspective on. When you think about kind of public ledgers versus private ledgers, I would argue that it's not as binary as it seems, and there's different degrees of public and there's different degrees of private. And I think the loudest people in the room always live at those 2 extremes, the idealistic public people and the idealistic private people. And I want to kind of present that as a trade-off. And it's interesting, Omri, that you said in the same sentiment, you said, I believe in public ledgers and I believe in strong cryptography. And I think that tying those 2 things together are really interesting because when you live in a public space, as you go along the spectrum to something that's more public and lives in a more adversarial context, you need to pay a higher premium for cryptographic methods to protect you. As you move across, you get to a place that's more regulated and more private, and you pay less of a cost from a cryptographic kind of hardening standpoint. So just to kind of break the mold on the public-private binary debate, I think that the more nuanced approach, I think we should kind of mature ourselves to that more nuanced approach where it's not black or white.
But I would like to comment for a second, because I think it's really interesting. And I think that the way I foresee it, at least for me, is I look at it because you mentioned verticals, and I got the vertical, the horizon one. But I wanted to look at everything as transaction, because everything financial eventually is a transaction. You transfer something to someone in some sense. And I think if you put that transaction information, right, in a way that is publicly available but encrypted enough, which means people can, at the right time, the right way, the right keys, undone that, but at the same time, stream this information live. I think it's super powerful because it gives you transparency to the next level on each transaction. You know, again, you need to be very careful on the encryption level, but I think that's put also the full financial system in a much greater transparency that we've seen today. And I think the potential of it is very strong. Sorry, I'll let you just continue.
Hard to argue with that, absolutely.
Yes.
And Jalak, I'd like to turn to you now and just ask, because we're talking about these kind of coordinations and you guys have talked about the different funnels and streams. When we look at these among different countries, but also stablecoins and CBDCs for kind of cross-border implementations, what are some of the coordinations that you think we need to see there?
Yeah, I mean, just listening to this conversation, it's so in the weeds, and you know, taking a step back in terms of what we're really talking about here, which is, you know, almost kind of, I wouldn't say rebuilding the financial system, but rewiring it in a way with you know, monetary policy and money is like one of the strongest tools of government. So I really look at, you know, CBDCs with, you know, government issued CBDCs as a whole separate category, and like middleware and the retail applications. And if you look at retail applications, those are being built all over the world right now, already kind of issued. They may not tie into that back end of a CBDC yet. But I think they can be built in parallel. I think it's going to be a long time before we see real interconnectivity and interoperability of CBDCs, just because of what a political tool, you know, money is. We'll start to see regional, and I think this is why we saw so much interest, and we're seeing interest from China, right? And it's a geopolitical tool. Monetary policy is a geopolitical tool. So to the extent they can bypass the dollar, which has been the kind of de facto world currency for so long, you know, that is attractive to build these networks. So I believe that governments are going to have more and more competition from you know, other cryptos. Whether it's a company issued cryptos such as DM, and I would say that DM has really kickstarted the conversation, the Facebook initiative, and things that are completely decentralized, like Bitcoin, and so it'll, like, what I'm really watching is how that interplay is going to happen over the next few years. But I don't, you know, I think it's the governments that recognize that. Are going to be the most successful with their CBDC efforts.
Really interesting point there. Nathan, it looks like you have something that you'd like to add on top.
What Jalak mentioned. So if you look at genesis of stablecoin, and I actually built a payment network for 2 years called IBM Worldwide, where we're trying to sort of solve the remittance problem, similar to what many of our cohorts were doing in that space. And we introduced stablecoin. And my selling point to large banks is, why would they want to issue stablecoin, was you're future-proofing your infrastructure. If you have a rails to move tokenized fiat in any form, and it happens to be stablecoin, tomorrow it happens to be CBDC, you have the infrastructure that allows you to move an instrument of sorts. And so stablecoins today are centralized IOU models. But if you go to take a step back and say, why did we have stablecoins in the system to begin with? And they provided fungibility. They provided sort of coexistence model to somehow provide a valuation or universal valuation mechanism to this massive emerging crypto, you know, ecosystem that's evolving. And I believe that this will continue, because the fact that attaching stablecoin to a sovereign currency, you're still, no matter how decentralized the infrastructure is, but the model there is still centralized, because you're still tied to a USD or Euro or Yen or any of the basket currencies of sorts. So to me, whether it's stablecoin or CBDC, it's still a coexistence play until this vision of what we all have been talking about becomes a completely decentralized ecosystem where many of these crypto assets become their own fungible units. And that'll be an interesting evolution to see. But everything now that we're doing with CBDC, stablecoins, tokenized fiat, these are all interoperability play for us to coexist and move on and off the banking ramp, which allows us to be able to move liquidity back and forth, I think. But I'll pause at that and get Omri and Daniel speaking as well.
I can comment and say that one of the really interesting things will be the involvement of the concept of credit risk as a result of different sort of issuers of different assets. I mean, obviously, some of them are central banks, but some of them can be just any issuers of stablecoin. And I think that some of the issue of the credit is integrated into the asset itself. For example, if there is a centralized issuer, like in most of these cases, some of it can actually be even in the blockchain protocol, which means we could, if we think about one of the nice things about blockchain is the way they work with reconciliation of ownership of assets. But we could also introduce credit systems into the protocol itself to actually imitate the way payment services work today, which means if I make a $5 coffee purchase, yeah, I'm living in Denmark, it's pretty expensive to buy coffee here, then I would still be in a situation that, the credit risk on that transaction is not the same for purchasing a house, right? And in the world of blockchain today, most of these differences actually do not exist. So I think it's both on the protocol layer will be interesting to see what happened there, as well as on the issuer layer.
Fantastic. Well, thank you. That is all that we have time, but I would have loved to keep this conversation going on for so much longer. It seems there's so much more to be had, but thank you all, Jalak, Daniel, Omri, and Nathan for your insights there. And I really hope that we get to carry on this conversation at some point in the very near future. Thank you.
Thank you.
Thanks, guys.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today. Making the exclusive inclusive.
Well, a huge thank you to all of our previous panelists. There are some great discussions that have been had so far. Now, our next panel of guests will really introduce why the financial institutions have begun entering the world of digital security. So please welcome once again Anthony Woolley, who's coming back from Monero, Daunton Romney from the London Stock Exchange, Artem Schneider from Australia, Lawrence Wintermeyer from Global Digital Finance, and Emmanuel Adu from Credit Suisse.
Okay, thanks, Jessica. And yes, what a great panel we have for you now. So we've seen, it's been a great session so far. We've seen how institutions are getting engaged with digital securities. We've seen providers demonstrating FinP2P that's been announced today with the release of the open source specifications for the FinP2P API. So now let's actually talk to some institutions. So with me today, I have Emmanuel from Credit Suisse, Corinne from Australia, Artem from DTCC, Dotun from the London Stock Exchange Group, and Lawrence from Global Digital Finance. That was a very quick introduction because I'm going to get each of them tell you a little bit more about themselves. So Emmanuel, we kick off with you.
Hi, everyone. Thanks, Anthony, for the invite. This is a superb conference, and so far I've been listening into a few of the sessions, really interesting. My name is Emmanuel Adu, as Anthony said. I work at Credit Suisse, where I've been for 24 years. I'm a recovering technologist, moving into the digital asset, digital finance space. I think I was pretty early into it, discovered it in, 2014, straight into banks. Formed something called the Blockchain Center of Competency at Credit Suisse. In 2015, did a couple of notable financings for some pretty large now digital companies. And then in 2019, we decided at Credit Suisse to start a division called digital asset markets, and I head that globally for the firm.
Very good. Thank you, Emmanuel. Kareem?
Yeah, thanks for having me. And Emmanuel, I didn't know you could ever recover from being a technologist, so there's good news ahead. I'm president of AST Private Company Solutions. So we created a blockchain-enabled cap table and employee stock plan tracking system. Just my background, I was a partner at PwC for a number of years. I designed and implemented employee plans, executive incentive plans, and ended up running a number of companies, being a CEO of some startups, and then I ended up at NASDAQ Private Market and ran the market for a while. I'm certainly happy to talk about what was trying to be done there, but I think it was early days when some of the larger exchanges were really looking at, how do we get into the private market space when the public markets are dwindling? So that's my background.
Fantastic. Artem, DTCC.
Sure. Thanks, Anthony. Hi, everyone. My name is Artem Korniuk, and I represent DTCC's Business Innovation Group. So in that capacity, I lead innovation, strategy, and design for the entire org. Yeah, we are responsible for defining and executing on the organizational digital asset strategy. We drive research, experimentation around emerging tech, blockchain, of course, being case in point. We do sit across the entire enterprise, supporting all DTCC businesses in the identification, evaluation, and execution of new business opportunities and use cases. And that includes greenfield opportunities and ones that allow us to enhance DTCC's existing capabilities. So we're not talking about doing POCs for POC's sake. We're talking about business-driven value first and foremost. In its simplest form, my job is to take concepts from idea generation through practical experimentation to market validation and ultimately towards a business case. Now, two of the more recent projects that came out of this group and have made it into the public sphere are Project Ion and Project Whitney. Both projects are focused on digital asset securities, with Project Ion focused around the digitization of the clearance and settlement process for public markets, and Project Whitney is really focused on the digitization of private markets. I am very excited to share the stage with this group, and I'm eager to learn from my fellow colleagues and panelists. Now, I am not a technologist, but I desperately wish I was one. So we'll see how it plays out.
Thanks, Artem. And in Abby's session earlier, you'll have seen a great demo of the integration of Project Whitney into FinP2P, which is evidence of the agility that you can get to make these things happen, which is fantastic. Dotton, London Stock Exchange Group, over here with me in the UK.
Thanks, Anthony, and yeah, pleasure to be here in the conference today. So I co-steer the LSEG's emerging technology and innovation function. So we sit at the group level and really cover all of our group businesses, including obviously the newly acquired Refinitiv, and we're really looking at all of the opportunities that we may see around how we can drive the adoption of new technologies like DLT and blockchain across our businesses, and whether that be to serve our internal businesses around building the operational efficiencies through digital transformation, or whether that be looking externally in partnership with clients and institutions across the space to drive new products and services leveraging these new technologies. So that's the focus. I'm also a technologist, background as a software engineer for many years. Spent the previous 3.5 years running technology across 2 different startups, both blockchain centric. So yes.
That's great, Dotton. Very good. And last but not least, my good friend Lawrence.
Well, thank you, Anthony, and again, thank you for the invite. What a fantastic event. I'm Lawrence Wintermeyer. I'm the executive co-chair of Global Digital Finance. We're a not-for-profit global members association dedicated to technical standards, conduct standards, and open proofs of concepts and innovation pilots, where it really is a stewardship platform. We sit between the global crypto and institutional industry on one side and regulators on the other. We do a lot of regulatory outreach with a quarterly reg-only forum of more than 30 jurisdictional regulators and agencies who do purviews of our codes and standards. And really, I think our job isn't just to promote and accelerate digital and crypto assets on many particularly objectives, but greater financial inclusion and a better financial system for everyone. But the current stage of the ecosystem, I think, sees us dealing more on outreach with all of the information asymmetry in this space between policymakers, regulators, and the industry. I have to admit, long before GameStop and some of these trendy things came along, I was a coding technologist and a very keen trader. I've spent half of my career in top-tier management consultancy in the global financial services sector, and the other half running my own assets. I got involved in not-for-profit work where I met Anthony when I was running Innovate Finance, the ecosystem, fintech ecosystem builder in the UK. So real pleasure to be here, and thank you for the invite.
Thanks, Lawrence. So there you go. So you've got a panel with two of the largest financial markets infrastructure providers, a leading investment bank, right, Emmanuel, and a leader in private companies digitization space. I think, and Emmanuel, I was going to say, it might sound like you're sitting in London, right? But you actually work out of New York.
I've been in New York for 17 years, yeah.
17 years in New York, so still haven't dropped the accent. So maybe I'll turn to you first. I don't know if I can call you the grandfather here or not. But you've been working in digital assets at Credit Suisse, what, 6 years? I mean, 6 years is a lifetime from an institutional blockchain point of view, maybe. So what are the major developments you've seen in the institutional space during that time, and how close do you think we are really getting to institutions embracing digital securities?
Yeah, you know, I noticed that you picked the word digital securities, and this whole summit's about security tokens. But I think to answer that question appropriately, we kind of have to tell the story of the journey that we've all in big institutions have been through. And I think, you know, I ironically got to this space in 2014. And the ironic part is because it was actually a friend from UBS that had emailed me and said, hey, have you heard of this thing called blockchain? Of course, I thought he'd mistyped big data because that was the rage in 2014, and I thought he was completely, you know, off the rails. When I read what he was talking about, I realized immediately that it was going to change everything. But I think, like most people in institutional big finance, we all came to this either through Bitcoin or through the early Ethereum white paper, and it was all about cryptocurrencies back then. And I think the irrational fear is probably likened to, is this going to disrupt and take us down as big banks? And so we did our research and worked out that actually this thing that we've been moaning for the last, I don't know how many years, called regulation, forms of walled garden, and it's not so easy, right? So, and the fintech, the Silicon Valley fintech soon realized that they had to adjust a little bit in their plans. So most of us got to this from that space. In 2015, we invested in one of the largest, now the enterprise blockchain platform. And that's when kind of the penny dropped for most other institutions and everyone was racing. It was almost like a fear of missing out to find out what this blockchain was all about. And the narrative became, for big banks, it became, we're investigating DLT, but we're not sure about this Bitcoin thing, this crypto thing. And that was the narrative for a long period of time. And we didn't waste time at all, actually. We really put our heads down and we focused and yielded some really good projects. I would say Paxos is an example, HQLX is an example of live projects looking at the public space. But ultimately, I think many of us got to the station where we figured trying to use this technology to disrupt the existing public market stack at this point in the curve is probably a fool's errand. And we start looking at other asset classes to utilize blockchain and DLT. Not saying that DLT is inappropriate for public markets, but maybe there's an easier place to start. And so just like Onera and others have realized, private markets, both equity and debt, being several times, depending on what you measure, 4 to 6 times bigger than the public markets, is actually a really interesting place to start. Less technology legacy risk, less integration risk, still regulations there to pay attention to, but certainly less, hurdles and obstacles. And so I think that to answer your question, I think that over the last, 12 months, many big institutional investors have discovered crypto assets, cryptocurrencies, Bitcoin in particular, Ethereum too. And whilst they're discovering this asset class, they're learning a couple of things. They're learning about what I call digital fluency. They're learning what it means to trade 365, 24/7, which we don't do today. They're learning how to settle instantaneously, which none of our asset classes do today. They're learning what it means to have a new level of cyber threat and cyber risk. And all of these learnings, if you will, are going to be directly applied to what will be the next incarnation, I believe, which is the tokenization of securities. I think we're right on the cusp of it. I know some of our biggest clients are asking, what's coming down the road, and it's a truly interesting time to be in this space.
Yeah, I think we would all agree, Emmanuel. And I think those banking executives have also learned how to use Zoom, right? Which comes back to something I said at the beginning of the summit about cultural change, and actually just large institutions getting their head around the fact that they can do all of this online. Totally agree with your comments about the public markets. I spent all my career building electronic trading systems in the public markets, so it's I'm guilty of contributing to the big pile of spaghetti they now have.
You know, the reality is that the reality is on the point is that we spent, I think, looked at last year, $470 billion as a top 20 banks on compliance tools and everything else in support of the public markets, ignoring the friction and everything else that happens in a market that's four to six times bigger. And I actually think that when we implement DLT in the private markets, it will be frictionless and it will move faster than the public markets, which will really dovetail into Lawrence's comment about access, equity, etc., which we'll get to, I'm sure, later in the discussion.
Definitely. And we've got a bit of white noise. I think, Emmanuel Artem, just try muting and then unmute when you speak. Maybe it will clear the white noise as well. Yeah, totally agree. And the punchline I was going to say is I spent my career in the public markets, and that's why I'm focused on the private markets now, because I know that it is an environment that doesn't have the technology. It is offline. So it's more of a blank sheet of paper, right? And I'll let somebody else clean up the stuff I was building 20 years ago other large investment banks. Okay, so great. Let's go over to Corinne. So you're in a position with Estrella where you're basically taking private companies' cap tables, registries, and putting them on a blockchain. So what value does that add rather than just holding them in a database for your clients?
Yeah, so just to be clear, it's not a public blockchain. It's not like you're a private company and your cap table and ownership data is now out for the world to see. So when we've developed this product in the last 18 months, so we were able to use not only blockchain technology, but also artificial intelligence to really build something that allows a company that's privately held to manage their ownership data. And what was so important versus a database type of software is that with blockchain, as you know, in a private company, you've got shares that have different classes, that have different rights and privileges, and it's really important not only to keep track of when you bought and sold the stock and what you paid for it and who you sold it to, but it's also really important to ensure that you keep track of which types of shares you were buying and selling. Was it Series A, Series B? Is it preferred? Is it common? Is it soon to be, a new class of shares? So all of that needs to be tracked, and that's what we do in our system using blockchain. So you'll be able to see what we call the genealogy of a share. So at exit in 5 or 8 or 10 years, when it's time to do the IPO or it's time to do the sale, and a shareholder goes running in and says, I own 1 million shares, and you look at your records and you say, actually, you only own 250,000 shares, you can very quickly and easily, without forensic accountants and attorneys, explain to somebody how they got from 1 million shares to 250,000 shares and who did they sell it to, and you could see as the owner of the company what happened. That's really important as we enter the digital world, and we built this knowing that liquidity would become so important for these private companies pre-IPO. And so we, in interacting with these markets and like interacting with Onera, are able to send you true ownership, who actually owns the shares, and also all the things you need to know about those shares so that when they're bought and sold, the buyer understands exactly what they're buying. They're buying a Series B preferred share versus they're buying common shares. And that's really important in this market. So we believe by having it built in that way and not a database which overwrites records and can lose history, that this is going to be really important as the digital liquidity markets are built.
Perfect. And I guess Australia connecting to FinP2P is an example of how the FinP2P ecosystem enables different organizations to do what they do best, right?
Exactly.
You know, whether it's London Stock Exchange or Credit Suisse or Australia providing those management services. So yeah, it's very powerful, and that's what enables us to move fast, right, as well. Great. Okay. Artem, DTCC. So we've known you guys for a little while, working with Project Whitney. You announced last year. You've been very proactive in this space around digital securities and exploring what can be done. You mentioned Project Iron as well. I think Whitney's focused on the private companies side. Maybe you can just tell us a bit more generally, you know, what's going on, what your roadmap looks like, and how you think about this and getting this stuff to production.
Yeah, absolutely. And let me just contextualize it a little bit. Some of you might have seen the demo earlier in the program, but you've just heard from my fellow panelists around some of the properties and characteristics of private markets that make them such an appealing focus area for digitization. Now, so how does every pitch start? Space A is very fragmented and extremely paper-based. Introducing Solution Z, right? Whatever the context typically is. In the case of private markets, it truly is manual and paper-based today. And yes, it's extremely fragmented, largely due to a lack of standards. And you'll hear me talk about this in just a second over and over again, because it is that important. But Project Whitney is ultimately our Solution Z, if you will, for the space. Yeah, to contextualize it as a project, it's essentially DTCC's exploration of the private markets more broadly. Through this project, we designed and developed a digital market infrastructure and a network that we believe can drive significant standardization of both reference data and workflows in the private markets. Now, acting as an abstraction and standardization layer between issuers and their agents, as well as investors and their agents, the Whitney solution is really focused on establishing a standardized way of issuing a private market security. I warned you I was going to repeat standardization. It's supposed to offer a common and central stock record for the management of that security across its life cycle in a consistent manner. And the third, one of the more important components, is the dynamic transaction consent engine, which can facilitate the automation of compliance and suitability rules that we believe is foundational in opening up secondary market liquidity for this space. Now, in many respects, DTCC is attempting to do for the private markets what we've been able to do for the public markets, which is solve for standardization, as we believe that it will significantly lessen the operational burden, reduce risk, and reduce the cost to transact. And the rationale that you've heard Emmanuel outline makes it ideal for that scenario, right? There's a tremendous amount of standardization in the private markets that exists today, and the overall cost to a trade is significantly lower given the volumes of where they are. Similar aspects need to be introduced to the private markets, and that's kind of what Whitney is looking to tackle. Now, in our model, and you might have seen this come out in the demo, but in our model, a cap table provider or a transfer agent on behalf of their issuer can connect to the Whitney solution and have a common and standard way of managing the book on behalf of the issuer, agnostic of the underlying blockchain protocol, be it public Ethereum or permissioned Corda or Fabric or FinP2P for that matter. Now, any secondary marketplace, on the other hand, thinking of the other side of this, right, can also leverage our transaction consent engine to validate that that security is unrestricted and is eligible for secondary market activity in real time, all without the need to perform its manual validation and onboarding of the investor and the issuer, right? And those can vary sometimes by different transfer agents or cap table providers. So again, it's this abstraction layer that looks to standardize the representation of a digital security and automate the compliance and suitability rules around it across issuers and their agents, investors and their agents. Now, the last point that I wanted to really layer in there is, you know, in Project Whitney, DTCC has been very focused on driving client value first and foremost, and ensuring that the technology piece is more of an enabler. So from hours and hours of client discussions that we've had with a variety of market participants, we've witnessed that different clients are on different points of the tech maturity scale. And not everyone is yet ready to directly interact with the blockchain, let alone a public one. So DTCC doesn't believe that this should be a barrier to unlocking some of the efficiencies that exist in the private market space and just need to be tapped into. This is one of the primary reasons why we intentionally designed Whitney as an off-chain solution. Oh no, can't say off-chain on a digital security conference, but there's rationale and merit behind that. It offers our clients a more traditional interface with a front end and APIs, but also offers an abstraction from the underlying blockchain with the option of integrating into a variety of downstream protocols without forcing the clients to adopt an operator node. To use Emmanuel's phrase, we want people to benefit from the standardization of private markets, even if they're in the earlier stage of their digital fluency. I'm going to steal that and not give you credit, Emmanuel. But to the last point of the question, where are we now? So like I said, we've designed and developed a robust prototype. We've tailored it for Reg D exempt securities to start because it happens to be kind of the largest segment, but designed the system in a very dynamic way that can support a variety of exempt securities and a variety of different customized workflows. Now, we've also engaged the industry in a pretty meaningful way to validate these concepts and are now assessing the demand overall and are considering offering an off-chain digital securities management platform to the private markets. So if you are a private market participant and would like to learn more, let me know.
That's perfect. And I think in all of this, what you're saying, there's a message in there as well that we don't want people to have to adapt to this new technology. The new technology should be an enabler for us to all do what we do best. So you don't want necessarily, why should have investors need to know what a wallet is or a private key or worry about any of those things? And in the same way, why would an institution need to think, which DLT technology do I need to, bet the horse on? Where's it going next, etc. I think, it's having something that is an extraction layer that everybody can get behind and enable everybody to do what they do best, right? So you got
Anthony. It's huge. I'll just add one more point, and I'm kind of a broken record when it comes to this. When at a mainstream level, at an end user level, when the technology fully arrives, no one should even care. Just like you no longer care what the processor is on your iPhone. It's just abstracted from you. That is a sign of true maturity and true adoption of technology. And at some point, we'll need to get to that, and we will.
Yeah, I think in the UK, we woke up one day and found we had a cashless society, and it was not something anybody shouted about. But nowadays, you just don't carry money around, right? You pay contactless in shops, and you transfer money, and it's instant. And it needs to be like that, really. You don't really have to worry about it coming. Okay, so we've got DTCC in the US. Across the pond here at London Stock Exchange Group with Dotun. So Dotun, you're with London Stock Exchange, you see the whole ecosystem, right? You're connected to the whole ecosystem, and you understand the full complexity of regulation, both for yourself as exchanges and more broadly for the regulated financial services industry. So where do you feel regulations got to? Are we at a point we can start to take stuff to production from an institutional point of view?
Absolutely. I think, and we've explored this for quite some time now, specifically with some of the work that we've done in the FCA's Innovation Sandbox last year, and then prior to that, in previous sandboxes in conjunction with our partner Navora. But I think what's interesting is when you look at the regulatory landscape, there was a lot of uncertainty for quite a long time. And I think where maybe there may have been more opportunity, specifically in the context of digital securities, was certainly in the primary markets and in the private market space. And so clearly around issuance and getting custodial licenses and dealing and arranging licenses to be able to offer services to market participants in the context of digital securities, then the space is pretty much wide open. But obviously, as you move further along the life cycle of the assets, it's a lot more challenging. But what we're seeing now is definitely a lot more regulatory certainty. New regimes are coming into fruition when we look at the EU Commission's proposals around the pilot regime for DLT-based market infrastructure, when we look at the MICA regime, which is the markets in crypto assets proposal too, and some of the new consultations that have been put out around stable coins and potentially bringing in a full-scale regulatory regime to tackle those too. It's very, very interesting, and I think what we will see over the next 12 to 18 months is real maturity in some of these regimes that will provide the market with the certainty it needs to be able to start to grow businesses in these areas. Another which was interesting was fairly recently the OCC put out the announcement around permissions for US banks to be able to essentially conduct payments with stablecoins. So I think these are some of the advances that we're seeing in this space, and it will come in baby steps, but over time, each one provides certainty and allows service providers to start to bring new businesses and new innovations in the space into fruition.
Yeah, thank you. And looking across at the US, I mean, the payments infrastructure in the US, maybe stable coins provide a way to incrementally refresh what is a very complex national infrastructure, right? That's maybe easier to move faster in countries such as the UK. So certainly with the OCC's statement, if you can start to see things like stablecoin payment for settlement in the US, it will give us a roadmap towards CBDCs and other mechanisms, right? So Lawrence, you're in a really unique position, right? Because you're looking across this whole ecosystem. You're working with regulators, institutions, the whole crypto community, etc. How have you seen that over the last couple of years? Have you seen the posture of institutions change and regulators as well? And where has that got us to now?
Well, it's certainly, we've arrived in a very exciting space, and I think it's difficult for many people, other than maybe the informed viewers or this most excellent panel, to see how important private market securities digitization is, with Bitcoin at 60K, DeFi popping up, and an NFT craze, which seems to have popped out of nowhere at the beginning of this year. And so, Anthony, I think, you and I have been on platforms and sharing this topic for a couple of years. And, quite often the tech community and folks who are trying to tokenize securities have been saying, we need regulators to shift. Well, securities are actually regulated in most countries. We've got that and we've worked that out. And then, as this panel has well pointed out, and something I think institutions have focused on, we've got the benefit of the deep investment in understanding blockchain and DLT technologies. And again, Anthony, you and I met back in 2015 at Infinite Blockchain Lab, just as R3 was announcing. So they're very well invested in, I think, understanding how this technology works. And so I think we're at an aha moment. And I think Emmanuel described it. Well, guess what? Public markets listings have been declining for 30 years. Everybody can see the growth of private equity, particularly private equity as an employer in the US. If you want to invest particularly in new cool stuff in private markets like fintech, medtech, clean tech, what are you going to go and invest in a Sequoia fund? Can you access that? Are you going to find a crowdfunding platform that has the asset or the segment or the focus area you have? So I think that this is the most underrated and quiet area of development in the digital assets and infrastructure, community, mainly in that, the noise in the main show seems to still be on Bitcoin, and rightfully so. Institutions are also interested in that it is the best performing and yielding asset as a store of value over the last decade, with annual compound returns of about 280%. I think 2 years out of the last decade were negative drawdown years. So, a lot of people are saying, gee, why don't we have an allocation to that? But the private securities digitization space, I think, has just quietly built its momentum, and it's really breaking out this year. And I think this panel has done a great job of putting together almost the alchemy of the recipe why. We've got securities regulation. We've got standards broadly around, custody, register, share transfer, etc. We're just adopting them, and the use case, I think, for digital ledger technology for private markets is fantastic for the reasons that all of you know. And I love, Anthony, that you're on a personal mission of reform, letting other people clean up what you've created in the public markets for the last 20 years. That's a lovely story. But this is a hugely important space to watch in terms of new capital, mopping up all of the capital that's in this space right now, but new capital creation. I think particularly from my perspective, price discovery, everyone talks about secondary liquidity. So yes, I think eventually that is right. But equally, I think we've got an opportunity with ATS and MTF platforms to get a new level of even voluntary disclosure around things like sustainable. So, there's an opportunity to probably capture a lot of things as this space is developing. And it's hugely exciting. It's hugely exciting for GDF to host Onera and your working group on our independent platform. And it's great to be on a panel like this with a number of GDF members who are engaged in this. So I just think it's an exciting time.
Yeah, thanks, Lawrence. And I think you mentioned 2015, which suddenly seems a long time ago. But I think that was when I first met Emmanuel, and that was at the time. I think I've held this thesis for a little while. You had this sort of bisection. You had the world of crypto, and then the financial services industry went, wow, that's an interesting technology. Let's see if we can adapt that to our world. And these two worlds sort of diverged, right? And you talk to people and they either say, we're in the crypto world and, it's nothing to do with banks. And the banks were going, can we adapt this technology? And those two paths diverged, right? And I think that I've long held the view that those paths will then start to converge back together again. And it really feels, as you said, everything the last 18 months, with Bitcoin, DeFi, NFT, digital securities, that we're starting to see those two worlds converging back together again in the context where everybody should be able to be part of that ecosystem, but it's an ecosystem of finance, right? So you need to protect investors. You need to worry about money laundering. You need to worry about these things, but that doesn't mean it's only a space for institutions, right? It can be for anybody who understands how to deliver financial services. But Emmanuel, this thesis of mine that we had this high road, low road thing, and then it's all converging back again, would you buy that?
Yeah, totally. I think that the road to this, I'm going to say something slightly controversial against my better judgment, but it feels like when Napster came out, that was the illegal predecessor to Spotify. And it feels like ICOs were the illegal predecessor to STOs and security tokens. And so to me, I think when we were one of the original 9 banks that came out and invested in R3 before, the rush of the fear of missing out, which was kind of focused everyone in late 2015, early 2016. And I think, whilst the banks were still kind of on the fence about Bitcoin, we did, as I said, knuckle down and think about how the technology can really help us to streamline, what is a really fragmented ecosystem. It's a spaghetti soup of, and the problem in public markets is really about data, and it's really about misaligned data, and that's why the impact on that is the operational risk burden, which is a huge capital drag, right? And so what we're trying to do this time around with privates, and so the other thing I'd say about the space is all the technology that the banks have been spending over the last 25 years is focused on the front of the stack, the front office. We've got AI, we've got algos, we've got all this technology, and what it serves to do is drive profit, like drive margin down, really, so it's compression. So you've got this technology driving margin down at, let's make it up, 10% per annum, driving out margin. But on the back end, on the cost side, on the post-trade, you're driving out cost at a rate of 5%. What does that mean? It means you're on a collision course to crash into the mountain, because you're getting rid of costs on the revenue side faster than you get rid of them on the backside. So technology like DLT is essential to the public markets, and I think the privates will show us the way. Ultimately, what we need to defend against is private markets you got to look at why they're inefficient. They're inefficient because I know they exist in paper and list in spreadsheets, and they basically exist in your lawyer's scratch pad. you're relying on exemptive rights and safe harbor rules, and you don't want to break them. So that's where the DLT comes in. The smart contract rules enable us to ensure that. So I think most people probably don't get what's different about where we are today versus where we're talking about digital. And where we are today, I call that electronic. What we've done is we've used technology to automate human processes, and we've done it, faster and faster and faster. But the side effect is we've got misaligned data. DLT allows us to do something quite different and to build a whole new stack where the actual asset is self-governing, ensures it's basically the same wherever it's ledgered, wherever the protocol that it's ledgered on, and that now we all have the same view, the same. I don't want to use my technical jargon, but it's effectively a state manager. That's what the blockchain is. We're effectively having the same state manager. So back to your question, ultimately, we have this huge opportunity. Many of our large banks are looking at private markets as the way to kind of generate alpha, because as I just described, in the public markets, it's been a drag. Margins are coming further and further down. It's a crowded space. Private markets running efficiently is really interesting. I'd say two more things, and I'll promise I'll shut up. The first thing is there's this misnomer that by creating fractional ownership and making things settle faster, all of a sudden you're going to create liquidity. It doesn't. Liquidity is because people want to buy the damn thing in the first place. It's got to be a decent asset. The other thing that you have to be cognizant of is, and this goes back to Lawrence's earlier point about the equity gap, right? There are growing numbers of private companies that want to stay private, less and less going public. And what that means is that only qualified or sophisticated, depending which jurisdiction you're in, qualified institutional buyers, quibs, or sophisticated buyers can get access to those, which basically means 95% of the population can't get access to the world's fastest growing companies. That to me is a problem. And I think the DLT should be applied. We should have a framework that allows mom and pop to invest in unicorns in a safe way and not be exploited. And so we need the right framework, the right types of disclosures, not as much as happens in the public domain, but enough that people aren't getting the disparity of information doesn't cause harm. But we really use this as a lesson to build a more safer, regulated, but efficient private market. Now I'll shut up.
No, I totally agree with that. And that was a great joke, because you started off by saying, I'm going to say something really controversial and I'll probably regret it, and probably your comms team breathe in. And you didn't say anything controversial at all. It was a lot of common sense.
Was referring to Napster, but it's in the past.
Yeah, we remember it. And this all must be music to your ears, Kareem, living in the world of private companies, right?
Yeah, I was going to say, I'm sitting in the middle of Silicon Valley right now, and I'll tell you, there are two headwinds to what Emmanuel just said, and I completely agree with 95% of the population doesn't get to participate. But there are people who don't want to make this easy. So, there are investors who have made this incredibly complex, and I, applaud what Artem is trying to do, is to try and bring standards. But I'll tell you, many of our clients and many of our investors don't want standardization, don't want to make this simple, which is what puts people like us in business. So I think we've got some headwinds there in terms of whether they're going to allow liquidity, whether they're going to support what we're trying to do. And I think the other thing is that the legal community really hasn't adopted this yet. And that's the other thing that we find, is that we really, it's the regulators, and I think what Lawrence is doing is great, but I also think the legal community is a little bit afraid of, blockchain, crypto. The first thing they think of is, oh, this is all Bitcoin. And we really need to spend some time educating the lawyers to understand that this is not so scary.
Yeah, very true. And I think, we talk about taking the private markets online, taking private companies online. We need to do it with the companies, right? So in the past, a lot of private venues, you've got people running around trying to buy stock in a company, and the board of the company don't want to sell it, and all of this fun and games. But this should be something that, as Emmanuel says, private companies are not going public so quickly. You've got high growth companies where lots of founders and employees sitting on a lot of stock. They can't sell it. And so it's having in an environment where private companies can go online, create some liquidity for part of their cap table, but not lose control. So maybe you're trading, I mean, I talk about digital shares class where it doesn't have voting rights, right? And these sorts of things. So it's also having an ecosystem that works for everybody, the companies, the institutions, and the investors, right?
Can I just jump in real quick? Because I think people who are listening to this, particularly with the events of the world of the last year or so, should be looking at this as an ESG play. And many people have got this idea of, they focus on the E, and they don't have a lot going on the S, and probably less on the G. But on the S, focusing on wage inequality has been laudable, it's been great. But now let's focus on wealth inequality. And we know that the equities markets has been a place where we've been able to help people with wealth inequality. So I think really tackling this issue of, the 493 US companies that are unicorns aren't going public anytime soon, allowing a safe way for folks to actually access those high growth companies is essential to closing the wealth inequality gap. And there's a story there, I think, in the ESG plan.
Yeah, well said. Very well made. We're just over slightly over our time by 30 seconds. Maybe just to close from each of you very briefly. So we've seen in 2020 4 markets break out, right? We've got institutions getting engaged in Bitcoin and Bitcoin staying up. We've got DeFi, we've got stable coins and NFT. So digital securities, are they next? Are we going to have this digital securities breakout moment? Button?
Absolutely. It's very much coming. It's on its way. In some jurisdictions, it's already there. But overall, yeah, it's almost certainty, I would say.
And where the DTCC is sitting, Artem?
I'll go even a step further, and I'll keep it clean and crisp. The cat's out of the bag. It's an inevitability.
And Lawrence?
I echo all of this, and again, really picking up on Emmanuel's point, I think this is an important opportunity to really not just get a fair and equitable system that everyone can invest in, but get investors access to high growth and an opportunity to capture ESG and sustainable investments and allocate to them among the big priorities, which are diversity, climate action, and biodiversity. The trinity right now, and a lot of stuff is going on in the private markets. And Anthony, just one thing unrelated to private markets, securities digitization, which will break out. I really thought it was great in a recent chat Jeff Banman had with Hester Pierce on Bitcoin ETFs. She made a comment and said, look, we've applied a level of scrutiny to these that we don't to other things, and we've got to ask why we're doing that. And I think of the particular context of the technology in Bitcoin. But her comment around the US cap markets, I felt was really refreshing. And she said, the US capital markets are a treasure, and we need to be able to open up access to them for all of our citizens. And so that type of narrative now is coming, and it's her own narrative. It's not on behalf of the SEC. This is her narrative, but I think that's really refreshing and bodes well for this, which from a regulatory perspective is one of the safest pools to swim in relative to a lot of these other volatile assets.
Very good. Yep, I know we're calling overtime slightly. Emmanuel, you're a buyer, so I'm going to give Karine the last word, right? Karine.
Well, hey, I agree with everything that what we said. This is happening. It's going to happen. I think we've got to get people educated. We really are talking about some complex things that aren't that complex. And so I'm always one who says, let's really do a PR campaign here to let Main Street understand, because they get all this. And they love the fact that no one else gets it. And so I agree. I think we need to focus on this. I love what you said, Emmanuel, about ESG. I think this is something that hasn't been tied together. So appreciate being part of this and talking about it. And I think this is doable today. So let's just get it done.
Fantastic. Great place to finish. We're taking this to Main Street. Thanks all. Fantastic panel. Great to have you all on. And let's roll on to the next session.
Thank you very much, Anthony.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
All right. Thank you, everyone, for joining us. Thank you to our panelists, as well as everyone in the audience. My name is Keith. I'm here on behalf of Security Token Advisors out here in Miami, Florida, as well as the Blockchain Acceleration Foundation. And today, we're going to spend a little bit of time talking about what major challenges and opportunities lie ahead in the adoption and the road of adoption for digital securities. And with me on the panel here, we have some incredible guests. Super excited for this conversation. I think it'd be a lot of fun. We're just going to talk really generally about some of the challenges and opportunities and have some fun here. So first off, I want to go ahead and give our panelists a second to introduce themselves. We have Michael Pincus from Bitbond. We have Gael Tamar from Solid Block. We also have Alfred Ritter from Montgomery Securities, as well as Joyce Herwig from Security Token Advisors as well. He's actually out on vacation in Colorado at the moment, correct? But with that, I'm just going to go ahead and step back for a second. Michael, just if you go ahead and quickly introduce yourself to the crowd, tell them a little bit about what you're doing and why you're here, man.
Thanks, Keith. It's great to be here with everyone. Really excited to be on the panel today. Michael Pincus, CFO of Bitbond. Bitbond, we provide white labeled technology blockchain solutions to banks and other financial intermediaries. In 2019, we issued ourselves the first regulated security token in the European market, and since then we've been involved with several other firsts. I'd be happy to share with you guys today. So, once again, thanks for having me here.
Thanks for being here, Michael. Seriously, Yael, please go ahead and introduce yourself.
Hi, everybody. I'm Yael Tamar, co-founder, co-CEO of Solid Block. Really happy to be here, and I love all the conferences that Draper Goren Holm organize every year, just to get to see some familiar faces and new people as well. Really fun. Thank you for that. We are tokenizing real estate, and our focus is to make real estate work for everyone. There is a huge $300 trillion market out there. Only 1% of it is tradable. So Solid Block is helping to put more real estate in the digital and accessible form for everybody. Thank you.
Thank you, Yael. Seriously. All right. We've got Alfred as well. Please go ahead and introduce yourself, sir.
Hi, I'm Alfred Ritter. I'm with Montgomery Securities. We're an old name, but a new firm. We're located in San Francisco. We're focused on investment banking services to, say, growth stage companies, and with an emphasis on financial technology. as a sector, and then we're a proponent of digital securities, and I think that's basically us. Good to be here.
Thanks for joining us, Alfred. Joyce, please. Oh,
yeah, thank you, Kev. Hi, everyone. So I'm Joyce Delanoux. I'm the co-founder of the company called Fairmint. At Fairmint, basically, we allow a founder to make their equity programmable. And thanks to a platform fully compliant, we allow them to issue tokens that are actually true equity securities. And they can put an invest now that button directly on their website to literally raise funds from anyone in their ecosystem, their stakeholder, their user, their customers. And we made the process so smooth that investing in private companies has never been so easy. It will be a pleasure to discuss with all those panelists today.
Awesome, man. Yep. Thank you. And Herwig, please, man. How you doing?
I'm doing great, Keith. Good to see you out here in Colorado, as you pointed out. I have the pleasure of working with Keith on the Security Token Advisor team, but I'm also one of the founding partners and the CEO of Security Token Group. You may know us for Security Token Market or stomarket.com, where you can go and get all the latest trading information for all these security tokens out there. And then we are also going to be launching our own financial products that are, of course, tokenized in the future as well.
Awesome, man. Thank you. With that done, thank you for taking the time to introduce yourselves. I'm going to go ahead and jump straight into some of the topics here, discuss some of these challenges and opportunities in the adoption of security tokens and digital securities. And actually, that's where I want to start. I know, Alfred, I think you have a pretty strong opinion about this idea. What is the difference between a digital security and a security token? And what do these things really mean to you? And how can we separate what's happening with digital securities or security tokens from what's happening in the blockchain space in general? Because right now there's a lot of conflation where people don't necessarily understand that there's a difference between what's happening in blockchain and what's happening with security tokens. And so it's important, I think, for us to kind of understand exactly what it is that's being done in the security token space and what that means for us to be able to get any real adoption. So if anyone has any strong opinions about this, I'd love to let you take the floor and talk about a little bit of the differences between a security token and blockchain, and or really kind of fleshing out the difference in a digital security and a tokenized security.
Well, you mentioned me first, so I'm going to jump in. The security, I don't know that there is a distinction between security token and digital security. I would say they're the same thing. There is some challenges with the word token. I think, in my opinion, I prefer to refer to it as a digital security, not to take away from the fact that this summit's called the Security Token Summit. But, I prefer, that's just a personal preference, I would say. I think there is a distinction, though, to be made between tokens, whether it be utility tokens and different that are non-securities, right, or cryptocurrencies, et cetera. So I think there's a distinction there, but between the two that you mentioned, really not. But the distinction between the others is typically security tokens or digital securities are not bearer instruments like a lot of the some of the other cryptocurrencies would be. So happy to have anybody else jump in on that.
I'll just jump in general. What is a security token, right? Very quickly for everybody, or a digital security for that matter. There are two components to security tokens. One is securitization, that's in the name, and the other one is digitization, that's also in the name, even though there's two names that kind of overlap, right? So securitization is plain vanilla issuing a security, which is compliant with whatever regulation the country of issuance has, right? The country of investor, right? Investors that are investing in this security. That's securitization. You usually do that through creating a special purpose vehicle, and then which will then hold the asset, may it be real estate, may it be a painting, may it be a car, maybe whatever it can be. That's the legal way to issue a security. And the digitization aspect of it is using digital, means that we have to our disposal, the blockchain by the way, other digital means could be things like Excel database or SQL online, right? So we're talking about blockchain-based security specifically. When we say digital security, we usually mean the ones that use blockchain to record the ownership. So hopefully that clears things up.
If I can add a word, like the panel is around the challenges with all that we are working on right now. And I like to explain to most of the people that I discuss with that basically the token is a technology when the security is the legal treatment of what they can hold. And when they start to feed it things cut this way, it's a way also for them to easily understand. Like no one would say it's a cloud email because it uses a cloud type of email infrastructure. No, it's just an email. And I think that's what's coming right now. People start to focus on what is the true underlying asset rather than to really wonder what is the way of issuance and issuing those securities.
That is so cool, Joris. In 10 years, we're going to drop the word digital, right? We're just going to say security, and that's going to mean security on the blockchain.
Exactly.
I love that.
I love that, absolutely. Anyone else has some comments on that, feel free to jump in. But if not, I think we can kind of smoothly transition here to talking about, it feels like sometimes the blockchain space and all of this tokenization is scaring off a lot of the institutions. At least in the past, it has been very difficult to get in the room with the big banks about what's happening in this space. And so, not only is it just the association with crypto potentially that may be kind of holding the institution back, but also there's a few other problems in the security token space. For instance, we touch a bit on kind of technology and how there's the back end, the blockchains, and how they don't always talk to each other. And that's a really big problem if you've got Deutsche Bank building a blockchain stablecoin on this platform or security token on this platform, and then you've got this other bank doing it on another blockchain. So how do we address some of the issues with interoperability within the security token space, and how is that holding us back from seeing mainstream adoption?
Yeah. If I could start off with that one, because that's our bread and butter. That's what we're doing all the time. We're speaking with the largest banks on the street. I personally have a background of over 20 years in financial services, and you have to know how banks operate. Every bank has an innovation team. Every bank is looking into blockchain that we speak to. Every bank is excited about the topic and ready to talk about what you're working on, what can you bring to the table. I think banks, and rightfully so, being regulated institutions, are doing their homework. They're doing extensive due diligences, and very often we're asked to be part of numerous pilot projects and different types of consultancy in analyzing what is the best approach for each bank, because each bank has a different focus. Each bank has different pain points. I think that's the first thing, is that we're seeing a lot of institutional acceptance from the banks that we're speaking with. We've been mandated by large and small banks, as well as other financial intermediaries. And secondly, your point on interoperability, I think when you speak to bankers and anyone at large financial institutions that has anything to do with the DLT space, they're basically saying the technology is there now. We feel comfortable with the technology. What's holding us up is the regulatory and legal hurdles that are in place and the uncertainty that's there. You have some countries that are moving much quicker than others. Even in the EU, where I'm working, you have countries that are on the forefront, like Germany, Luxembourg, and France, and you have other countries that are still trying to figure out what their approach is going to be. And I think if I can just touch on the interoperability point, I think that's the other big challenge. And one of the ways to solve that is addressing the custody issue. How many different protocols are you allowing under your custody technology? The custody technology that we offer is multi-protocol. And then the tokenization module that we offer to banks also allows them, they basically have a drop-down menu. It could decide, today I'm issuing on Ethereum, tomorrow I'm issuing on Stellar. And so these are all ways to get to the point where we, eventually everything will be interoperable, like the analogy with email. Doesn't matter where I'm sending you an email from a Mac or a Chromebook, you're getting the message. And that's, I think, what we're all trying to work towards on the security token space.
If I may add something here, that was great, Michael. The last conference I ever attended in person, oh, no, actually, since then I've been to a conference in Dubai, but the last conference in the US was the Structured Finance Conference, full of bankers, and they wanted to hear about blockchain and they wanted to hear about tokenization. So we flew there to speak. So basically, the institutions, as Michael pointed out, are ready to go. A lot of them put money in companies like Securitize, Vertalo, Polymath, right? That are doing tokenization. A lot of them put money in different companies that do custody and do solutions that overall complete the puzzle of the infrastructure. And a lot of them put money behind security tokens. A lot of them are issuing bonds on blockchain, on Ethereum, right? So we have like Santander, and we have Nomura, and we have quite a few banks and financial institutions that are putting their money into this technology and also into the products. So there's no question that banks or institutions are super interested. I don't know if the interoperability is necessarily the issue, because there are quite a few solutions that are there. I think that there are many challenges that prevent institutions from jumping ship, even though crypto has gained acceptance. But crypto, for example, has a lot of data tools, right? And also is gaining kind of this popularity among the traders, and there's lots of education, and people generally understand, investment bankers understand the concept of crypto. Security tokens is something else. Number one, there's very little data on, the different markets from which security tokens come from, especially real estate. There might be a lot of data kind of floating around on residential, but not on commercial, and just not on the level that institutions are used to. So there's not a lot of data. There's not a lot of education furthering this this market for them. So I think that institutions are definitely going to be the catalyst for the market, and collectively, we all should create some sort of a portal or resource book, data sets and things like that to kind of bring that industry to fruition. So that's what I would like to call on my fellow colleagues to do together with us.
Absolutely, cool. Thank you for that, Al.
Mm-hmm.
I mean, I think institutional adoption. I mean, look at Bitcoin right now, right? I mean, we're starting to see OCC applications to become a bank to handle cryptocurrency in the U.S. So I think, you're going to see that happening. It's going to happen, I don't know, this year, but it's going to happen in the next 24 months. I would say that there'll be a bank, that there'll be new bank applications approved that will handle cryptocurrency. I think you need to see that happen. And then I think then the SEC will take their cues from what's happening in the cryptocurrency market, saying, okay, this is an asset class. We're feeling more comfortable with the technology. And you see the SEC, I mean, on the way out the door, the Christmas gift, that the SEC chairman left for all of us was information about custodying of digital asset securities. We're very much interested in pursuing that and being involved with that development, but we also don't know what it means, and we need to wait till Gensler gets in there and make sure he doesn't throw it all out, which I don't think he will. But so we're figuring it out. I think some of the directives there are really important from the regulators in this business. I think those are some of the liabilities of highly regulated firms, which if you're in the securities business, you're regulated. So you got to deal with FINRA. And if the SEC doesn't tell FINRA what to do, then FINRA doesn't know what to do, and they don't approve anything.
Also depends on how you define institutions, right? I mean, we know, Keith, that we have a resource live on our blog with the top 100 banks in the world. 39 of them are working on blockchain-based projects to make efficiencies into their stack. Of the top 10, 7 of them are working on blockchain-based projects. NASDAQ has a whole tokenization suite that they're looking at. Obviously, NASDAQ is not powered today by the blockchain, but they're looking at it. They're offering services. So this is definitely happening.
Agreed.
I love it. Absolutely. And so speaking a little bit more towards the regulatory concerns and issues, it's actually super surprising because right now it's very fragmented. So not only do we have these different jurisdictions that all have their own rules around what's happening. I know, Michael, you're based in Germany, and you're seeing some of this in Europe, how there's not really a clear framework that's been built out. And so speaking to that, there's some countries that are ahead and some of that are very behind. And so, Herwig, I know you also work with a lot of international exchanges and ATSs, rather, marketplaces as well. So I'm wondering, where are we seeing the opportunity in or the challenge, really, with the regulations when we're talking about them in a place where we're actually communicating these ownership of these technologies across borders? I think that's kind of one of the biggest potential opportunities is having that global access to assets in different places. So how are we seeing that opportunity and that challenge right now?
Yeah, every jurisdiction has its own story and opportunity, right? When you look at America, we're dealing with the most robust and strictest capital markets in the world. And that's a whole different ballgame when it comes to a lot of these island nations like the Seychelles off of the east coast of Africa, that 10 years ago was the smallest national exchange in the world. And now they're one of the fastest growing in the entire world because they're supporting digital securities and blockchain-based instruments and taking advantage of this new opportunity to create global access to products. And the financial products don't necessarily need to be in the same jurisdiction. We can have someone in Hong Kong buy property in Singapore through a broker-dealer out of New York that now it's trading on merch. And that's the future of financial markets being connected. There's obviously a lot of regulation that needs to catch up in certain, regards. In Europe, they have their own issues regarding the EU, and the US, as we know, has, we've seen with the panel with Hester Pierce that there's a lot of work to be done. But ultimately, I think this is an opportunity just to create more interconnected finance, simply creating access to assets as well as investors getting access to foreign assets. And that's the opportunity that we're seeing around the world. Pretty much every country, whether it be a private marketplace or their national exchange, is looking at how can we take advantage of the fact that these instruments will be connected and we can now have these efficiencies to kind of transact instantly across borders.
Yeah, I think Herwig is right. I mean, just looking in Europe alone, at the EU level, they've come out with what's called the pilot regime, which will allow exchanges to develop in the digital asset space in the next couple of years. Also, MiCA is another regulation dealing with crypto and stable coins. In Germany, very interestingly, I have to hand it to the regulator. They've been very open to innovation. When they approved our first STO in 2019, they had gone through 130 applications before they approved the Bitbond application. That became the precedent of how you issue a security token on the German market, and passporting, with the ability to passport through all the other European countries. And now the government in May will be putting in place a law which allows you to then issue bonds on chain without even having a central securities depository. That's much further ahead than most of the other jurisdictions in the EU. And I think also what's interesting in Germany, someone mentioned the topic of regulated digital asset custody. That's something that's come into effect last year in Germany, where if you hold digital assets, whether it's crypto or other digital assets for third parties, you need to be regulated. And I think that's the right approach. I mean, and if you're talking about security tokens, then you definitely need to be regulated if you're holding securities for third parties. So I think just because you're regulated and just because you need that custodian in place, I mean, we provide the technology to several different custodians. It's not going to hamper things. It's just going to create more stability and more trust in the system. And I think that's what we have to show people, is it's not the same as 2017, 2018. It's a different ballgame now.
One last thing I want to add to that is let's look at exchanges and the history of exchanges in general. They used to be very local, right? They used to actually be issued by local companies based in specific states even, and then were traded on stock exchanges within each state, right? Regulated by a state. So we're looking now at, for example, T0, that offers services to American and foreign citizens alike. There's certainly differences and challenges of regulation where in the United States, for example, if the security was issued under the Reg D 506C regulation or compliance, they would have to be on a lockup for a year, and internationally they will not. So that might put US investors at a disadvantage. So and then there are global exchanges, right? They're exchanges that kind of cater to just anybody, any investor anywhere, and may even cater to retail investors anywhere. So that's very exciting, and that's also an opportunity for regulatory arbitrage, trying to find ways to compliantly trade. And also that presents an opportunity because there's this globalization of trade. It doesn't mean anything. Like where you live only means two things: how you pay taxes and how you can invest. But, the products are actually super global, and the trading tools are becoming super global. So what I think the next wave of solutions is going to be are kind of these global market makers, or solutions that connect investors with products on different exchanges. So you might have a product being for sale on, let's say, INX in the US, and an investor on Merge in the Seychelles, and then there will be a way to compliantly connect them. There are definitely some regulatory difficulties there, but I think with regulatory arbitrage and some really creative people and who have understanding of compliance, we'll be able to overcome these challenges.
Yeah, I mean, I totally echo those points. Regular securities trade on multiple exchanges already, right? I mean, you have something on the NASDAQ that's trading in Frankfurt and other places, right? It can be that there's a framework in which to figure that out. And I think there's some environments that are more aggressive related to getting more dollars to flow into their areas, like Singapore and Hong Kong, right? They're constantly battling to see who can get more money to flow into their territory versus somebody else. So I think you're going to see the creativity happening there, and then it will trickle up to the larger markets as well. So,
all right. Thank you so much for that. We've had an amazing panel here. I appreciate you all for joining us. Right now, we're going to go ahead and wrap it up. If anyone has any last kind of comments, just want to get out, Joyce, maybe. But if not, thank you all for being here. Seriously, it's been an amazing session. Thank you to Draper Goren Holm for putting this together. We've been discussing the challenges and opportunities in the adoption of digital securities. So thank you so much once again. This has been super fun. Thank you.
Thank you.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue. making the exclusive inclusive.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Jessica, you're muted again, really quick.
Hey, we're back. It's the beauty of a live digital conference. So great points there from our speakers. So a huge thank you. Now we've heard from Chris Land and we've also heard from SEC Commissioner Pierce on the regulatory side of things through the 3rd annual Security Summit. It wouldn't be the same if we didn't have a fully fledged conversation around the topic with our next group of guests. So I'm really excited to welcome you, US Representative Congressman Tom Emmer, Jeff Bannerman of Bannerman Advisors, Ella Roman of Symetra, Sean Nazary of Emergence, and moderator Rachel Wolfson from Cointelegraph. Guys, enjoy the conversation.
Thanks so much for the introduction, Jessica. Hi, everyone. I'm Rachel Wolfson. I'm a reporter with Cointelegraph. And thanks again for all of you at the Security Token Summit for organizing this panel today. I've got a great group of panelists. I'm just going to go ahead and let them just introduce themselves for, maybe 30 seconds or so, and then we're going to jump into our questions. So, Sean, would you like to start?
Sure. Hey, how's it going, everybody? My name is Sean Nazary. I'm a director at Emergence, which is the digital asset, blockchain, and emerging technology arm of parent investment bank Wield & Co. Prior to Emergence, I was running business development and operations at Tokensoft, which is the leading security token issuance and management platform. And essentially, between being at the bank and at Tokensoft, we ensure compliance as part of our service, which I guess explains why I'm on a securities and regulations panel as a non-legal professional.
Great. Ella?
Hi, I'm Ella Rosenberg. I'm from Symetra. I'm an EU regulatory consultant based in Tel Aviv, and good evening to everyone from Tel Aviv.
Thanks. Jeff?
Hi, everybody. Jeff Banman. I'm a lawyer turned business executive turned regulator turned kind of entrepreneur, consultant, and policy person with the Global Digital Finance International Policy Initiative, also the Banman Advisors, kind of regulatory consultants focused on US and Europe, and really excited for today's discussion.
Great. And Congressman Emmer? Would you like to introduce yourself, Congressman Emmer, really briefly? Oh, I think we lost him. Did we lose Congressman Emmer? Can you guys see him anymore?
He just went off screen.
Okay.
I think we lost him for a sec.
Okay.
He's having some audio issues, I believe.
Okay. I'm sure he will rejoin us shortly. So I'll just go ahead and get the discussion started while we wait for Congressman Emmer to come back. Ella, I'd like to start with you. So regulations for AML are extremely important right now. Can you explain? Yes. Can you explain why and also discuss the impact of 6MLD, please?
Yes. So quite interestingly enough, when specifically I'm going to discuss 6MLD within the European framework. But funny enough, it also impacts other markets, as I will explain furthermore. But essentially, 6MLD is the new anti-money laundering directive in the European Union that sets out the anti-money laundering practices that should take place within the European Union. Now, funny enough, people always ask me, what is the difference between a directive and a regulation? So a directive is the lower end of the regulatory framework within the European Union, which enables member states to enact national laws within a guideline set by the European Commission. At the same time, a regulation takes that a bit further and gives one set of rules within the European Union for a specific, specific type of law. Now, if we look at the anti-money laundering directive, the new one, 6MLD, it's quite straightforward, but at the same time, it's very innovative. in the sense that for the first time in European Union law history, criminal liability is enacted on the European Union level, not on the member state level. In addition to that, there's also the issue of blacklisting of companies that are not compliant with 6MLD. And there's the issue of FIUs, so financial intelligence units, that can and should correspond between one another in a case of suspicion of money laundering. How is this related specifically for STOs and cryptocurrencies? It all comes down to the fact of KYC. How do you onboard KYC? How do you onboard clients? What kind of KYC do you ask? How do you store that KYC? In addition to that, it also comes to the fact of how do you report to the regulator? What documents do you report? What documents do you not report? At the same time, you also need to bear in mind that suspicious activity are not only recommended to be reported, should be reported. So this is the innovative part of 6MLD within the European Union.
Got it. That's extremely interesting. Thank you so much, Ella. And obviously, since this panel discussion is about regulations and compliance, Jeff, I think this is a really important question that you can answer. So based on your background and experience, do you know what we can expect from the SEC under the new US administration?
Yeah, I think that with regard to digital assets, I think that the SEC, we can expect it to be a real hotspot for the next couple of years. Obviously, the chairman nominee, Gary Gensler, former chairman of the CFTC, where I used to work, is someone, he's had the experience leading a regulatory agency before. He's shown he can really lead to a lot of changes in terms of market structure. The CFTC enacted a large number of rules at the time to create the new market structure with respect to swaps. Now, with respect to digital assets, there's quite a number of issues that have been kind of piling up over the last couple of years. And the SEC has certainly been working very hard to deal with them and to engage with them. But there are quite a number of things that have either been left open or yet to be determined. So one of those is, will there be a retail product that's made available to U.S. investors? And elsewhere in the U.S., investors can obviously invest in spot crypto assets. They can invest in futures that are offered on the CFTC regulated exchanges. In Canada, there are now exchange-traded products and ETFs, but the SEC has yet to approve a retail ETF. So will that be approved under Chairman Gensler once he's there? Well, I think he will. He's shown that he is very familiar with the data. He's taught courses on this. So I think we can expect him to pay a lot of attention to the data. I think there will be a lot of focus on market structure. Clearly, the full agency will need to be engaged in that. And then I think the other thing we can expect, it's not going to be a case of, gee, he sort of understands crypto, so they're going to take away the goalie. We can expect robust enforcement. We can expect very, very strong investor protection and scrutiny. Certainly as a new market structure was being put in place under the CFC regime, a lot of the incumbents were very uncomfortable. There were things they objected to, but they were done with a view towards promoting transparency, investor protection, and other values. So I think the SEC will be a real hotspot over the next couple of years once Chairman Gensler is in place, assuming he is confirmed by the full Senate.
Right. Very interesting. Congressman Emmer, welcome back. Glad to see you. Glad to see you made it back in. Actually, the next question I want to ask is for you. You recently introduced the Securities Clarity Act. Can you please explain what this means and its impact both nationally and globally?
Yeah, I'm happy to. The Securities Clarity Act would be a technology neutral bill that would clarify that an investment contract asset, for instance, like a digital token, would be separate and distinct from the securities offering it might have been a part of. As you know, an investment contract asset is any asset sold as an object of an investment contract. The reason this is important is there's just an unreasonable level of uncertainty with the way that federal securities laws should be applied to transactions involving the sale of blockchain-based tokens. And it's this lack of clarity that, frankly, is hurting American innovation. And I believe is potentially, I believe it's already doing it, but certainly going forward, it has a serious implication of driving entrepreneurs out of the U.S. So as a legislator, I don't want to directly, obviously, weigh in. We know that there's pending litigation, right, on this issue. I don't want to weigh into that. I have prior to the litigation, but it really comes down to whether something is a security or not. We have to we've got to get some clarity, which is there's the title of the bill, the Securities Clarity Act.
Right. Well, I think
Congressman, I'm sorry.
I was just going to say, I think it's really interesting right now, Congressman Emmer. Can you explain how that may relate to the SEC versus Ripple case?
Well, that's what I was trying to stay away from.
Oh, okay.
But that's all right. I mean, obviously, I previously said that I don't think XRP is a security. XRP was created in 2012. And, even though it was originally with Ripple and it's spun off and they're separate, right? Ripple was talking to the SEC and gave all the information. This has been 8 to 9 years. This is the problem. And I think, now, again, without weighing into that pending case, the fact that we're litigating an 8-year-old development should tell everyone that the SEC needs to do a better job of providing in advance clear rules of the road. And I think you might want to look at another bill that David Schweikert, my friend from Arizona, has. It's called the Digital Commodities Exchange Act, and it's complementary to the Securities Clarity Act, in that bill creates a framework at the CFTC to regulate trading venues, which then list emerging digital commodities like Bitcoin for public trading. So if a virtual currency is deemed not to be a security under the Securities Clarity Act, then it would be regulated by the CFTC. I think these are things that we have to start thinking of as legislators so that government doesn't get in the way of this innovation, so government regulators don't regulate through enforcement, and the entrepreneurs can literally start to weigh into these areas without fear of punishment, without fear of subsequent action. And I think it'll be better for the entire environment, quite frankly. We just need more clarity, period.
Panelists, did you want to add anything to that? I mean, Congressman Emmer made such a good point. Jeff, Sean, or Ella, did you want to add anything?
Yeah, I had one question for Mr. Emmer. So essentially the Clarities Act, is this supposed to kind of create a little bit more separation between digital tokens and the Howey test specifically?
So yes, my answer to that would be yes. I think the Howey test is it's great for lawyers, Sean.
It is case law at the end of the day, not law.
Right, and I mean it's great. It's full employment for lawyers. But I think it's kind of, this all came from when I first got involved in this space 5 years ago. I think government really needs to do a better job, even though there's overlap, of defining what is a currency, what is a commodity, and what is a security. We're just focusing on this Securities Clarity Act today because it's just had some serious implications, I think, in terms of driving entrepreneurs out. I think we want to attract them. We've got the best and the brightest. We want them developing things here. So, yes, the answer is I think the Howey test, great. That's where the courts went. But I think as legislators, we can do better.
Yeah, I'd like to comment as well. I mean, I think that providing this regulatory clarity from Congress and both of the bills you referred to, would help innovators. And I have kind of a couple of perspectives on that. I spent quite a fair amount of time in 2019 and 2020 working on launching a transfer agent registered with the SEC focused on launching blockchain-based digital securities. And, in order to do that, you need issuers who are launching tokenized securities or security tokens, and quite a number of them. And they were engaging with the SEC, but there were issues whether around the token, whether around the trading dynamics, how post-trade clearing and settlement would work, and eventually quite a number of those issuers just gave up. A number of them have seen it through, but for incumbents it's a different scenario. But for entrepreneurs and innovators, time is one of the most important factors. And getting that clarity, even if part of the answer is no, you can't do everything you want to do. So I think that can make a real difference for innovators to have that kind of clarity. And the other comment on the other bill that the Congressman mentioned, right now there is no federal regulator directly supervising the spot market, right, for crypto assets like Bitcoin or Ether or others that are determined not to be securities. And I think that's a reason why we don't have an SEC regulated exchange traded product. In many other countries, we have somebody who's supervising that market, and the ability for investors in America to invest kind of safely and securely, knowing somebody is supervising these markets, would provide a lot of clarity and safety. But it really is up to Congress to do it. And if you can make that happen, I think there would be a lot of grateful innovators and investors.
Wonderful. Yes, let's see that happen. So next question is for Sean. Sean, obviously NFTs are booming right now, and I know that you know a lot about that. Can you talk about regulations around NFTs?
Yeah, thank you for the question, Rachel. I think, NFTs are obviously the hot topic right now, and I think we're barely still scratching the surface on what NFTs can truly do. Right now, it's, very much in pop culture as art and collectibles. And I think as far as regulations pertain to creators, there isn't as many, right? It's still just art. But I think, where NFTs do get interesting is around ownership and IP rights. A lot of which just having a fungible token with provenance and being on the blockchain will help mitigate a lot of things, especially as it pertains to sort of counterfeit art and collectibles. But I think where the real regulation comes in is on the platform and exchange side. And those, as with all things related to crypto, still need to adhere to KYC AML, OFAC regulations. So, and just as with the regular art world, people just want to make sure there's no nefarious activities happening, that, this art and transfer of money isn't going to, bad actors and organizations, and isn't used for money laundering practices. So I think, those things still very much exist. And, what's interesting is, the Financial Actions Task Force put out some thoughts on this just last week, specifically on the monitoring and classifications of NFTs and DeFi more broadly. So I think we're going to start seeing some more clarity around these things as well. But I mean, for now, I think just like with securities and security tokens, just because it's wrapped in a blockchain digital wrapper doesn't necessarily mean the laws change. You still need to sort of follow them as they are written. And the fortunate thing with art is it's still fairly broad. So I think we're going to see some good things coming from it. And I think this will do a lot for the IP and sort of copyright ownership world as the NFTs mature.
Great. Do any of the panelists have anything to add to that on NFTs and regulations? Okay. Ella, go ahead, Congressman Emmer. Did you want to add to something?
Well, I think Sean touched on it, but I might have missed it. I just think it's kind of cool with these NFTs that they can contain smart contracts that give the artist or the creator a cut of future sales of the token. I think that's and I think that's what you were getting at, Sean, as it evolves and as it moves forward. Lots of different things you can do with it.
Yeah, I mean, so these NFTs are essentially embedded within for the most part, an Ethereum-based ERC derivative, but they could be written into plenty of other protocols. But it sort of takes a lot of the guesswork around kind of making sure people are compensated as co-creators, collaborators, and create sort of a long tail appreciation in royalties, which doesn't exist in the traditional trading markets as pertains to collectibles.
Yeah, I think it does. If I may add one other thing, and I think this is just a really a wonderful example of the way innovation challenges traditional boundaries and definitions. Like at first, at least as NFTs started to get a lot more prominence over the last month and the last couple of months with some of these eye-popping numbers and sales and tweets and auctions. At first it sounded like, well, these are just collectibles, don't necessarily sound like securities, and are they, commodities? Well, they're really individual and bespoke, so more like collectibles. But really, and Congressman Emmer commented about how you can have the smart contract embedded in it, and it's Sean, as you said, these potential, kind of payment streams and royalties. Well, wait a second. Well, then maybe does it start to sound like a securitization? And if you have the artwork, but then you're using kind of fragmentation or micro things, and then lots of people can participate in that, then you take something which at first sounded simple, like, oh, it's a unique collectible, but then it actually is, it could be a complex financial instrument that has a lot of attributes of other complex financial instruments. So maybe it is going to be an investment contract, after all. Hopefully clarified by the Clarity Act, but it just is opening a whole Pandora's box of innovation.
And I think that's an excellent point. These NFTs can quickly transform from digital collectibles into securities. So if you start doing things like fractional ownership, if you start pooling collections of art together and let people invest into it, or like what Justin Blau, the DJ, did, was he actually sold the future royalties off of his album. And for that, he actually did register with a broker-dealer and as a security. So yeah, I think that's also where those definitions come in, that can take something from being art, just like there is art funds, just like there is tokenized or art sort of crowdfunding websites that have taken art and turned it into a security as well. So yeah, I think there's no blanket statement for it. Yeah, I think we'll see securities come out of it for sure.
Interestingly enough, if you do look specifically on the art industry as an industry and how NFTs have penetrated this specific topic, there's one thing that no one else is discussing, is how, interesting enough, it just entered the art market and also enter other markets as well. I've been dealing with a group of experts a few years ago, and we were actually discussing the issue of defense, how NFTs can also, at a certain point, access the defense market and other markets as well. It's very, to a certain extent, it's quite focused on artifacts currently. But if you look at the defense industry as well, those artifacts can also mirror in that sector as well. And then you take NFTs and you essentially push them up a notch, not only to one market, but to multiple markets as well.
Right. NFTs they're just so interesting right now. So I'm curious to see what happens around the regulations there. We really need some clarity. Next question, I think, Jeff, maybe you can start off by answering this one. Do you think we need a safe harbor proposal in place as introduced by Commissioner Pierce? What are your thoughts on that? Anyone can answer, but Jeff, I know you have some expertise here.
Yeah, I'll get us started. It's some interesting dialogue with her, and really enjoyed her comments about that. Earlier in the conference. It's interesting. I mean, the SEC actually, one of the last things they did under the prior chairman was to issue a safe harbor for broker-dealer custody for specialized broker-dealers for digital assets. So, I think that may get fine-tuned a bit, but I think there's a lot of demand for any kind of safe harbor. With respect to Commissioner Pierce's safe harbor, she's indicated that she's gotten a lot of feedback on it, and it sounds like she's going to be reproposing it soon. I think that the gist of it, at least one of the cores, is that, a team will get a little bit of time. They can propose something, innovate, and as long as it stays small, they'll get a certain amount of time to get it to a state of decentralization. I think that's, philosophically in line with some of the ideas that Congressman Emmer was referring to. I think it's going to be hard for the SEC to really, figure out how to navigate that, because, it does, the flip side is, does it open the door to other people finding ways to say, okay, I'm going to take this thing, which is really a security, and, sell it to investors, and then I get sort of time to transform it. So I think there's a real demand for it, and I'm really looking forward to seeing how she iterates the proposal, because, to bring clarity to all these projects so that American innovators can continue to do this without feeling like they have to go offshore or they have to sort of modify it. I think there's going to be a lot of demand, and hopefully the new commission under the new chairman will be ready to engage on some of these ideas.
Yeah, I'm a huge fan of safe harbors and sandboxes. I think it shows like a real proactive sort of approach by government to actually get in touch with the innovators. And I spent a lot of time in Southeast Asia in 2019, especially towards the end of the year. And it seemed like the regulators, specifically within Singapore, which everybody was really relishing in, were being very proactive about working with all the sort of people within the ecosystem to develop laws. And if you look at, most of the laws in America, specifically as it pertains to securities, they're very reactive. And that's just kind of the nature of the beast. They make laws after people lose their shirts and things go bad. Whereas with tech, and I know with the EU actually as well, they've also been very proactive in sort of creating regulations and safe harbors for the crypto and blockchain community, because they want to be part of this technical way, this tech wave. So I'm a huge fan of it. I think it's a major step in the right direction, and it's great for the industry as a whole.
I'd echo that. I'd echo that very quickly. If you look at the stuff that I've been offering, it involves safe harbors. And it's not just about the SEC, and I won't disparage the SEC or any other bureaucracy or enforcement regulatory agency that's trying to catch up, but they got to catch up. They got to get moving. And Sean, you're right. People are moving to create laws, but the problem we have is I think in our country, I think our regulatory bureaucracy is doing just the opposite. I think they're playing third base with both hands placed firmly around their throat. They don't want to let it hang out because, like Jeff was saying, there's a hunger for this stuff. And where's that line? You're gonna let people innovate and create, and then all of a sudden, what is big? Jeff made the comment that as long as it's small and it starts out, the problem is we got to get our elected officials up to speed and understanding what this is. This isn't Silk Road. This is something much bigger than that. It's got I love the complexity that we were talking about earlier when Ella went into. She's going to make me really expand my thinking about how these things grow and get more complex. But you already know there's smart people out there looking at how they may take this to the next level. And I think it's really important that we create those safe harbors so that people can innovate and create and succeed, by the way. There's nothing wrong with success. And if we think that they lived on the edge as we go forward, that we have to honor our commitment to balance risk and protect investors, great. Let's do it looking forward without punishing people looking in the rearview mirror so that they can create.
Interestingly enough, I'm going to say something which is a very unpopular opinion, but I'm going to mention it anyhow. Interestingly enough, the most basic compliance officer in the crypto exchange today, based in Estonia, knows much more about regulations and anti-money laundering practices than the majority of many anti-money laundering officers within certain institutions within the European Union. So the beautiful thing about sandboxes and safe harbors, it entails some sort of correspondence between the regulator on the one hand and the private sector on the other hand. I've witnessed in several instances in which the most basic crypto exchange knows more about how to maintain a basic anti-money laundering framework within an enterprise rather than the regulator. Now, this is, as I said, it has no any sort of repercussion on the regulator because the regulator has to set the policy on how to do certain things, and then the compliance team has to execute that specific policy. But there's absolutely no difference in that sense of the line of work. But at the same time, opening this correspondence between the two is very efficient. I always tell people that I work with that it's very important to keep a relationship between an STO or cryptocurrency with the regulator as you keep a relationship with your mother-in-law, meaning that it has to be a very correct relationship, but at the same time it has to be a very friendly relationship. And this is something that the European Union, in that sense, is doing miraculously well. You see it how it's going very well within the FTA. You see how it's going very well in Lithuania. Lithuania, funny and interestingly enough, is doing amazingly well within their sandbox. So yes, I full-heartedly support that opinion.
Great, thank you. And on that note, Ella, we're out of time, so we're going to end the panel. Thank you so much to our panelists and to the audience and the organizers of the Security Token Summit. It's been a pleasure. And yeah, thank you all.
Thank you so much.
Thanks.
Bye-bye.
Bye.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
Fantastic moderation by Rachel there, as always, and some great points by Tom Era when it comes to expanding and thinking to the next level, which really brings us to our next discussion. As we all know, the world is moving closer and closer toward a standstill digital narrative, whether it be through money with crypto, we're seeing art with NFTs absolutely surge, or decentralized exchanges running 100% through code. So our next group of guests will share why capital markets are next on the digital frontier for future generations. So please help me in welcoming Symmetra CEO Ziv Kian and Draper Goren Holm, founding partner and Security Token Summit Joseph Holm.
Hey.
Hey, Joseph, how are you?
Ziv, how are you?
I'm fine. I want to tell you that
I have no
just
audio
a wonderful. Do you hear me?
Where is my audio?
All good. Do you try your mic settings really quick down below?
I can't hear anything good. It works fine. Can you guys hear me?
Yeah, we can hear you.
Yeah.
I can't hear you.
What's up?
Strange. Hang on. Okay, let me refresh. Okay.
Ziv, let's start this session, huh? What's going on in the world of Symmetria? How are you doing? Welcome to the Security Token Summit.
Yeah, Symmetria is great, and this conference is great. And I wanted to tell Joseph before I drop down that that this conference is just Joseph is shaking his head. Okay, so yeah. The conference is great, and we're very happy to be here in Symmetria. What we have prepared for today is a short talk about Symmetria, and then a short demo just showing what we are working on right now. Would that be cool with you?
Yeah, go for it. Okay,
wonderful. So, for those who don't know me from the crowd, my name is Ziv Kian. I'm the CEO of Symmetria. I've kind of been a very early starter in the digital security space. In 2017, I started Security Token Lawyers. It was the first law firm that was specialized in digital securities. It was with two friends, American lawyers, and actually, we kind of grew with the industry. Another aspect that that I love and I'm passionate about is blockchain and social impact. So if if someone in the audience want to ask me about blockchain and social impact, I'm always happy to answer. Hi, Joseph.
Hey, now I can hear you.
You can hear us at last. Okay, wonderful. I'm going to claim those minutes back from you.
No problem. Let's just dive right into it. I heard you already started introducing yourself.
Yeah, I started introducing myself, and then saying that I'm passionate about blockchain and securities, blockchain and social impact. That brought me also to consult one of Ito's leading project for about 2 years. Wonderful company, and then becoming from the digital security space, I've become the COO for Onera. when Ami and myself, I actually helped Ami with establishing and a bit of building of the Onera network, and then when Ami and myself were here in Israel at the Israeli Securities Authority annual conference and actually presenting the Onera network use case, then we were approached and we discussed this new opportunity with the head of the Israel Securities Authority, saying that now there's an opportunity in the Israeli market for a digital securities exchange and a new legislation that's coming, and that was the aha moment for me. I kind of spun out of Onera. We created Ami, myself, and Onera. We created Symmetria. With the vision to create a digital securities market out of Israel that would become a global market and would connect to the world. And yes, this is in a short the story of how Symmetria came true.
Yeah, that's very interesting, and you've been in the news quite a bit, and you've done some really exciting things. But so for the audience who may not know Symmetria yet, what's the story behind Symmetria, and how did it all come to be, and why does the private market need a blockchain-based solution to begin with?
Yeah, so I started saying that that we at Symmetria we acknowledge the opportunity to start this private market out of Israel. That's a huge opportunity because right now until today there was only one market operating in Israel, and the group that we are a group of very passionate professionals that believe that there should be another market, additional market that's serving the local and blooming tech market out of Israel with the aim to then expand globally. So some of us, for example, my colleague is a former regulator, the former director of CONSI at the State of Israel, and we have some very great technology team. And Israel is a use case is also very interesting, and I think that's a great place to start a private market from. So Israel has moved from what's been called until now like a startup nation into what is now a software nation. You see, like only last week we had eToro IPO at 10 billion. We have Iron Source IPO at 11 billion. We had 55 unicorns. More than 10% of the world unicorns are in Israel, and if you look at the cyberspace, the number is even more amazing. Like half of the world unicorns are Israeli. Half of the world cybersecurity unicorns are out of Israel. So this market has really changed dramatically during the last 5 years. And with this market changing and valuation of the company soaring, so is the demand for a secondary private market. And this is what Symmetria has to offer.
Yeah, I mean, I gotta tell you, I was in Tel Aviv last year for Tel Aviv FinTech Week, before the whole COVID craziness started and everything locked down. And I was very impressed. I did not expect, the number of high quality startups coming out of there, and it just seems like it's growing a lot. So I see that there is a need for a private marketplace, and you kind of answered my next question already. But what pain point is Symmetria solving, and maybe you can dive a little more into the details.
Yeah. So first of all, I want to use this opportunity to thank Draper Goren Holm for being an early investor in Symmetria, and also use this opportunity to announce that we have another investor joining now, the Swiss Bluefolio venture capital arm. Very great guys led by Mark Brown from Switzerland. So we are very excited about them joining, and we are looking forward to for additional investor joining. And Symmetria, the pains of the private markets are kind of clear. there's been a lot of reading about it, but the idea is that you can have this dichotomy in the market where you have only private companies, public company, and all the liquidity is with the private company and none of the liquidity is with the private company. This just doesn't make sense for a company like Coinbase, for example, to be zero liquidity until it's a $70 billion valuation and only then meet liquidity. You know, it just doesn't make sense. But then, like, you see all kind of anomalies created out of there. For example, if you see, when the private company meets liquidity, the founder, for example, of the private company and early investors, when this company is doing a round and there's oversubscription of the round, so meaning there's more people that want to buy the share than people that the company has to offer, then the founders and early investors have the opportunity to sell some of those shares. But if you look at it, economically, this is the worst time to sell the shares, because actually what the market is saying that the valuation of the round is underpricing these shares. So the best thing at that point would be to go to a private market and try to sell these shares, and this is what Symmetria is doing. The second pain point, and this is very painful, is the employee angle. The employee are getting those option plans as a sort of retention, but unless the company is right before the IPO, then they don't look at it as a real retention offer. And then, like, some of the employees, they leave the company, they find someone to finance the exercise price of those options and sell 80% of the exit rights to this someone. So it's like a lose-lose situation. The employee loses 80% of the exit rights, and the company loses their retention. And I think this is another very significant role of those private markets. And Symmetria has built a solution that offers a discrete model that we will just present of offering those securities without being affecting the valuation of the company and so on, and also a light solution.
Yeah, that's huge, and it's also something that until recently wasn't even legally possible, right? So you got this no action letter from the ISA, the Israeli Securities Authority, basically allowing you to do this. Can you talk about that a little more and give us some details? And also, what does that mean for the broader market? Because that doesn't just apply to Symmetria.
Yeah. As a legal professional, this is something which you have this idea in your mind for a long time, and then you have the opportunity to execute on this idea. And the idea was that, like you have in the States, bulletin board markets, and most of them were built, and there was like non-action letter that was granted in 96, 97, and Greg Porger after me would be probably happy to tell you more about it. So the same as you have in the States, those bulletin board markets, then we can do the same in Israel. And actually attach a blockchain settlement to this private market. So like a usual private market bulletin board would be two people meeting, shaking hands, and then the lawyers start exchanging documents, and like 2 or 3 months afterwards, the transaction is finally complete if it is completed. But when you take this information system, like this bulletin board, which is an information system, and you attach a blockchain settlement, meaning that we can meet online, I can shake your hands, and then send you the tokens of my security. You can send me the token of your USDC, Bitcoin, or token which is within the system, and the transaction is over. Okay, so
no paperwork, no delay,
no paperwork, and we see the demo in a second, and you see how it works. But like, there's no paperwork. The transaction is instant. It's not a stock market because there's no engine in between that matches those orders. Yeah, it's illegal stuff. And yes, you're right that we received a lot of support from the Israeli Securities Authority. They actually went out with a statement after we got this non-action letter. Something I never saw in the past. They went out with a statement saying like, digital securities market are the future of the financial market in Israel. They're not a distant dream. This was the CEO of the Securities Authority. So, we are very excited about it.
And that's some really great stuff, which is why we have invested in you. We're super stoked to be working with you. And we lost some time there in the beginning. I know you have a presentation ready, so
yeah, we're not doing a presentation. I'm sharing my screen. We'll do a very short demo of the technology that the Symmetria is developing. Okay, and just go over the process that that I'm going to present now. Do you see my screen? Okay, cool. Okay.
Yes.
So what the process that we're seeing now is a signaling process where a company want to signal to the market that it is selling some of its stock options, and it does it discreetly to very specific players in the market. Then this player can signal back in a discreet way that it is interested in buying those shares in what price. And then the company signs the transaction, the investor signs the transaction on their side, and the transaction is executed. So this is the company. This is the interested party, the stakeholders within the company that want to sell some of their shares. The company now approves some of those shares to be sold. It sets the floor price. That floor price is now reflecting a $70 million valuation to the company. It actually packs those shares. There's 236,000 shares. It packs those shares in blocks. So the ticket size would be smaller. Let's say it's 11 blocks. And then it can decide to lock those shares, and it sets a timeline for the signal to work. Then it is decided to release the signal to the internal investors in the company, to secondary market VC, V Capital, and through the FinP2P network. These are the only persons or entities that are going to see this offer. Also, it decides which information does it want to share with those investors. So not all the information from the data room is shared with those investors. This is the final outcome of the signal that the company created. It is confirmed. And now on the investor side, the investors see this signal. It can go into the data room. It can see some more information about the company. It can decide if it wants to invest or not, or to reply to this signal. It can decide to buy less than the 11 blocks that were offered. Let's say this investor want to buy 5 blocks, and also set the offer for the price that it want to buy those blocks, and reply to this signal. Then again, the company sees this offer to buy 5 blocks at a certain price, and a certain price per share. All the legal documents are clicked online, and this is actually signing the transaction. And this transaction is signed on the blockchain with all of the IOI, all of the signaling process, which is also documented into the tokens sold. And boom, the transaction is now signed by the company. The investor sees this transaction signed. It has about 5 hours to execute the transaction. You can see the clock here. It can review everything, all the information, and the blocks that the company approved to be sold. Then it signs the transaction document itself, and the transaction is closed when the tokens, which representing the shares, and the tokens representing the money, switch hands, and the cap table, of course, of both the company and the investor assets is updated. And now you can see secondary market VC is now a shareholder in the company. So yeah,
really cool. This is the first time I'm seeing this myself. I want to actually get another demo from you and dive into this a little more. This is really amazing stuff.
Yeah, what's cool about this process, like it's a very non-binding process. So, if you're a founder of a company, you just want to check out like how much people would be willing to pay for Draper Goren Holm shares, for example. Yeah, you can signal this to various participants upon our network and through FinP2P network, and then receive non-binding offers. And then only then you can sign, execute on the transaction. And I think that. That's really the way to go with private assets.
Really cool, man. Hey, thanks for chatting, and sorry again for the rocky start. This is very amazing. I'm looking forward to more great news from you.
Thanks, Joseph. Thanks.
Thank you.
Great
Take care.
Bye.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Well, a huge thank you to Joseph and Ziv there for our insights. Now we're halfway through the day, but don't go anywhere. We have some fantastic discussions coming up next. Our next guest made a recent headline with his startup acquisition for $160 million by Forge Global. So here to share his story and how private security marketplaces derive liquidity for digital securities, please welcome Greg Broger from SharesPost alongside Noel Aitken from CoinDesk.
Hi, everyone, and thanks very much for joining us for this fireside chat with Greg Broger, the CEO of SharesPost. I'm Noel Aitken, Managing Director of Research at CoinDesk, and I've been particularly looking forward to this session because it brings together traditional financial markets and the financial markets of tomorrow, and that is the area that I am most excited about in the cryptocurrency and blockchain industry, because it's where I think that the potential will have the biggest impact, not just on how we save and not just on how we invest and not just on how we raise funds, but how we function as a society, because capital markets are about so much more than number go up. They're about so much more than returns on portfolios. So Greg, seriously, thank you very much for being here.
Thanks, Noel. Thanks for having me. And thanks, obviously, to everyone who's making this broadcast and this event possible. It seems like it's been really interesting so far.
I certainly learned a lot so far, I must say, and I'm sure we're going to be learning a lot over the next 30 minutes. But Greg, before we dive into the topic at hand, let's zoom out and set some background. Tell us about SharesPost.
Sure. And one quick correction just on your introduction. Thank you for it. But so I'm no longer the CEO of SharesPost, as was mentioned. So with the Forge merger, it's now a subsidiary of Forge. But just maybe kind of going back a little bit into the story of SharesPost and how we launched it in 2009. It was just coming out of the financial crisis, and what we've sort of recognized there was that there were these somewhat tectonic-sized shifts in the capital markets, and you started to see the first companies, Google, and then of course Facebook, opting to defer their IPO. And as we looked into that, we thought what we might be seeing is the beginning of a long trend. And what most people don't recall is that Facebook was the first unicorn, and we called them a unicorn because they were the first of their kind and only one of their kind. So they were this sort of exotic animal, and obviously we bet that there would be many more to come. And now I think there's something approaching 600 with a total market cap of over $2 trillion. So the world has certainly changed.
It certainly has. And I know that you've been part of that change. You've been looking at security tokens for some time. Mm-hmm. I remember a couple of years ago reading about the work that SharesPost was doing with digital tokens. And I got really excited because, as I mentioned before, it's about bringing the two worlds together, the capital markets of yesterday and those of tomorrow. So walk us through the journey between starting to look at this new type of financing to where you are today. Why and how has it evolved?
Sure. Yeah, I think, the root driver for so much of this innovation is just frankly how bad the private market has been historically, right? So if you go back a decade and you look at venture-backed assets, private growth companies, it was sort of a backwater of private equity. And so a lot of the attention and technology and focus that are brought to it now is only because it's become big enough to deserve that amount of attention, right? The size of the asset, the demand for liquidity, and that's because private companies are staying private longer. So I think that's been the primary motivation. And in that world of 10 years ago, all of the secondary trading, all of the liquidity and much of the primary financing was held in a really tight-knit group of people that lived on Sand Hill Road or worked on Sand Hill Road in Silicon Valley. And outside of that very network community, very few people had access, and only companies with connections to that capital could really raise meaningful chunks of capital. So there was enormous pressure to a demand to globalize and make far more efficient and kind of break out and democratize access to these companies. And what we've seen is a steady movement on a bunch of fronts towards that end. I think it's, you look at any financial market and it may struggle, it may have fits and starts and troughs and valleys, but it's like water seeking its own level. So there's more and more data coming into the market. There's more and more transactional efficiency. There's more and more educated investors that know how to value these companies. And all of that is sort of a groundswell. And I think, frankly, digital securities, and not just digital securities, but digital securities tied to networks that can allow the integration and participation of existing major financial institutions, the largest investment banks, that's the next evolution. And that's what we're working on now.
Well, before we go on to the next evolution, pulling back a bit, you mentioned that private companies are staying private longer. Why is that? What are the inefficiencies in the market that have led to that situation?
Sure. So I think there's a bunch of different ways to look at it, either from a market structure or regulatory or founder preference. I think is actually one of the least discussed. But at the root, I think it's just the public markets have grown increasingly inhospitable to private growth companies, and because they become so much or so oriented towards quarterly earnings reports and sort of short-term discrepancies between forecasts and actual earnings as they come in, it's just very difficult for a company that's still in a hyper growth stage. So think of the most successful companies that we're talking about, from the Coinbases to Facebook back in its day, Uber in its day. These are companies growing at 50 and 100% per year. And so it's just not a good fit to ask that kind of company to know where its next quarter, its next 90 days, exactly to the penny what its earnings are going to be. And it may be even something broader than that, which is, I think, increasingly these companies with the greatest opportunities to kind of change the world, those opportunities don't come in 9-day increments. They come in a year or 2 year. So it's really not an opportunity that's well suited for the day traders that you find in the public markets. Really, one of the great advantages for private companies to remain private is the investment horizon of people putting capital to work is 1 year, 2 year. It's a bet on whether the company will bring a new technology to market or open a new geographic region for its business. It's not, as I said, based on these very technical public market type valuations on very small increments of value.
Yeah, and speaking of valuations, many of these companies don't even have earnings that
Right.
we can project going forward.
Right. Yes, and so I think one of the topics I'm guessing that we're likely to get to at some point is a discussion of how SPACs interact with that and how they're impacting the private market. I mean, it is definitely a phenomenon of some size.
Yeah, exactly. You read my mind. That's exactly what I was going to ask you next. What do you make of the surge of SPACs? And why and why now?
Sure. Well, I mean, SPACs have been around, of course, for a long time, and I think part of the why now is there's so much capital, seeking access to growth equity returns, and of course, growth equity returns are increasingly as there's been fewer and fewer public companies, and certainly fewer and fewer growth companies because they're all staying private. The pressure or demand for all kinds of investors for growth equity type returns, you just can't find that in the public market anymore. You have to come to the private market. And then if you kind of layer onto that the low interest rates and just the amount of capital being sort of steered into the equity markets by the Fed, just the economic conditions that we're in, and then layer on top of that this sort of pandemic driven explosion of day trading and more retail type investors getting into the market, it's kind of a perfect storm.
Nothing else to do, so I'll stay at home and trade. And again, pushing out on the risk curve as well. If we're not going to be getting yield, we might as well go for returns, and that does involve a higher risk. And when you're talking about private companies that you mentioned before, especially those without clear earnings path, and you have SPACs swooping in to offer them financing, how does that change the financing profile of, say, a mid-sized tech company that's just getting started?
Well, I think it's not even as you said, it's not even really mid-sized companies. I'm hearing about Series B preferred stock, preferred financing companies that are like 2 years old, 3 years old, preparing now to be a public company. And I think it's very difficult for a management team or a board or shareholders when that amount of money, when you're a Series B company and a SPAC shows up and says, "I've got $200 million raised," you're not going to hear no a lot to that. I mean, it so de-risks the company. It's really only going to be the companies that are strongest, that have are most confident in their access to capital, which many times is going to be because of the quality of the VCs and the depth of their pockets. But for anybody other than that very top of the pyramid type company, it's going to be hard to say no. I guess the challenge is there's still only so many good Series B companies, and you now have a lot more money chasing those companies. And so, I think I'm not exactly sure how this SPAC market's going to end, but if too much money chases too few deals, it doesn't tend to end well. And I think what these companies also have to consider is, yes, there is a flood of capital when they close a SPAC, but then they are a publicly reporting company. And do they have the infrastructure to be a publicly reported company? Do they have the stability? Do they really think, will they be able to generate sustained investor interest of a kind that will drive future liquidity as a public company? Because there's many, many public companies that have an exciting debut, but then a year or two later are somewhat orphaned. So, I think one of the paths, and I think as you know, I'm now on the board of a company called Onera that's championing a version of a digital security that I think fits very neatly into the capital stack of these kind of, call it mid-range Series B to Series C, D, E type companies. So maybe $200 to $500 million in market cap that might give them the benefit of liquidity and efficiency and scalability in their access to capital, but without the burden of being a publicly reporting company.
We saw earlier today the reveal of FinP2P, which is fascinating, bringing in all the different blockchains that have been working on securities tokens for some time. So it sounds like the missing piece, as it were. But how does that then, in your view, facilitate not only a fairer access to the financing, but also a better deal for the investors?
Sure. Well, I mean, I think it's certainly superior from the company's perspective, just because of the level of distribution that they get. So if I think as Onera and the FinP2P working group have just done an amazing job of bringing together. I don't know what the final number, but last time I looked at something like 80 kind of major global financial institutions are now in one form or fashion supporting or integrating into it. What that means is, rather for a founder raising capital, is rather than the network of who I know or who I've done business with in the past that I can go out to for money, I can now gain access to thousands of investors and essentially that hold unlimited amounts of capital. And that doesn't mean every company will raise money, and it doesn't mean every one of the institutions on the network will choose to distribute a particular offering within its clients, because it's a very permission-oriented sort of system. But just that basic infrastructure competes so favorably with what the private market process of a financing is. And any of the people watching who've conducted this will know what that means. I mean, that's months of meetings, schlepping from one VC to the next VC, putting up a PowerPoint. It's a very protracted process. The legal expenses are quite substantial. And so all of that expense and time is a distraction from the building of the business. So if you're asking how do investors benefit, I think they benefit from the exposure to many more deals than they would otherwise see, significantly faster, more efficient transactions with lower transaction costs. And then the big win, of course, is secondary liquidity is sort of baked into the nature of the digital security class with this FinP2P network and the institutions that are on it. And so we talk about a company like Coinbase, and right now, essentially what they're doing, unfortunately, these, a version of the manual auctions that we did on NASDAQ Private Markets. That was part of my background, was as the original president of NASDAQ Private Market. Essentially it is an auction-based system of a kind that you could just run on an Excel spreadsheet. It hasn't fundamentally moved forward the operation of a market, right? Connection and settlement and clearing. It's just the scale at which they're running the same old process.
And when you go back to what markets were originally for, which is price discovery, let alone access to savings and financing, we get a sense of how they sort of lost their way. And you know more about private markets than pretty much anybody out there today. So we see that this is better for the issuers, and that's therefore better for the investors because they have more choice, because it's better for the issuers, and the cost as well. But what about habits? I mean, how do you go about changing habits? People don't like that generally.
Yes, yeah, and it's habits that have made the existing players, enormous amounts of profit, and so they're, the winners in the existing game are always the last ones to choose to start the next game, right? And so that's the transition we're at. And in addition, just to inertia and the way that these, the largest investment banks and others are sort of organized around existing lines of business where people are doing quite well and therefore not particularly motivated to shake things up. You have a regulatory overlay, and that, if you're trying to get people to do new things, based on some combination of fear and greed, there's the fear aspect around for the issuers and counselors around what the SEC, I'm just focusing from a U.S. perspective, but how the SEC might look at this stuff. Particularly when they came out so strongly in opposition to it initially, it just created this cloud. And so I think it's taken us to the point where we are now, where there's so much infrastructure, so many players from all different sort of levels, from the largest institutions to the smallest startup, that are just waiting and clamoring. I think it's for the first time we're going to start to see some companies go first, issue digital securities. We just need a couple of success cases to really broaden it enormously. And we saw that in 2009 with the first Facebook trading on SharesPost. So it can happen very quickly when it happens. And so I think those that are laying the groundwork for it, are well positioned and doing us all a great service, because it takes a certain kind of bravery to go into a market that doesn't yet exist but should, and push for it to come into being.
And we are seeing some digital securities already starting to trade. The brave souls like INX, for instance, that actually went through all the right hoops, and more power to them. Many in our sector criticized Coinbase for not, taking that step, issuing a security token rather than going the traditional IPO route. And they do have a provision in their S1 that opens the door to that in the future. What do you think their reasoning was there?
Well, I'm purely speculating, and obviously I wouldn't speak for anybody at Coinbase or for Coinbase, but I do think, it doesn't surprise me, I guess is what I would say, which is, I think maybe Coinbase, or boards and management are beholden to the shareholders, and that's where their duty lies. And so if there is a somewhat riskless way to accomplish many of the same goals that you would get from digital security, it's risk avoidance, I guess is how I'd put it. Maybe they feel they've done enough innovative on the cryptocurrency side that they don't need to also simultaneously put things at risk by blazing a trail on the digital security side. So, I think it's a company like Coinbase will have all the market attention and support from financial institutions that a public company could want. And so for Coinbase, what incremental benefit do they get from a digital security offering to offset the risk of doing something new with such a gigantic or enormously valuable company?
Absolutely. The size was no doubt part of it. And what I mentioned before about habits, they want to go to where the investors are rather than force them to come where you are. Incremental change. Do you see platforms such as, FinP2P influencing IPOs, the number on size of going forward?
So you said of IP hosts?
IPOs, yes.
Oh, IPOs. Certainly over time. And I think, you can, and all of these conversations that we have with the largest institutions, I genuinely, and maybe it's a self-selecting crowd, maybe the people at these institutions that I'm talking to are already, they've drunk the Kool-Aid. So we're all just reinforcing each other's beliefs. But there's nobody who doesn't believe that digital securities are the future. And again, it's because the competitive solution to that is so bad, right? It's, as I think Ziv was describing on the prior panel, it's, you know, weeks of negotiation on customized documents with expensive brokers and expensive lawyers, and then maybe it closes in 90 days. That's so horrible. There's so much pressure to come up with a better solution. So for everybody I know, it's not a question of if, but when. But there's a lot that needs to come together, both on the regulatory side, the technology side, the banks, the issuers. There's a lot that needs to come together. It's not going to have, I think, an immediate impact on the IPO market, meaning I think it'll be probably some number of mid-sized companies. It's not going to be Coinbase that goes first. It's going to be a $300 or $400 or $500 million market cap company. Then there'll be 2 or 3 more behind that. And, you know, and if those companies have a successful outcome, then you've de-risked, obviously, that path for all the other thousands of startups coming after them. So if we start to see the first digital securities transactions happening in scale now, I think the impact on the IPO market would probably be something like 3 to 4 years from now.
That's pretty fast in itself. And Hester Peirce this morning, Commissioner Hester Peirce said this morning on her session that she saw a future of digital securities. She believes where it's heading. What are the regulatory roadblocks? What will they most grapple with, in your opinion?
Yeah. Well, there are a bunch, or there have been a bunch, but they've been sort of slowly, very slowly, sort of addressing them one by one. I think one of the impediments that people within the industry were very concerned about or focused on, and maybe less so outside, was the custodial requirements. And I can speak, from SharesPost experience. We were obviously a registered broker dealer and an alternative trading system. And we spent a year or 2 working with the SEC to try and define rules that would allow broker dealers to hold these securities. And that's particularly important. It's not just a convenience, but part of the American securities laws, I think it's under Dodd-Frank, require that institutions custody their securities, or they can't self-custody. So they can't, BlackRock cannot just hold their clients' securities in a BlackRock digital wallet. That needs to be a much more robust system. But the rules for that just took forever to create. And so now there's been the first little daylight there, where there's a sort of now a quote special broker-dealer designation that a separate broker-dealer can get that will allow them to custody client securities. And that means institutional money can come into the market.
Yeah, because the institutions aren't going to come in until they're clear, they're totally sure that they're not breaking anything, because you don't need that sort of headache. So jurisdictions, do you see a future perhaps of cross-border issuances? Jurisdictional rules vary very widely.
Mm-hmm. No, absolutely. And I think, that's a real area of focus at SharesPost, right? So the way that we thought we could be helpful to the evolution of the market was to create a cross-border trading solution where there would be a broker dealer in each jurisdiction that would be responsible for clearing the overall network's securities transactions. And that way you'd always have a compliant transaction, and the regulators in each jurisdiction would know who to hold accountable if it wasn't. In a sense, that's what the team at Onera and FinP2P has accomplished, because the only nodes on the network will be registered broker dealers. And so each other node can have some comfort that the compliance on both ends of the transaction are being satisfied. So I think that's something that we'll see. And I think what we're really waiting for just to prove that out, again, is enough digital securities to be issued that the trading platforms want to incorporate digital securities, and I think we'll connect into a network like FinP2P.
And connecting different jurisdictions not only opens up the pool of potential issuers to a much broader range, also the pool of potential investors to a much broader range. And do you foresee this perhaps one day being used by, say, multinational corporations that generally have to choose very carefully where they issue and how they raise finance, like perhaps to raise individual financing for a particular project?
Yes, and it's interesting when you say multinational corporation. Of course, I always think of a public company, so it's not an immediate thought around where digital securities might be. But as you said, the project finance side of things is really interesting, right? And very, or I think potentially a very good fit for what digital securities can be, meaning having a very specific, like an infrastructure project where you're trying to, whatever, raise the capital to, build a wind farm or a dam or whatever that might be. The ability to be very targeted in the placement of those securities, do it as a private placement, so it doesn't make sense for that kind of project to be a publicly reporting company, and yet you could have the backing of a publicly reporting company behind that. And so, thinking through all the different ways that the efficiency and the secondary liquidity that is available using a digital security, trading on a network of the kinds that we're talking about, like FinP2P, I think could be an enormously useful tool to them. Could make it a great deal more efficient.
And the accounting clarity would certainly probably be a bonus as well.
And the audit trail, yes.
Exactly. And we've been talking, and also knowing who the investors are, with clarity as well. We've been talking about digital securities, which from what I'm hearing, at least what will be running on the FinP2P platform, are in between private equity and public equity. They're more liquid than private equity, but they're more restricted than public equity. So let's call them sort of vanilla digital securities for now, as in they share the characteristics of traditional equity. But what about the programmable aspect of digital securities? What role do you see that having? In other words, what other formats do you see emerging?
Well, I think my slice of the market is probably pretty narrow compared to certainly the sorts of people that are at the summit today, and so the applications for the programmability of the token is maybe something I'm less familiar with. But I guess what I think is interesting, or the way you can customize a digital security to solve the problem of a private growth company, is that it can live within a private cap table, meaning you could have a series of different financings that the company's already had or has in the future in a very traditional way. So Series A, B, C, D type preferred stock. And what a company might elect to do is to say, and we're going to create now a new share class, a digital security that sits in sort of its own tier in the cap table. And this will be the liquidity solution. I won't have to do tender offers. I won't have to go into the marketplace. I won't have to lose control as brokers begin to trade my shares. Rather, I can control this one class because I can decide how many shares convert, whether from common or Series A, B, or C. And all of the people taking advantage of that ability to convert are doing so because they want liquidity. And in return for that, they're giving up their preferred stock rights, so information rights and voting rights, which they don't need if their purpose is really just to sell on the secondary market. So it's probably a pretty simple solution, or I should say maybe it's not a technology-driven solution, but I just think it compares so favorably to the traditional kind of company-centric liquidity programs that are being run now, which are really, again, inefficient. They run once a year, they have to be sponsored by the company, they have to match buyers and sellers, and so and raise the capital. And so what you're talking about here is allowing a market to operate tied into this sort of broad institution over the FinP2P network, but still bringing liquidity to the company.
And what about debt?
Mm-hmm.
You see this platform being used for debt issuance one day?
I think so, and I think that the fixed income market in some way or many ways I think has trailed the development of, what was a harbinger of what happened in the private market. So it used to be fixed income used to be very kind of OTC manual business, and then it just got gradually more and more efficient to the point where now you have global trading system and things can move digitally. I think there's a lot more progress that can be made there, and I think digital or tokenization is a solution. I think the other great area that people are getting excited about in the private equity world is tokenizing funds, because a lack of liquidity has been a huge problem for investors in this market. So the typical VC fund, as most people are going to know, is a 10-year fund, but as a more practical matter, they get stretched out to 12 years and sometimes 15 years with no secondary liquidity. And so tokenizing the fund and allowing all or some of the fund interest to trade makes it much easier to raise capital because you've removed that huge impediment to investors putting money in the first place. If I'm going to be locked up for 10 years, it's just not an investment horizon I can support. But if I can invest in that fund and get out at year 1, 2, 3, or 4, or 5, it's so much more flexible than I'll choose to add it to my portfolio.
certainly more flexible for investors. And we run out of time, but I can't let you go without asking you what you think of the latest NFT boom, and do you see any future overlap between NFTs and digital securities?
I think, again, an area where my knowledge is limited, but it seems that what drives that market, it seems much more like the market for art. It's the joy or the satisfaction in owning something unique. It's the baseball card. It's the crypto kitty equivalent of it. But art has real value, right? So as we've seen, art has been the highest appreciating assets, more than stocks, bonds, real estate, et cetera, over the last 20 years. So it's not a market I understand. It's not a market I'm investing in, but I don't expect it to go away. And I'm going to have a lot of fun watching it.
Again, like we were talking about before, bringing liquidity to previously illiquid situations. Greg, thank you so much. I could talk to you all day, but we do need to move on because there's still so much to get through in this session. Thank you very much, and thank you all for joining us.
Thanks, Noelle. Greatly appreciate it. Great to meet you.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Great discussion there. Thank you both. Now, have you ever wondered how to enable more capital efficiency to enable greater liquidity to digital securities? Well, our next group of guests will answer just that. Please welcome Ting Peng of Cointelegraph China, as she leads the discussion with Luke Falman of TokenWise Solutions, Alexander Shushenko of VNX, Brian Mint of Republic, and Dan Doney of Securities.
Thank you, Jessica, for the introduction. Hi, everyone. My name is Ting, Chief Editor at Cointelegraph China. I'm super excited to be here with Brian, Alex, and Dan. We know all three of you are building something really interesting here, such as exchanges, fundraising, and tokenization platforms for digital securities ever since 2018. I think we'll have a lot of insightful thoughts from you today for today's topic. Before we start, Ryan, Alex, Dan, could you please introduce yourself to our audience?
Yeah,
Ryan,
definitely.
would you like to go first?
Yeah, for sure. Thank you, Ting. And thank you, everybody at Security Token Summit. My name is Brian. I'm the co-founder of Republic Crypto, the blockchain arm of Republic. And we are essentially a fundraising platform. We focus on fundraising for all sorts of projects, whether it's tech startups, real estate, gaming, food, and also crypto. We aim to provide a platform in which anybody, whether they're retail or accredited, is able to invest in private equity and startups. So particularly we focus on, at least my team focuses on the crypto projects, those that are using blockchain technology. And we host compliant token sales and allow people to really participate in getting access to the blockchain ecosystem and investing in tokens. We also have an advisory arm that takes projects in and incubates them to become more mature, and really just trying to support the blockchain ecosystem as a whole. So happy to be here.
Great, thank you. Alex, could you introduce
Hello, my name is and thank you very much for inviting me to speak here. I'm a founder of VNX. VNX is a Luxembourg-based asset-backed token issuance platform. We're focusing on the VC industry and tokenization of the VC deals, syndication of the deals. And we've been in this space for a number of the years, and we were lucky enough to be completing the first VC deal in Europe.
Thank you. Dan?
Yes, I'm Dan Doney. Thanks, Ting. The CEO of Securrency. We're a blockchain-based financial service infrastructure company. We're focused on the tokenization of exchange-traded funds, publicly traded instruments, really trying to bring institutional value, institutional assets into the blockchain space. You're muted, Ting.
Ting, I think you need to unmute.
If you can unmute yourself.
There's a button below that you need to click to unmute yourself. Yes, perfect.
Okay, thank you. Okay, cool, I'm back. So by looking at today's topic, we know we're asking how to enable more capital to the digital securities here. And so I'd like to start with the background questions here. What is the current landscape of the digital securities first? We know it's been a trendy topic for many years, but we still haven't seen significant traction in the financial world and in blockchain. And why is that?
Yeah, that's a great question. I mean, I kind of kick it off. I think for Republic, we've actually been looking at, sitting at the intersection of compliance and tokens and fintech. Security tokens have been something we've been looking at for a very long time. We totally support the movement of digitizing securities. I think that one of the main reasons why adoption has been a little bit slow is because liquidity for these digitized securities or security tokens, or however you want to call them, the liquidity just isn't really there yet. Although I would say, there are many projects that are addressing this. And once there's liquidity, basically a way for people that have these security tokens to exit positions or trade or just do something with them aside from owning them. Once that is solved, we're going to see a little bit more action. At least that's my personal opinion on why it's kind of a little bit slow right now.
Okay, and Alex?
My personal feeling is that there's a number of things that hold the development of the security tokens. I would probably say that two, in my view, are the most important. Again, I'm speaking from Europe, so obviously the situation is different in many other parts of the world. But in my view, that regulation is the number one. It's not the impediment per se, but it's the thing makes a lot of people very cautious, and security laws are different, especially in Europe, in many places, country by country, and still, that's probably number one reason why we don't see a much wider acceptance or adoption. But second one is that generally the early stage of the development of the blockchain technologies, therefore the number of the people with crypto wallets, for example, in Europe is still not that high. That's probably, in my view, the second reason why we don't see much more widespread adoption.
Alex, I actually have a question for you, because you're in Europe and I'm here in America. And I've always thought that America had the strictest regulations and is very tough to do anything digital security related here. And that's why a lot of projects are actually moving away from America and doing it overseas in Europe or in Asia. And you just mentioned that in Europe, it's also the regulations a little bit tough there too. Like, what exactly is tough there? I'm curious, because we speak with a lot of projects around the world.
Well, here, the biggest kind of issue that you see if you're trying to address the European market is that although there is, of course, an EU regulation, the regulator country by country may have different interpretations. That's one. At the same time, there is a number of the countries that, for example, are not members of the EU, and that is, for example, Switzerland. So you still have a certain patchwork of the regulations and regulators who may take one or another position on a particular aspect of the pan-European laws. So that's one thing that a project needs to do, is to navigate that patchwork of the laws. But secondly, Europe, like the United States, is a well-developed economy, and obviously the regulators here are quite concerned about the, protecting the overall public, and therefore they have a quite cautious approach to issues such as digital securities. Plus, if you take into account that Europe is 27 countries, or European Union is 27 countries, to reach something new, to enact something new, you need almost an unanimous approach, which means that to change the legislation or to move it forward, you really need to have almost a consensus, which shows the speed of adoption of the new technologies or the new principles. That's probably the three things that that in Europe.
Thank you. That was helpful.
And Dan, would you like to add on top of that?
Yes, I'm just going to build on both of Brian and Alex's comments there, because there are two principal issues as we see it. Liquidity, as Brian said, is a key issue, and the centerpiece there is the ability to price the assets. So most of the folks in the tokenization space to date have focused on hard to price assets. So for example, a piece of real estate in a particular location, trading those freely on an open exchange. If you don't know, for example, that there was mold found in the real estate, then you're the last one to know. It's difficult because private assets don't have the kind of information requirements that public assets do. So we see the entrance of publicly traded assets, which are easy to price, have brothers and sisters on free exchanges, is bringing a new type of liquidity into the space that allows institutional value to come in and then trade from there with other assets that happen to be in the space. So that's number one. And the second is security tokens really to date are not global instruments. So they are targeting each individual jurisdiction. Blockchain by its nature is global. So it's really the limitation. It's easy to tokenize a thing. It's easy to create a token. Making that token global is the more important piece. And this is why we focused on the global, the ability to actually map global securities regulations and then automate their enforcement in tokenized form.
Yeah, I agree with that a lot because, you know, if you look at DeFi, which is the opposite of kind of security tokens, it's super global. Everybody has access to do it. Anyone with the internet can just kind of go in and trade. I kind of want that to happen with securities in the future, but in a compliant, regulated way. Just don't know how it's going to happen, but I hope that's a future that we're going to live in.
Yeah, Brian, it's no question. This is where we focused actually the longest and hardest on how you can make the compliance piece global. So you simply produce a token, attach a global regulatory framework, and then from there, it can trade freely without the need for centralization. And that's, I think, moving security tokens to where, like you said, DeFi is.
Right.
Mm-hmm. And so we're talking about liquidity is the main issue here for digital securities to go wider. So the next question is how can we enable more capital into digital securities? Is there any particular industry or sector you think is especially suited for digital securities that can bring this liquidity?
Do you mind if I start on this? There's no question that debt is the big target. And if you want evidence of it, just look at the DeFi world, where effectively yield farming is producing massive value in the space. Debt markets are historically quite slow and inefficient, and actually enabling the combination of programmable assets and the liquidity where people can simply seek yield is the real, we think, big play for securities tokens. That's the place where it will accelerate the fastest. If you look at DeFi instruments, you could probably argue that they are, in fact, securities in many cases. And so there's likely to be a regulatory pushback on that industry. And then you'll see these two markets come together, security tokens in their framework and programmable assets or DeFi instruments as one.
Yep, I agree with you, Dan. I think debt and a lot of the kind of digital instruments that DeFi is looking to represent and address are going to be big targets for digital securities. I also am seeing, just to build on top of that, I think that in addition to kind of like these traditional digital instruments that are becoming, or traditional instruments that are becoming digitized, I think that we're going to see new applications of digital securities. So think of something that is profit sharing, some sort of security framework, but also includes utility token-like components. So if you want to look at a platform that's looking to engage its customers through a typical utility token framework, but they also want to give the users upside, give them profits, give them dividends or something like that, which is something that I think is uniquely enabled through crypto and tokens. That's totally a security, but is nothing that fits in the frameworks that we see today. And I think as there's more innovation there, we're going to see more people build on top of that, disrupt more things, and then more and more new capital flowing into that.
And I might add that probably the sector that we have focused, venture capital industry, is for sure not the largest from the amount of the capital committed. And it's for sure probably not going to be the game changer per se for the blockchain industry. But in my view, this is a very important sector because it brings liquidity to early investors, especially for the early investors or early stage funds, etc., that are investing. Early liquidity or potentially to trade allows them to invest more. And that creates the cycle for entrepreneurship, for more kind of deals to be made in the space, especially at the early stage. I'm not speaking about $500 million VC deals, etc., which in turn will allow more people to start companies, etc. So we are focused on this sector, although it's probably not the largest. But I personally feel that would make a great contribution to the society and to the business. So we'll be trying to achieve what we've started here.
Right, and so one of the other factors you also mentioned was the regulation that is not fully open for digital securities here. So what do you think the current political and economic landscape could that strengthen the case for digital securities and accelerates their adoptions? Is that now the time here?
Here, probably I can start. I think there are two aspects here, or at least there is a number of the aspects, but one of the key aspects is the harmonization of the approach to the regulation, or at least agreement on the basic principles that would be necessary to have this fantastic tool, global reach of the blockchain truly utilized, where, for example, a fund which has raised capital, invested in Europe, can actually provide opportunity for the secondary exit to the people in Asia who quite like the startups that the fund has invested. So a certain agreement on a set of rules, at least the basic, is probably very important. And the second component is the technical implementation. So having the standards that would allow the transfer of the principles that have been embedded in the token, for example, in Europe, to be recognized and reconciled to, what it is in Asia, in the US. That's also very important. So creation of these two things, in my view, will greatly help adoption and development of the ecosystem.
Yes, we're seeing a huge tailwind driving progress here, even amongst the regulators. A perfect example of this is the GameStop Robinhood challenge. And there's a very clear, Congress in the US is pressing very hard on the regulators to fix the T2 problem. The root cause of the stoppage of trading in the Robinhood case was the fact that there's 2-day later clearing, and that caused systemic risk problems. So the regulator said, enough is enough. We've got to reduce clearing times. You simply cannot clear when you have a whole bunch of databases that are spread about in a whole bunch of other people's systems. You cannot clear T0. And the big clearinghouses know it. So they're driving hard to incorporate blockchain into their models. I know DTCC is pushing hard because it's the only way the reconciliation across a broad marketplace, the only tool that you can use to make that happen is blockchain. So it's that pressure that's forcing people to take these things very seriously. And we're seeing the regulators embrace the kinds of change that are driven by blockchain-based control locations.
Yep. I mean, I agree with both Alex and Dan. There's a lot of really good progress that's being made on regulators because they see the value of blockchain technology and how it can improve settlement times and just general efficiency across digital markets. But I guess I want to point out that through working across Europe and Asia and America, there are a lot of differences in terms of how securities are handled, how users are verified, accredited, KYC'd, how they're able to handle digital securities and what the definition of a security even is. And that standardization that Alex was mentioning, I think is going to be super, super crucial. Although I'm not sure if we're going to come to an agreement anytime soon on whether or not there is going to be a standard. But I know there are people working on it. So that's where I see is like one of the major bottlenecks, the standardization of regulation.
Mm-hmm. Well, you all mentioning that it's happening globally, and all governments are trying to push this forward. Now there's growing up a number of initiatives in the US, Europe, and Asia, as you mentioned, that aims at making digitalized securities in reality, such as STOs, digital security exchanges, and etc. And in your opinion, who's leading this field, and where do you see digitized securities prevail first, and with what consequences? Brian,
I can go ahead. So I think that there's a number of players that are addressing digital securities. Here in the United States, I think Securitize is a pretty big player in the space. I'm also gonna, shout out to our own company at Republic. We're looking to we are issuing a digital security for our user base. So a lot of projects are definitely exploring this. There's also a number of exchanges out there, such as T0, Open Finance, that are looking to provide liquidity. And I think there's a few more coming online by the end of the year. So I think we're still so early that there isn't really a market leader yet. So I wouldn't really classify anybody a leader, but everybody is working towards the same goal of just trying to build out this infrastructure and support everybody. And then, as most people say in crypto, the rising tide lifts all boats. So I think that's kind of where we're at with digital securities, where everybody's still on the same team of trying to make all of this work.
Fantastic. Dan and Alex, do you have something to add on this topic?
Yes. So, when you look at the various jurisdictions and the progress that's being made, and certainly there's a lot of emphasis on central bank digital currencies, even globally, lots of progress in Asia on the topic, but there are, I think, now more than 40 countries who are engaged in central bank digital currency work and associated work associated with securities. Same thing in Europe. You see, principals who are moving forward. All three jurisdictions are moving briskly into the space, recognizing the importance of capital formation. But the real leaders, the place where things will likely transform first is actually in the developing world. As you see that there's a bit more risk tolerance and there's a much greater need for efficiency in capital formation. So you're seeing, we happen to have offices in the Middle East, just tremendous progress and both very sophisticated regulation and aggressive moves into the space by regulators. So we actually see it's those settings that are likely to gain the biggest advantages first.
Mm-hmm. And I think we're running out of time, and I have my last question for you guys. How much of the current crypto bull market can affect the adoption of digitalized securities? Are both sectors necessarily correlated? What's your opinion on this? Alex, would you like to go first?
Yes, thank you. In my view, it supports the adoption of the blockchain in principle. You see, like it was in 2017, a huge number of people trying to open the wallets, trying for the first time to buy their Bitcoins or Ethereums. And I think it's a first step to familiarize themselves with the blockchain as a whole, which would eventually lead them to try digital securities. Therefore, yes, I think it's a very, very important and positive factor for the development of the ecosystem.
Mm-hmm. Great.
Yeah, I'd agree. The more people that have wallets, the easier it is for folks to engage with blockchain-based securities. And so there's clearly a intersection between the two. But I actually think for the benefit of both sides, the less correlated they are, the better it is for both crypto and for securities. As you ultimately want to see in the end an industry that stands on its own, and where the securities world is really what is the investment thesis. And that really should have nothing to do with specifically an asset class that rides over those rails.
Yep. Yeah, I think you guys kind of nailed it. I think crypto bull market obviously helps everybody in terms of recognition and understanding that blockchain is here to stay. But ultimately, we're bridging traditional markets with crypto markets, and eventually they're going to have to stand on their own and not be correlated. So I think we're on the cusp, and I think it's within a matter of just within a year, that this is all going to happen.
Wow. Fantastic discussion. Thank you guys so much for your insights. I hope we're having this discussion again in the future and see what happens with digital securities.
Thank you.
Thank you.
Thanks, Ting.
Thank you so much.
Thanks, Ting. And Brian, thank you.
Right.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
So now, what goes into making secondary markets for financial instruments much more efficient, also more transparent, and even just more secure? Well, to help us answer just that, please welcome Philip Peters of Zagazo as he leads a discussion with Jim Needham of Merge Exchange, Graham Rodford of Architect, and Ziv Kian of Symmetria.
Oh, brilliant. Hello there, in digital world, digital land. Are you hearing me?
Hey, hello. Hey, you are.
Brilliant. My name is Philip Peters, and I am the founder and CEO of CityQuants Corporation. I have the distinguished privilege and honor to have an august set of leaders and CEOs who are running platforms and exchanges. I was originally carded to present work that we are doing at our firm, but I think this opportunity was better, so we'd have to postpone other things we are doing. But just to say briefly, I'll just give a very short introduction as to who I am, and then I'll have the guys introduce themselves. We're based in Miami, and we are digital platform company that takes cities' data and convert them into financial applications. And we do have a blockchain project called the PEV protocol that is will be taking all of this data from a city, creating a valuation of the city, and then converting it into tokens. And voila, we have the trading of cities as equities to have a comparative competition for municipal labor markets. That's my spiel in terms of what we are doing with the PEV protocol. But what we have with us today are 4 executives who have already launched platforms. One in Luxembourg, that's Luke, Graham, based in London, and Jim, I guess in Seychelles and London. And then, of course, we have Ziv, who is based in the Holy Land, and I guess Silicon Valley also, yes?
Tel Aviv.
So welcome, you gentlemen, and we welcome the audience. Those, I guess, all over the world, 15 to 20 plus thousand people have tuned in to hear what we have to say on the topic of security tokens and secondary markets. So can we start with Jim? If you can just spend a little time and just discuss what you're about, your background, and then we'll go on to Luke, Graham, and then Ziv.
Sure.
Okay.
Hi, Phil. Thanks for the intro, and it's great to be here. It's been a fantastic summit so far. But my name is Jim Needham. I'm the head of strategy at Merge Exchange. We're a stock exchange operator based out of the Seychelles that is supporting traditional securities and digital securities. And I suppose our mantra is that we're trying to combine the best of the traditional world and the sort of forward-thinking digital world into one venue.
Mm-hmm. Jim, you came originally from the legal background, and you quickly went on to capital markets, it looks like, from what I see from your background.
Oh, you've been doing your research. Yes, exactly. Yeah. So I got a sort of traditional banking capital markets background, like you say. And I guess started to transition into this world in about 2016. I ended up doing I did a course on blockchain that Oxford University were running, and that sent me down the rabbit hole, as they say.
Nicely. And Luke, I've been fighting to try to pronounce Luke's last name for the entire day, but allow him to do it for us.
It's pretty simple, actually. It's Luc Falampin. I'm French, as you can notice, but you can pronounce it as you want. So thank you very much for having me today. It's a pleasure. It's a great summit, actually, very impressive for an online event. We had a lot of online events this year, but this one is quite impressive. Yeah. So quick word about Tokeny. So since 2017, we help financial institutions to represent their asset on the blockchain. So we provide the technology to basically issue, manage, transfer, and even distribute securities on the blockchain. So we are our headquarters is in Luxembourg, but we have clients all around the world. As a technology provider, we are agnostic in terms of asset and region. So more and more it's growing, and we are backed by the Euronext group, which is the pan-European stock exchange group with 6 or 7 stock exchanges in Europe.
And look, I see your background is both undergraduate and graduate in marketing, and I guess you moved straight into technology.
Yeah, exactly. I have a Bachelor of Business Administration in Finance and Marketing, and then I got an MBA in e-business more than 10 years ago. So e-business was very different 10 years ago. And then I started the first company, sold it in 2017, and started Token.
Beautiful. And Graham?
Hi, Philip. Yeah, thanks for having me. Yeah, thanks, Draper Goren Holm as well. I think the other guys have said it, but it's been a great event. Yeah, I'm Graham Rodford, so CEO and co-founder of Archax. So we are the UK's first regulated digital asset exchange, custodian and broker, and the UK's first crypto asset registered provider as well. We started a few years ago to try and be a credible bridge for institutions to enter the crypto asset world and try and improve accessibility to capital markets for SMEs, companies and investors as well.
Well, Graham, unique about you, I see you have the capacity or the history of moving between the regulated space and the capital market space.
Yeah, I think fundamentally I'm a numbers guy. So if there's some numbers involved, then I'm probably interested.
Lovely. And now our wonderful friend Ziv, are you in Tel Aviv right now?
I am.
Beautiful. So give us the lovely spiel. Give us a blessing while you give it while you share with us.
Bless you.
Thank you. Shalom.
Thank you. So my name is Ziv Kinan. I'm the CEO of Symmetria. Symmetria is launching a digital securities market out of Israel, focused on secondary transactions and connecting the blooming and booming tech coming out of Israel to the world.
Beautiful, beautiful. Well, gentlemen, we are tasked with the question of security tokens and secondary markets. So I thought, for the audience sake, I mean, there might be a whole range of people with different acuity and different participation in the space. So I thought to really lend meat to this 30 minutes we have is to really clearly define the two spaces. The private markets, the security space, and then we'll secondly go on to discuss the actual security itself, and then with the last part we'd deal with the actual performance and engagement of your businesses and how these blockchain-driven markets are really bringing value to this new landscape. So in terms of maybe we'll have both in this first question, have Ziv and Jim begin the discussion around, can you clarify for the audience the whole issue of the fundamental issue of the need for secondary markets? Why are there secondary markets versus primary markets or established regulatory markets? And the question as to why do we need it? Why is it important? And thirdly, what is it really trying to solve in the marketplace? So Ziv, you and Jim can begin, and then Luke and Graham can pitch in if they have something to add to it.
I'd like to let Jim begin.
Okay.
Okay. Well, I mean, so if we're talking about sort of mainstream traditional securities markets, the primary market is where capital is raised, and the secondary market is where assets, securities are traded sort of freely between participants at the stage where there's capital not being raised effectively. There are different rules around the primary markets and secondary markets, and generally they vary a little bit between marketplaces, but the principles are very similar. I think why they're important in this context is because historically, since the sort of genesis of digital securities and the STO markets, they've been thought of as a way of raising capital. It was a sort of an evolution from, well, I think that was sort of, I guess, seen as the first use case of them. But as time has evolved, certainly the way we look at it is, this technology has the potential to streamline a lot of the things that are done in the traditional, call them the public markets, we call them the listed markets. The way we approach this technology and the real benefits we see to it in the secondary markets is in linking up different market players. So linking between custodians, depositories, transfer agents, registrars, and even now, people have the ability to be self-sovereign investors and to self-custody these securities themselves. So what I suppose what we're talking about as an exchange venue, and that, whether that's an ATS, an MTF, or an exchange like ourselves, you're talking about a venue where you can bring together buyers and sellers in a sort of electronic fashion, and that's the purpose of the secondary markets.
Yeah. So first, I want to say something about Merge. Merge is kind of an inspiration, I think, as an exchange, because it went out from a place where there's no a lot of it's not a big financial hub, but it is becoming and going to be a meaningful exchange by connecting itself and offering services throughout the world. And this is our inspiration as well, and I think this is the inspiration of every digital securities out there. What we've seen, the evolution of securities exchange, was that
Yeah,
Okay,
we're 25.
Brilliant.
Yeah.
So that's the story of secondary markets. It's a significant and important role that they play, given the size of private markets. Yes. Right. So in terms of, so we've answered that fundamental question of what are secondary markets. Now to the other question of security tokens itself. This is where Graham and Luke would contribute in terms of what are they, how do they come in terms of their shapes and sizes, and the importance of getting these instruments listed on exchanges. How are they different to, let's say, ATSs and any other kinds of exchange? So why is security tokens so important for getting them off track and really getting them to succeed and have some great story in this digital and decentralized space? So can you guys chat a bit about the security tokens and what it offers for the future and present?
Yeah, Luke, after you.
Yeah, and no problem. So security tokens are basically the representation of securities on the blockchain, on the decentralized infrastructure. So there are securities. So the token can be the security itself, or the token can be a mirror of the real security. So it depends. This token can represent any type of asset, any value. And that's why it's very game changing, I think, because you can represent anything with a token, and then this token will be able to travel, to be transferred on the blockchain in a very efficient manner. So I think you have two main advantages of tokenizing securities. You have everything around automation, cost reduction, automation, digital efficiency, and everything around liquidity. So the main purpose of blockchain is to transfer value. Mm-hmm. So if suddenly you can digitize securities and you can embed compliance rules in these tokens, the securities, and you give the different stakeholders the ability to handle this tokenized securities as digital securities, it becomes very efficient. You can control everything digitally, and not only sharing information with investors. It enables the direct ownership, even the direct custody, and everything can be done digitally. So I think the industry is at the stage where you can manage tokenized securities very efficiently. There are a lot of different protocols and solutions like Tokeny and others to do that. And what was missing so far is the secondary market, because you have a lot of regulation for the secondary market. And I think Ram knows that very well, especially in Europe, because basically if you organize the trade, if you put two investors in relation in a digital platform, you need an MTF license. So it's very tricky to launch this secondary market. In the US, you have the ATS, which are kind of hybrid, but in Europe, it's black or white. It's basically for private markets, you have no infrastructure for the secondary market, and for listed for listed securities, you need the CSD, custodian, etc. So it's very heavy. But maybe Graham can explain that better than me.
Yeah. Thanks, Luke. Yeah, I think a lot of the points that Luke touched on there point to the fact that digital securities are securities, so they're regulated in more or less exactly the same way. And as a result of that, you have to fit in with all current regulations and current market ecosystem service providers as well. So trying to embrace the new technology whilst connecting into existing providers and the regulations a bit of a challenge. And I think a lot of people think security tokens are kind of a new type of investment and when are they coming, but we think of it in a bit of a different way. We just think of it as a type of technology. So it's not really a question of when the security tokens will come. It's more when will this technology be more widely adopted. And everyone on this call, actually, I've known now for a good couple of years, and we've all seen the development in the space, and we're really at a point now where the technology is being more widely adopted. We've seen it in this summit, some demonstrations of what's being done with the technology. We're trying to solve some of those challenges of the secondary market that Luke mentioned, and hopefully in the next few months we'll be live too.
Right. So all together now, I mean, it's amazing how time is flying. It's 5:08. We don't have much time. So we have discussed the actual marketplace, the actual instrument, and now in terms of the desire to see this market grow, we know that STOs are relatively new. There were some first attempts at its expression with some success, but it's relatively new. Would you agree in terms of the adoption of it? We might be looking forward to a very exciting future. So how in terms of the actual exchanges, melding secondary exchanges together with STOs and security tokens, what would you say is in terms of the adoption? Many people talk about the challenge of liquidity. And in one of the earlier panels, they say at the end of the day, you must have a product. And if the product is desirable, you will have buyers. And so the discussion is that having a good product generates the marketplace. So what are your thoughts on where this has to go in terms of the adoption of security tokens in the market, in secondary markets? How do you generate liquidity for that place to be vibrant and meaningful? Can you all just chip in and give your feedback on that? It's a very important question. You can talk about any regulatory concerns that might be constraining it.
Yeah, I'll have a go, guys. I mean, I'll reiterate what Graham and Luke said, which is that first and foremost, what we're dealing in here is securities, and really what's changed is the method of recording ownership. And so there'll come a time, and someone said it on a panel earlier, where we won't talk about digital securities or security tokens. It'll just be tokens, because this technology makes so much sense for the securities markets at large. When it comes to liquidity, and it's the same with any asset and any security on any market, there's a whole bunch of things that drive that. And it's a question everybody asks when they come to us. They ask, what is the liquidity like? And actually, you know, most of what we're catering for here is early stage, smaller companies, venture-backed businesses, alternative assets. They're not necessarily businesses that are they're not necessarily securities that are going to be highly liquid. And in a lot of cases, they're going to be assets that will be things that people will buy to hold for a long time, like a piece of real estate, right? They're not things that you would expect to see a high amount of turnover in. So we always try and sort of educate our issuers a little bit on some of the things that go into creating liquidity, and it's the availability of information is very important. It's the quality of the asset. It's the things like the shareholder spread, and all of these things combine. Investor relations, marketing. These are the things that drive liquidity. But actually, what issuers mean when they say liquidity, they often have different sort of things in their head. Do they mean they want loads of turnover? Or do they mean they want to be able to sell a certain amount into the market on a certain day without moving the price too much? In which case, really what you're looking for is a decent depth to the order book rather than actually lots of turnover. But these aren't things that are unique to the security token world or the digital security world. That's the same on any marketplace in the world. And I think that the difference at the moment is there isn't the volume of people participating in digital securities in the same way they're participating in the public markets, and that's just something that is going to evolve over time. This technology and the access points to it are going to grow, and it's going to become normalized. And at some point, people will be trading digital securities without knowing that that's the technology that underlies what they're dealing in.
Okay.
I know that the name Onera was mentioned more than once this conference, but when it comes to liquidity, the idea behind Onera has to be mentioned that an exchange is not a separate entity acting by itself looking for liquidity from investors and assets, but it is part of a network of other exchanges, financial institutions. So Symmetria is connected to Archax, is connected to merges, and in all of those regulated entities can share liquidity between themselves and can share assets between themselves. If you look at the blockchain technology and what it's about, this is exactly what it is about having a distributed network where value is shared between entities. And I think that the idea behind Onera is really a great idea, and that they're on the right way for execution of this concept. And then Symmetria, a company like ours, can enjoy liquidity from overseas and financial institutions overseas and so on. Merge can do the same and get access to our assets. And Graham and Luke, we can all collaborate and move liquidity from one place to another.
Luke, Graham, you guys want to add to the notion of
Well, I think the guys have covered it, and I think what we say is it's not all about deep liquidity; it's about facilitating liquidity. And in some cases, like Onera or bulletin boards, it's just having an option. I think Greg earlier from SharesPost mentioned that funds, for an example, private equity funds being super illiquid. I think some people would just crave any exit and some liquidity at some times, whereas you get other companies where maybe deep liquidity on a central limit order book is more appropriate. So I think it's not just about creating deep liquidity anywhere, but just facilitating it where it doesn't exist currently.
And Luke, you?
Yeah, I agree with that, because what we try to do with our clients in private markets, it's not crazy high frequency trading liquidity. It's just to reduce the liquidity cost. It's to be sure that investors will not be blocked in their investment for 5, 7, 10 years. They have a possibility to exit, to manage their portfolio, to enter at a later stage in this closed-end fund, for example, thanks to blockchain. And because it's blockchain based, it's still manageable for the issuer or its agents. You can have way more investors than before, and they can subscribe, they can sell their positions, they can trade with other investors automatically, but in full compliance. So we've seen that many issuers don't want to be publicly listed. In Europe, it's you have a lot of constraints when you are publicly listed. It's costly. You have a lot of reporting obligations, etc. But they want to be sure that their investors can somehow find a counterparty and trade when they need to do it.
Yeah. Well, we got about 5 minutes left. But in terms of the liquidity issue and the nature of secondary markets, do you think the STO market, the product, is replicating existing assets with a cryptographic wrapper, as we may call it, is enough to generate investor interest? Or do you think there have to be new permutations of what assets are to really make the market move?
I think accessibility is a big problem. If you look at the traditional markets and SME growth markets, quite often you have limited access to brokers and different layers of fees. Whereas I think what the crypto market showed us is if you provide a platform that everyone can have direct access to, you can actually develop liquidity in some fairly small companies. So I think improving accessibility, getting as many people direct to the marketplace as possible, can improve liquidity in assets that perhaps weren't so accessible before.
So you mean a wallet really can be a big player in that?
But yeah, potentially for the appropriate assets. I think rather than paying layers of liquidity fees, someone being able to go directly to market and express their investment views is pretty powerful.
Guys, in terms of Jim, you had to say something?
Yeah, I mean, there's been a trend, and a few people have touched on it in other sessions today, of companies staying private for longer, and Luke just touched on it as well. That the reason companies are staying private longer is because A, there's the capital there in the private markets, but B, the major markets and the mainstream public markets aren't really set up for small early stage businesses to list. The costs are high, and there's an awful lot of touch points. They have to deal with a huge amount of different entities to get this thing to work, and the regulatory burden is high. So actually, what Merge set out to do when we started 8 years ago was try and build a regulatory framework and a listing framework that was appropriate for these kinds of issuers. Because I think it's vitally important, actually, that some of these, hugely successful companies, more of the upside is captured in the public markets. If all of the upside is captured in in very few hands in the private markets, we're not really doing our pensions any particular good, and we're not really doing the retail public at large who want access to these early stage opportunities much justice either. And I think this technology, what Luke mentioned, they're sort of Tokeny and others are sort of bridging the gap between a pretty archaic system for transacting in private securities. They're trying to bridge the gap between that and the public markets by using this technology and the compliance logic that's baked into it. We don't tend to talk about. Sorry.
Well, we've got about 3 minutes left. In terms of wrapping up, if you can address personally in terms of the future, the question was what's next for the private market in terms of growth and the whole security token explosion possibility and so forth. But rather than making it a generic closing, if you can just share what you're doing in terms of where your company is going with respect to addressing the future and getting greater participation. Maybe we can start with Luke to close. Ziv. Actually, Ziv had the last moment at the beginning, so maybe we can have Ziv talk about the future and Symmetria and where you're going.
Yeah, Symmetria is focused on a very specific segment of secondary markets, which is the private markets. What we are trying to do is provide liquidity to illiquid assets. And this is very, very complicated task because providing liquidity to different assets could mean different things. Some assets want to be very discreet when they're dealing with the liquidity of their cap table. Some assets wouldn't mind to be more like traded and listed companies. So you have to have like a spectrum of solutions that you can offer and products that you can offer. And today we demoed one of those solutions, which is the discrete mode, where two parties can communicate between themselves and decide upon the price, and everything is recorded into the blockchain and so on. So going into the future, we'll develop this this product and launch it, and we are looking to the future to become a regulated exchange out of Israel and to compete in the global market of exchanges.
Wishing you the greatest of success, Ziv. And Graham, what's your take in the future and with your company?
So I think over the next 5 years, every security pretty much moves to digital, and we're trying to position ourselves to be in front of that. So focusing primarily on SMEs and much like Jim, really trying to improve that access to capital markets, allow any company around the world to access capital from around the world using the technology wherever we can to make it as efficient as possible.
Beautiful. And Luke, from Luxembourg?
Yes, I think that major financial institutions are coming into our space. They are all buying custody solutions for the moment to try to handle the Bitcoin bull run. And the next step is security tokens. You have a small in-between with NFTs. And why NFTs are booming is because you have credible people, Elon Musk and others, who are pushing this technology. I think it will be the same for security tokens. In a few months, in a few years, we don't know. But when major financial institutions will officially tokenize securities, it will move the space. The technology is there. On our side, we can provide the full set of technology, and we can help any financial institutions with investors or with issuers to launch a digital asset marketplace where they can list offerings for the primary market, where they can digitally onboard investors, qualify them, help them to subscribe their offering, manage everything digitally, during the life cycle of the securities, and even provide a secondary market with a bulletin board approach. So you don't need any, in Europe, you don't need to be regulated. You don't need an MTF license to operate a bulletin board. So all of these issuers can today do that, provide that type of digital services to their clients. So what we just need is people big enough, companies big enough to say we are going, and the other ones will follow, I guess.
Mm-hmm. Well, my clock wasn't working as clearly. We have some more time. Graham, you seem to have talked a lot about access. Are you talking more about the issue of access for individual investors or more institutional investors? Can you expand a little bit about the access opportunity in terms of growing the industry through better access?
Sure. Yeah, I actually meant it from both sides as well, the issuer and the investor. And Jim talked earlier about the layers that prevent companies coming to secondary markets or even primary markets. So you've got companies that may be highly performant companies that either through cost or through knowledge just can't access capital, especially not global capital. So creating a platform that has been done in other technologies where companies can go and raise capital is the first part of it, but allowing that to more easily transition to the secondary market as well. And then on the investor side, rather than people having to go through their local broker and pay extra layers of fees, being able to go to any secondary market and register to participant. I think increasingly it's clear that retail are going to play a bigger part of capital markets in the future. People are more sophisticated, they understand technology, they understand trading, and I expect it to be more private individuals than corporates and institutions in the future.
Mm-hmm, mm-hmm. Ziv, you must be excited about that, because I've heard you a couple of times spoke around the issue of the social charter that blockchain and innovation should bring to people. Yes. So in terms of all the changes that we're anticipating, is that still a very critical part of you in terms of having mass adoption of the use of the technology, but you want to see more democratization of earnings and wealth creation? Yeah.
Yeah, that's that's for sure. This is what part of the value that this technology brings, and what we are all about. And actually, when you see the regulators, for example, in our case, we got a lot of support from the local regulators and push to launch our platform. This is because they see us as a way to finance SMEs. And those projects which are getting harder and harder to finance, they see the potential in us to bring this, this capital down to those SMEs and SMBs that need this capital. So it is definitely part of the value that we bring.
Mm-hmm. Look, the last piece of data I saw in terms of exchanges, DLT exchanges, was about 300. That's a lot of exchanges. I mean, regulated exchanges, we know you go to Israel, there's one main exchange. Well, Symmetra would be a second. You go to London, you have London School of LSE, and I guess your new exchange, Graham. In your country, I guess Luxembourg. Do you have a public exchange in Luxembourg? I know Switzerland has one. You have a public exchange, yeah?
Just a short comment from the organizers that we need to wrap up this panel.
Yes, it's actually. Yeah, so my clock is just showing that we had a little more time. But so in terms of summary, I think you guys have shared some brilliant insights in terms of where the industry is at. We've defined the sector, and we've shared insights as to where it's going for the future. And I think hopefully the audience have gained some insights about your companies. They can, of course, contact you through the platform site. And we want to give thanks to Draper Goren Holm for the opportunity of sharing with the public the whole idea around secondary markets and this big opportunity for the future of scaling and growing security tokens. Gentlemen,
Brilliant.
Thanks for the opportunity.
You've been great.
Thank you very much.
Thanks, everyone. Thank you, guys.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. real-time risk profiling, and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Our next speaker is one that's near and dear to Security Token Summit, Mohsin Mahasad, who's the CEO of Accrue, and this year's Security Token Summit title sponsor, whose platform makes real estate investing as simple as it gets. And today here to share exactly how, please welcome Mohsin Mahasud.
Good evening, ladies and gentlemen. Thank you so much, Draper Goren Holm, for having us. I am excited to be sharing our launch for our new platform, Accrue, with all of you over here today. I greatly appreciate Draper Goren Holm and the Security Token Summit for giving us this opportunity to be here. I'll start off real quick with just with a brief introduction about me, my company, Accrue, and who we are and what we're doing. So Accrue is a platform for fractionalized sales of real estate assets. Our core belief is to democratize commercial real estate investments. How do we do that? We do that by creating security tokens backed by real estate assets and offering them for sale for as low as $1,000 on our platform. The only way we're able to present this and make this work is using our multi-token architecture, which includes the security tokens, our utility tokens for the financial transaction, and then our ID and governance tokens for managing voting rights and the rights of the asset owners. Here's a little something about Accrue.
Accrue is an innovative blockchain-based platform that makes real estate investing more secure and efficient using a process called tokenization. We use blockchain as an underlying technology within the platform. The immutable ledger that tracks investments and transfers of ownership cannot be changed or altered and makes investing a lot more secure. By using blockchain, smart contracts, and our digital wallet, we are able to divide real estate assets into equal shares and offer them for sale as digital securities called tokens. Tokenizing assets not only improves security of the investment and future transfers of ownership, it enables near instant liquidity through our marketplace. Our AI engine will be used for due diligence and risk allocation. Asset performance is monitored in near real time, and any unforeseen or upcoming issues with the property, including tenancy, maintenance, utility usages, or expense trends, can be identified. Our proprietary technology provides reliable, monitored information and enhanced liquidity at your fingertips. We use technology to cut out the middlemen, management layers, and portfolio downside risk to provide lucrative and secure direct investments. Accrue.
So that's exactly it. We make it super simple, cost effective, and super easy for everyone to invest in commercial real estate. It's as simple as a click. We list a few different kinds of assets on our platform. Core assets, also known as stable income assets. Core plus assets, which are value add investments, where people are able to add, where the project sponsor or the owners are able to add value and provide higher returns to the investors. These assets bring in a little bit of risk, but a higher return. And the riskiest of them all, the opportunistic assets, which are either ground-up developments or redevelopment assets with the highest risk, but the highest return potential as well. We make this super simple for everyone to understand. We provide an easy risk profiling mechanism for each asset, and we provide that at your fingertips on every asset page's details. Our roadmap. Accrue started its journey off in 2018 as tokenism. We did a limited beta release for our platform in October of last year at the LA Blockchain Summit, followed by going through a lot of A/B testing, going through the entire rebrand, the rename, new assets coming on the platform, new partners, and now we're launching the final product called Accrue. We expect to have a broker-dealer license by by Q3 of this year, and then our ATS license by Q1 of 2022. That is truly when the democratization of real estate starts to happen. That's when we open up the platform to retail investors. Unfortunately, right now, we're just limited to accredited investors. Our offerings are all Reg D 506C, so general solicitation is there, but it's only for accredited investors. What are the key benefits of tokenizing? And what are the key benefits of using Accrued? From an investor's perspective, you get a low investment threshold to start off with. So you're starting by investing as little as $1,000. You get to pick and choose what assets you want to invest in, and therefore you maximize your returns. And investing is as simple as a click. We've actually granny tested it. My grandma could actually sign up and use the platform and invest in a property of her choosing. And most of all, it's super secure because we use the multi-token architecture and we use blockchain as the underlying technology. But don't forget, we don't bring in the intricacies of blockchain for you. We deal with that, we handle that, and we use it to ensure your security and your safety. Now, if you are an asset owner, what's the benefit for you? You've got too many investors to deal with. You've got too many things happening all at the same time. Well, don't worry about that. Accrued takes care of all of that for you. We not only enable you to get out of the leverage aspect of it and hold your asset free and clear, we provide you a permanent capital structure. You end up retaining full control of your asset. You recapture gains, which are unlocked over a quick period of time. And then there's the true value of the asset that becomes unlocked, also known as the liquidity premium, or in today's world, when an appraiser is looking at an asset, they're providing for a very high discount on marketability on the value of each asset. What happens when you tokenize the asset and list it on Accrued is that because of our secondary marketplace, which is fully integrated into the platform and is as simple as the initial offering, and I'll walk you through the entire process after this, but what that does is it brings on liquidity for a traditionally illiquid asset, and that increases that that premium on liquidity, or reduces the discounted marketability of those assets. We make compliance super simple, and we provide a single investor management dashboard. So you don't have to deal with multiple emails coming in from multiple investors, and you're able to respond to everything from one single dashboard. Our website is officially live now. You can check it out at accrue.co. I'm actually going to take you there right now. So bear with me as I switch between this presentation and the website. And I apologize for that. I wish I knew a better way of doing this, but it is right here. So welcome to Accrued, investing made super simple. We go over every detail for you on our homepage, just outlining everything that you need to know about investing in real estate assets, including these are 2 live listings on the platform right now, with a 3rd one coming up at the end of this week. If you want to sell your assets, you can contact us right here from the homepage. You can find out all of the details for each of these assets going on the benefits page. You can review all about what the details on the benefits that we talked about. This is that risk profiling simplified that I talked about. And these are the different kinds of assets that we list on the platform. Now, investing and logging in is super simple. I don't have any extensions installed on this browser. All that I have to do is put in my email address. This is my personal email address, which all of you are able to see at this point. So it connects my wallet. I use my cell phone or log in from my computer. It logs me in here within a second. Now, all of this is happening on the blockchain. So while it's authenticating my device, and we're currently running on Ethereum, so it does take a little bit of time. And that is exactly why we're moving into a faster process. You see the two-factor authentication coming in. Super important, super secure. We're talking about your funds. We're talking about your financial holdings. So we want to make sure we've got it completely covered and completely secure. Now that we're logged in, this is what the dashboard looks like. So this is the accrue dashboard. You can look at all the different aspects of it. You can add your balance. So you can add dollars, US dollars on the platform, not ever having to worry about the variability of cryptocurrencies. You can also deposit using various different cryptocurrencies directly by connecting your bank account or through wire transfers. You can withdraw the exact same way, having your money available in your bank account the same day if you choose. And you can review all the history on the transactions that you wish to have. Investing is super simple. Pick a listing of your choice, and you can go through the details on the asset. And as that comes up, you can go through each and every detail. What we do is take the private placement memorandum, super simplify it so everyone can understand what they're reading. It's not just a bunch of legal jargon that people don't usually understand. And if you like the investment, you can just click on Invest Now, pick the number of tokens you want to buy. That's a total amount that's going to cost you, and just click on Buy Token. And that's about it. Now, this is the live site, so I'm not going to mess around with buying more tokens of this. We give you complete details on how the platform works, whether you're the investor, the property owner, the token holder,
or easy to use,
or various different service providers on our platform. And then most importantly, this entire project would not have been possible without the help of our advisors and our entire team. Our team has grown very quickly from a team of 2 to a team of 20 as of the beginning of this month. Very proud to have a very diverse team. And then obviously our partners are without whom we could never have made this possible. You can read all about us, all about our team, all about our advisors on our About Us page. Contact us anytime you like, and we'd be always happy to help you tokenize your assets or help you make the right investment decisions as you choose. Now I'm going to switch right back to the deck that we were going through. And I should have had a better mechanism for this, but please bear with me on that. The reason why I'm switching over to the deck again is because right before this, I went ahead and I recorded the actual transactions taking place. I was allowed to cheat a little bit because, being the founder of the company helps me a little bit. But what I did is before the website actually went live, I created my account. I was able to buy a couple of assets, make a couple of investments, and I wanted to walk you through that entire process. So just what you saw, we went to the website, we went to the listings page, we picked out a list that we liked, so the Main Street listing, the exact same one that we were looking at before. We review all the documents for the asset. You can look at the capital stack, what you want to invest, what you don't. Pick the number of tokens you want to buy. Click on buy tokens. Voila! Your transaction is being recorded on the blockchain. This may seem a little bit slow. It may take 15, 20, 30 seconds, but that's the beauty of it. Your transaction is mining. We're actually recording your transaction on the blockchain, and your security tokens are being issued to you directly in your wallet. So you can go back on the dashboard. You can go on the My Portfolio, and you can look at the assets. And again, loading up from the blockchain, so it takes a few seconds. But you can look at the assets that you currently own. Now that you've owned the assets for a little bit, and you want to sell those assets, it's as simple as buying them. You select the property that you want to sell your tokens for. You set the price on it and the number of tokens you want to sell. You can look at what the total amount of money you would receive. Now, mind you, we're a zero-fee platform at this point in time, and we're happy to to have it that way for the next 1 year for all of you out there. But eventually, there will be some fees on there. Here's a little something, and I'm sure you might have seen this ad by now, but we thought might as well go over all the intricacies that we help remove out of the platform.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Right. So there you have it. We're trying to making the exclusive inclusive. Wow, getting tongue-tied right here. But that's what Accrue is all about, and that's what we're looking at doing. Feel free to reach out to us at any given point in time. I would really like to point out a few things. There's some key benefits for all of you investors out there. These are Reg D 506C offerings, excuse me. We offer these listings under Reg D 506C. Just some legal disclaimers out there. So these offerings are only open for accredited investors. You do have to go through a rigorous accreditation verification process, which if you are not accredited, you would not be able to invest in these assets at this point. But we're rigorously working to ensure that we can get you on the platform as quickly as possible. Once again, that's what Accrue is all about. Accrue is here to simplify and to make your life easy when it comes to real estate investments. You don't have to deal with any more hassles. You don't no more paperwork or phone calls, or no more talking with project sponsors and trying to find out what the update on the asset is. Everything is available at your fingertips on your cell phone or on your device anytime you like on your dashboard. You get live updates on your assets. You get to see what the last trading price and what the trading volume of these security tokens was. You get quarterly dividends or distributions from the rental income or the gains on each of these assets. So you can easily make these investments anytime you like and never have to worry about this again. Having said that, please go check out accrue.co. We look forward to having you as a customer, be it to tokenize your assets or to have you as an investor. Once again, thank you so much, Draper Goren Holm, for giving me the opportunity. My name is Mohsen Masood. I'm the founder and CEO I keep on saying the previous name. I'm the founder and CEO for Accrue, and me and my team are looking forward to having each and every one of you on our platform. Thank you.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Well, our next session tackles one of the biggest topics ever to be discussed in the sector, and it's interoperability. How do security token protocols really communicate with each other without stifling existing systems, and also the overall user experience? Well, we're going to be covering just that in today's topics. Please welcome moderator Graham Moore of Polymath as he leads this discussion with Colin Miles of Zilliqa, Ryan Gladhill of IVNO, and Ami and Ben David of Onera.
Hey everyone, thanks for the intro. Great to be here at the Security Token Summit, and thanks to Draper Goren Holm. Thanks to everybody and all the sponsors for making this happen. So I think before we get into this, right, we're going to be talking about interoperability between security token protocols. I think it makes sense for the panelists to introduce themselves. So I think we'll start with Ami. Go ahead.
Hi, hello. I'm Ami Ben David. I'm the founder and CEO of Onera.
I've been working on digital securities and security tokens pretty much from the beginning of this market, and been involved in founding and investing some of the companies in the space. With Onera, our focus is mainly about interoperability and interconnecting the market to create a large financial institutional market around digital securities.
Awesome. Ryan, go ahead.
Yeah, hi, Ryan Gladhill. I've personally spent my career managing development teams of up to 30 with various different teams. I fell down the rabbit hole of blockchain in kind of late 2016, and I have a passion for using emerging technology such as blockchain and tokenization to affect real change in incumbent markets. So as IVNO's CTO, I'm in charge of driving rapid transformation within capital markets, offering an enterprise tokenization platform that adheres to financial markets needs and regulations, and also using our own tokenization technology to create the de facto settlement option on Corda.
Awesome. And Colin?
Yeah, hi, Graham. I'm based in Singapore with Zilliqa, which is a high-speed, high-security blockchain, and we are a partner in an exchange called HGX, which tokenizes securities, asset-backed securities.
Awesome. And then I'm Graham Moore. I'm the head of tokenization at Polymath. Came from a financial services background, been at Polymath since 2017, where we focus on pretty much all things security tokens. I think to get this discussion started, and everyone please feel free, if you want to interrupt someone or if you want to jump in or you disagree with what someone's saying, please. We want this to be a lively conversation so the participants can get to the real meat of what's going on down with all things interoperability. So to get things started, I guess I'll start with Ami. What do we mean when we say interoperability?
So I think security tokens, more than the general world of crypto, needs basically platforms to be able to connect to each other, because there are so many platforms out there trying to digitize securities, and securities cannot really travel easily. They're not bare instruments like behaviors like Bitcoin or something like that, that they need to be, they carry with them a lot of rules and information, and who can invest and who can't invest and so on. So it's much more complicated than a bare instrument to interconnect. And therefore, when we talk about interoperability and interconnectivity, we're talking about the actual ability of somebody launching an asset on one ledger to be able to sell that asset and have that asset traded on a different blockchain. That's the way that I define it.
Got it. And Ryan, I feel like I saw you maybe unmuting and potentially wanting to jump in there. Anything to add?
No. For me, interoperability is quite a complex topic. So I try and break it down into kind of three distinct layers. So firstly, we have integration, and this isn't anything new. We've been integrating for 20 plus years, but we do need to integrate blockchain and tokenization systems with existing systems in order to augment their current capabilities. I then think we have intra-blockchain interoperability, and by this I mean applications on the same blockchain using shared protocols. So, for example, IVNO can be used as a settlement provider or a utility layer throughout the Corda ecosystem, because at that protocol layer, at the Corda layer, we're able to make assumptions and guarantees that the protocol itself enforces. So that's intra-blockchain. And then we can take that even a step further, I think, and define interoperability at the inter-blockchain level, which I think is what Ami was talking about there. So, for example, we could mint security tokens on Zilliqa or even on Polymesh, which are then traded between counterparties on their native chains. But then, for example, IVNO can provide settlement services between the same counterparties, but on Corda. And this, of course, is generally much harder to achieve, and you add in a number of variables there between the chains that means they're not natively compatible. But you can easily see how powerful these three things are when they're combined. The ability to interoperate with other chains, means that you can pick the perfect chain or the perfect application for whatever it is you're trying to achieve. And I think when we move towards solving interoperability in the long term, we move towards this kind of Pareto efficient ecosystem where we're always able to use or choose the right tool for the right job.
Right. And then Colin, someone might be sitting there watching this panel and seeing Colin from Zilliqa and going, well, wouldn't Zilliqa just want all of the activity on Zilliqa? Like what excites you about interoperability?
Yeah, I'm believing in the grand vision. I like the idea that all of the chains are going to work together and all of the tokens will be interoperable, because we need to build a much bigger market, a bigger level of consumption across all of the investors that we want to unlock around the world. So I'm quite excited. Obviously, we have a kind of walled garden at the moment, but when we have some bridges, when we have some interoperability, the tokens that we're offering can be sold on compliant exchanges all around the world.
And so you mentioned bridges. Are bridges, can they get the job done? Is that all you need? Is I have a token on one blockchain and then I use a bridge and then maybe I wrap it on a different blockchain? Is that good enough?
It's a workaround. It's a patch, I suppose. Ideally, it would be fluid and automated and fully compliant across all these different levels that we can read in the security token standards. But for now, I think we'll be able to just start that process, moving across from ETH to Zilliqa and Zilliqa back to ETH, for example, and see how it goes.
Right, got it. Now, Ami, why is interoperability so important from your mind? I might be thinking I can just create a security token on a blockchain, and if that's the blockchain where the majority of activity is happening, then it works and it's fine. But really, what gets you excited about it?
So we work more in the institutional market, and what we found there was that every institution, every exchange was building their own platform that was unable to speak to other platforms on other organizations. And sometimes within the same institution, you would see 3 different platforms using 3 different technologies, not able to speak to each other. And sometimes even if they use the same blockchain technology, they can't speak to each other. So we saw this as a huge problem. As a user, for example, you can't have assets in multiple platforms. You need to, if you want to hold a real estate here and you want to hold a token there, you need to register to KYC and AML across multiple platforms. It's a nightmare. And without actually having interoperability, I believe we will not have a digital securities market, because securities, private securities especially, are not as liquid as public securities. So you need the worldwide global distribution in order to reach the critical mass that is needed. So one bank alone, doesn't matter how big it is, will have a problem creating liquidity for a private asset. 100 banks and 100 exchanges can definitely provide such liquidity. So the way that we tackled it was a part of a nonprofit group called GDF, Private Market Digitization Group, where we created a protocol that is designed to interconnect different blockchains and different platforms. It's not even at the blockchain level, it's at the level of the transaction of digital securities. So what we're connecting is not the actual underlying blockchain, but we're connecting the digital securities platforms that sits on the blockchain. And the idea is that every asset can be launched on its own ledger by a financial institution. And then this financial institution can connect to the network called FinP2P. So the financial institution can connect to the network, publish the asset to the network, and then and then it's permission. So they can say which other institutions can see the asset. These other assets have to approve, and then the other institution can start bringing clients and investors, and those investors can do transaction. The transaction are routed to the source of the asset and then executed there. And by doing that, we completely bypass the problem, because we realize it's almost impossible to connect N networks to N networks. It's an N square problem. It's just never going to work. So instead of doing that, we design a network that sits on top of all the blockchains. It's just a routing network that interconnects all of them. And that was an idea that came up in the group about 7 months ago. And initially, a lot of people were skeptic. But actually, beginning of the month and earlier today, I showed a video with 10 companies interconnecting into the same network, with Ivno was one of them, to provide the settlement. We had ledgers, we had Corda platforms, Fabric, Ethereum, Stellar, Symbiont. We had custody, 3 different custody providers, Fireblocks, GK8, and Pictor, and we had multiple payment mechanisms, including UNO and including USDC. And each one of them had to connect to one network, and then it was connected to the whole network. So we actually feel that we achieved interoperability. This is no longer a theoretical question of something that needs to be done with bridges. It's done. And now the FinP2P protocol is published, and we are building it on Era. We're building a node for FinP2P, so people can even connect easier to the node, just build a bridge into the node, or an adapter, as we call them, into the node. An adapter takes basically a couple of weeks to write if you're a ledger, or a few days to write if you're a custody provider, and you can be interconnected. So we feel that this is a problem that is solved better by a routing network rather than actually physically connecting the blockchains to each other.
Right. And so in terms of sort of status on where we are right now, right, you say it's solved, right? Hopefully. But it still takes time for these institutions to onboard, for these institutions to buy into the vision, for them to really start putting actual assets on these networks with real dollars behind them. Where are we at in terms of the adoption cycle of these types of interoperability protocols? Brian, I'm wondering your opinion on this.
Yeah, sure. So, well, there are a number of protocols currently trying to solve interoperability. Cosmos, Polkadot, Quantsover Ledger, and a bunch of others. They're mostly focused at public chain interoperability, and I think FinP2P is the most forward-thinking and the most likely so far to take the security tokens forward. But if I may, I'd like to focus the question slightly, or refocus the question slightly.
Yeah, please.
And just ask which of these are likely to be the most successful and why. And specifically, as I say, in the tokenization and security space. So we obviously know that tokenization software needs the capability to mint tokens, sure. But also it needs to adhere to financial markets regulation. It needs to take into account the size of the organizations within the space, and then be scalable to that level. It also needs to protect privacy and token security, and market position above all else. So you certainly on a public chain like Ethereum, you'll be giving away your market position because the chain itself, the blockchain itself, is transparent. Now, yeah. So the next step in the journey is an interoperability protocol that's just as well suited to achieving these goals. And as I say, I personally believe FinP2P has a strong shot at serving that niche going forward.
Got it. And then, Colin, at Zilliqa, what are you guys seeing in terms of just general assets and their desire for interoperability? And then on the asset side, more specifically, are you talking to people issuing equity? Are they issuing debt? Is it real estate? Is it some new kind of token that has never really existed before? What are you seeing that on the asset adoption side of things, and what they're looking for interoperability, if anything?
Yeah, I mean, it's still very early days. We're in the MAS sandbox here in Singapore. That's the Monetary Authority of Singapore. So we're all trying to be compliant and follow regulatory oversight in the right way. We created a unique token for premium whiskey on the HGX exchange. So that was a very interesting first foray into asset-backed securities. But another private equity bond was issued here recently with 2 partners, Temasek being one of them, a government-linked corporation. And that's quite interesting to see private equity bonds coming into the market as well. Certainly, there's a lot of people talking about real estate projects with us now at the moment. So it's early, but these are the key areas where we're seeing action.
Got it. And then, Ami, what are the challenges? Right. So you say it's solved, but everyone encounters challenges. There might be some challenges with adoption, or perhaps just base level. What are the challenges that you're seeing right now?
I think the key challenge that we're seeing is kickstarting a network, because until we had a a network that can interconnect everybody. And just one word about what Ryan said earlier, there are platforms that like Polkadot and so on that try to connect the blockchains between them. Just to be clear, what FinP2P try to do is not to connect the blockchain, but actually interconnect the transaction level. So to allow people to do transaction. And we actually see platforms like Securrency connect to FinP2P, where underneath they have multiple blockchains. So we interconnect the vendors, the venues, the exchanges, and I think that one of the key challenges that we're seeing right now is the kickstarting of this network. I think that we've seen several markets take off in the digital space over the last several months, and digital security hasn't taken off yet. But I believe that once we cross a certain kickstarting or chicken and egg kind of issue, then it will start happening really fast. And the problem is this: you're talking to institutions, and the institutions are saying, wow, okay, we can interconnect to each other, we can launch in the network, and then, but where are the assets? And then you go to the assets, and the assets say, we would love to get on the network. It sounds great. Which institutions are on the network? Yep. And that's a problem. If you give the assets the list of 10 institutions that are coming in, the asset won't in. If you give the institutions the list of 10 assets that want to come in, the institution is in as well. Okay, so you have, and if none of them is in, then none of them is in. And that's where we thought that, you know, a nonprofit group is a good place to put everybody together. First, show that the technology works in force, like with, you know, with people integrating and testing the platform from the leading platforms and technologies in the market. And then we're now at the process. We're in the second stage of the pilot around FinP2P, which is designed to bring 10 major assets into a similar number of financial institutions. And basically bring them together to the table at the same time and kickstart this network. And that's a major effort that is going on right now. We're on the lookout for assets, and I can say what sort of assets we're interested in within that network, what sort of assets the institutions are interested in, and this is the kind of work that we're doing. And it's different from STOs, where, you know, potentially smaller assets and assets that can tokenize the entire assets were coming out. This is an institutional market. So we're talking about kind of large assets, which are, you know, in the real estate, in the funds market, and that's on the yield side, either real estate or fund. And on the growth side, we're talking about growth private companies, where security tokens or digital securities is an alternative to SPACs, for example.
Got it. Then Ryan, same question. You know, in terms of challenges, is that really all it is? It's how do you overcome the chicken and egg problem, and then what is the solution to that?
Yeah, good question. I'd like to approach it from maybe taking a step back and talking about interoperability as a whole from a developer point of view. And I think most of the challenges there arise from tokenization being a relatively new and a relatively nascent subject. If we think about it from a development viewpoint, how many people do we on the panel know that understand different techniques, you know, atomic swaps, hash time lock contracts, blockchain bridges, cross-chain, or, you know, there's plenty of them. I expect we can count the number of people we know on our fingers. So this developer upskilling and education will ensure that we can pick the best interoperability technique for the problem. So I think we need a big push from industry and from consortiums, and this is one part of what FinP2P is trying to do. And I think we're starting to see this with the Ethereum Enterprise Alliance, for example. So with these consortiums, we'll start to naturally converge towards these global standards. Yeah.
Does that ultimately solve the problem? And this is just, you know, like sort of devil's advocate, right? So we had a whole bunch of different companies starting their own security token protocols on Ethereum. And then we tried to have one security token protocol, but then another company says, oh no, well, my protocol is better than that. And then now we have the interoperability protocol to rule all of the interoperability protocols, but then ultimately someone's going to have another protocol that's better for interoperability. So, you know, when do we start to see those winners emerge? Is it a year from now? Is it 5 years from now? 10 years?
Yeah, so I think we'll converge towards a standard which will make interoperability almost a built-in function of each blockchain. and we'll have security token platforms that don't adhere to these standards, and these will fall by the wayside. And the reason is due to utility. So you can imagine a future in, as you say, 5 to 10 years, where a security token can be minted. It can be used for collateral on one chain, staking on another, fractional ownership, and so on. And we'll see markets that are currently entirely illiquid becoming tokenized and traded day to day. But I think even if we look a bit closer, so if we look before those 5 years, I think we'll soon see an inflection point of sorts, which is less about interoperability, but more about markets. So markets are currently, as markets become tradable 24/7, and settlement services are also available 24/7. What does this mean for traditional markets that are used to market cutoffs and set trading hours? And I think that will be interesting to see, and that will guide some of that interoperability discussion between consortiums.
Right. And then Hami, so interoperating with all these different chains for FinP2P, it sounds like a big undertaking. And so how does that shift the problem from where it is now? So the problem to me right now, it sounds like with all these different protocols and all these different blockchains, is the problem is now borne by the financial institution, right? The broker dealers who are helping fundraise, they need to be able to deal with 5 different blockchains. The exchanges maybe need to deal with 10 different blockchains. So is the primary benefit here is that you become the de facto, we will handle all of these chains that exist, or we'll handle the top 5 or the top 10 or the top 20, and we'll make sure that no matter what, if you plug into FinP2P, we take care of the rest. Is that kind of the main benefit here, is you're reducing their need to have a 10, 20, 30 developer team down to 1 or 2?
I think the main advantage here is that we're at a stage now where there are a lot of providers in the market, and it's really hard to predict which one will win. And actually, I don't think there's going to be a one winner take all. There's going to be multiple services servicing different segments of the market, different asset classes. Remember, we're talking about a market with the private market, hundreds of trillions of dollars worth of assets, all sorts of different assets. So there's going to be multiple networks. So the whole idea, and I think Dan from Securrency did describe it well on a video, and asked Adam to share the video on the chat for the group, where we are actually showing the FinP2P in operation. And Dan from Securrency is saying, well, I've taken this asset from the network, and I actually don't know which ledger it's on. I think it's Fabric, maybe Corda, it doesn't remember. And we've taken the asset and we're launching it and we're trading it on our network on Stellar. So the idea is that you have to connect once to the network with whatever ledger you chose. And we've shown transaction where the buyer is on Fabric, the seller is on Corda, the money is on USDC on Circle, and it just works because it's a transaction network. So for me, the big advantage is that if for example Polymash is not on FinP2P network, and you have, let's say, 10 clients or 100 clients that work with Polymash, you could build an adapter to FinP2P. You can connect to FinP2P, and the next morning, every one of these 10 assets will be 10 clients of Polymesh will be able to start pushing assets to the network and pulling assets from the network and trading them. So I think that is the beauty of a platform of that nature, that doesn't really try to connect multiple blockchains to multiple blockchains, but actually creates a network of routing and messaging between them.
Got it. And so, we're talking a lot about all these different blockchains. Is Ethereum just not good enough? And I mean, I obviously have my own opinions on that, but Colin, I'd love to hear, why does someone choose Zilliqa? Why would someone not just say, oh, well, Ethereum, that's where most of the developers that we've seen in the ecosystem and probably the loudest fans in the blockchain world exist today. So, what's really that main draw that would draw someone away from Ethereum?
Yeah, so I think one of our key features is security. So we look at our own language, Scylla, which is incredibly and importantly computationally verified. And that gives us a lot of surety when we're working with high value assets and trading them. So I think that Ethereum has set a lot of the standards for tokens, but Zilliqa has this built-in way of protecting the asset, which I think along with our transaction processing speeds gives us a slight advantage in that trading mechanism.
Got it. And now, question for each of you: what are the regulatory concerns when it comes to interoperability? I know the regulatory concerns are always a fun topic to discuss, right? But because now you're transporting all these assets across different networks, how do the things like compliance controls stay intact when you have these compliance controls that exist today on the chain itself through, whatever protocol it might be? How are these being tackled? And Ami, we'll start with you, and then Ryan and Colin.
This is a very difficult problem, and the way that we chose to solve the problem is to eliminate it. So the way that we work is that every asset is managed on the source ledger where it was created, and every transaction that goes into the ledger has to be approved by them. So you have a single source of approval for a transaction going in, where the regulatory compliance can be checked. And in this point of entry, we have our own, at Onera, we have our own regulation app store. Other players have other regulation, but it's basically rule-based platforms where rules are checked and a decision is made on the fly based on some sort of an AI platform on whether the transaction is available or not. Another kind of requirement is to identify the user. You need to have accreditation, you need to have KYC and AML and so on. Some entities choose to solve this with whitelists and blacklists, and we felt it was a little bit limited platform way of doing things. So instead, we opted to use a claims system like an Indy, Hyperledger Indy, but we call them certificates. And effectively, every user on the Onera network has a FIN ID, one ID, and they carry certificates with them. And the certificates can be signed by different entities on the network. So a client can come in with a KYC certificate signed by a major bank, and they go to another bank, and the other bank can choose whether they respect that certificate or not. And we're seeing more and more of that type of cooperation, where there are third parties that can certify certificates of accreditation, and everybody can know that they're trusted. And so these are ways where we mitigate the problem, and we break it into small pieces that are solvable. And we think we have a working mechanism that allows each company to bring their own technology and connect it to FinP2P, and it still works. So and that's how we solved it.
Got it. Yeah, it's sort of music to my ears. Polymesh, we call them attestations, but very similar idea, right? Where everyone seems to be moving beyond this world of whitelists and blacklists, much more into the claims type world, where you can port these attestations that have been made from one party to another if the parties want to do that. Yeah, so completely agree.
So imagine theoretically Polymesh builds an adapter to FinP2P, and a client comes in from another institution, not on Mesh, but they come with a certificate that is signed in a way that you can verify the signature, and you can look at it. Okay, this is an accredited client. You put them in, and you allow them to transact within Polymesh because you know who they are.
Yeah, exactly. So Ryan, any thoughts on the regulatory side of things? Good things you're hearing, bad things you're hearing from regulators, steps forward?
Yeah, so it's interesting because we're in the early days of tokenization and securitization. We saw a lot of focus on solving the technology problems first and then worrying about regulations after. And we've seen some of the problems that have occurred because of that. At IVNO, we approached that differently. And we spoke to a leading US securitization law firm. And we made sure that our architecture was regulatory friendly, let's put it that way, before we solved the technology problems. And a lot of that comes down to, as Ami says, being able to identify who you're transacting with. So you can't effectively follow AML regulations without knowing exactly who you're transacting with. So within Corda and within IVNO, we have the concept of everywhere, the same as FinP2P, everyone that joins the network must be certificated, they must be identified, and there must be a level of KYC that takes place before they're allowed to join the network and before they're allowed to transact any tokens.
Got it. Colin, some comments on regulation and as it relates to interoperability and where you're seeing things going?
Yes, I mean, again, very early. What we're doing is working in open finance, that is bringing traditional institutions into our world. And actually that's mimicking some of their processes into our own way of delivering tokenization. So actually we don't have full automation in this, and we're trying to help them work out how to be compliant in their original practices and then bring it into a tokenization model.
Got it. So I think we're about out of time. So last question, rapid fire. What is the market cap of security tokens 5 years from now? Ami, quick, hit me.
5 minutes. I can see it being in around $100 billion.
Love it. Ryan?
I think we're closer to $1 trillion.
Colin?
Yeah, 1.75 trillion.
Oh, Ami, you're shooting low, man. Everybody's outgunning you.
I'm very realistic.
Awesome. So we'll end things there. I guess last thing from each of the panelists, where can people reach out to you, or where can they learn more? Ami?
So 2 things. FinP2P is available. Just Google FinP2P and you will find the information. For me personally, you can reach me at ami@onera.io. For if you want to connect to the FinP2P network, connect to our nodes, to adapters, just approach me directly, and I'll be happy to work with you and assign you to the right teams.
Awesome. Ryan?
Yeah, the best place to go is to visit ivno.io. Easy to remember. We have a contact form on there, but if you want to reach out directly to me, please do. It's ryan.gledhill@ivno.io. Awesome.
Colin?
Yeah, zilliqa.com is the corporate address, but I'm on Twitter most of the time, so @ColinMiles is the quickest way to get me.
That is mine too. I'm on Twitter. You can find me @MooreGrams. It's my rap name from high school. I still have the Twitter handle, so that's always good. So everybody, thanks for coming on. Thanks for being great panelists. I hope everyone who's watching enjoyed the chat. Thanks, and enjoy the rest of the conference.
Thank you very much.
It's great.
Thanks.
Bye-bye.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
Have you ever wondered why Tezos makes perfect blockchain network for security tokens? Well, to find out, catch Draper Goren Holm's founding partner and Security Token Summit organizer, Alan Goren, chat all things Tezos with David Hendricks of Vertilo, Chris Lorna of TQ Tezos, and Kevin Marabee of Tezos Stable Technologies, and Bilal Al-Almi of Equisafe.
All right. Hey, everyone. Thank you for everyone who's watching. Thank you to all the panelists that are here. It's been an exciting day. Very, very happy to be on with all of you. And we're going to be talking about Tezos. We're going to learn a little bit about the Tezos blockchain and why it might be one of the best options for security tokens. Learn, a little bit of background, but again, thanks everyone who's been online all day. I know there's still hundreds of people who are live on securitytokensummit.com. If you're watching on one of the live streams, go to securitytokensummit.com so you could join the conversation live. Welcome everyone. Thanks for being here. I think we should start with a quick introduction to each of the panelists. I'll go around about clockwise. Let's start with Dave Hendricks.
Hey, Alon, great to see you. Thanks for having me on, and great to be on this panel with a couple of fellow travelers. I'm Dave Hendricks. I'm the CEO and co-founder of Vertalo. We're a digital transfer agent that connects and enables the digital asset ecosystem. And we can get into what that means later on, after we hear from Bilal.
Hi guys, thank you Alan for having me. It's a pleasure to share the stage with you guys. So I'm Bilal, co-founder of Equisafe. We're a French-based company with the purpose of simplifying investor management to provide more liquidity to private securities. We've been in space for 2 years now and developing on the Tezos ecosystem.
Very cool. Chris. Chris, can you hear me? You were a little, actually I did say clockwise, so why don't we go to Kevin first, and then hopefully Chris will, I know he has some connection problems.
So my name is Kevin Marabi. I've been in the Tezos space for a few years now, and I'm the founder of Tezos Stable Technologies, also known as Stable Tech, which is a consortium of many companies in the Tezos ecosystem. We build Tezos DeFi Layer 1 stuff. So USD Tez, the first stablecoin on Tezos, ETH Tez, the first wrapped ETH coin on Tezos, and Tezex, which is the Tezos exchange. It's a non-custodial, permissionless, decentralized exchange that just launched recently, enabling cross-chain swaps and token-to-token swaps very soon. Pretty soon we'll be launching TezFin, which is like Compound or Aave for Tezos. So a decentralized lending system that'll complete the DeFi cycle.
Very cool. And Chris, oh, we lost you for a second. So Chris was having connection issues before we got on, so we're hoping he would figure it out. Oh, it looks like he's back. Chris, did you get the connection? All right.
Hey, can you guys hear me?
Yes.
All right, we're doing intros?
Yes.
I'm one of the co-founders of TQ Tezos. We're a team that works in the Tezos ecosystem on a number of things. Most relevantly for this, we build a lot of open source tools and work with partners who want to build on Tezos, including those who are looking at anything in the digital security space.
Awesome. All right, guys. So as everyone watching can see, we have a very well-rounded crew of individuals here building and working with Tezos in various capacities. I guess the first main question, because for people not familiar with Tezos, I'd like to actually point it towards Chris first, if your connection will allow, to ask you sort of, give us a high level coming from TQ, what makes Tezos different from other chains, and then next we'll go specifically into security tokens. I think we lost Chris again. So, oh, Chris, I think you're back. So what I was asking is, what makes Tezos different from other chains? Maybe not. So I'll pass that one over to Kevin. Kevin, can you give us just a really 30 seconds difference between what people are used to with other chains versus what Tezos brings to the table? You're muted.
I was trying to be boy there. So fundamentally, I think the greatest advantage, which leads to all the other advantages, is that Tezos has something called on-chain governance, which allows for a democratic parliamentary process within the protocol itself to upgrade the very protocol on which everything rests. And in that way, we stay united as a community. Anyone who has any validator who has a pitch for something to upgrade the protocol, they can do it all within the blockchain. And that keeps us from hard forking. It keeps the community from splitting, people taking off and doing their own blockchain, which we've seen splits like Cardano, Ethereum, and all of that. We could argue that Ethereum would be way more advanced today if Cardano and that whole crew hadn't broken off. And that provides institutions and in finance a lot of certainty and continuity. Certainty in continuity that things will stay united, things will go together. If you're going to put billions or trillions of dollars of assets on top of a protocol, you want to be pretty sure that that protocol is going to stay united. Aside from that, formal verification, the language in which it's built, OCaml, I mean, these are things that are really great for anything including sensitive numbers. When you want to be sure of a number down to a very precise level, Tezos is the way to go. And I can't think of any use case better for that than DeFi or security token offerings.
So that's where I'll get to the first security token focus question, right? So Kevin gave a very high level, a few differences about Tezos. Why don't we go first to Dave, because we got some specific questions for Bilal about this. Dave, why Tezos? I know that you guys have built sort of a platform agnostic product, but Tezos was one of the first blockchains that you guys integrated into it.
Yeah, we started with Ethereum, like a lot of folks did. You know, if you took a look at the folks who have been in this for the last 3 or so years, which is about how long this industry's really been around. Everyone started out with Ethereum because it was the dominant smart contracts chain, and there was most of the initial engineering expertise was in Ethereum, and some of the other projects hadn't either done a mainnet release or they hadn't really developed a community. Tezos was the second chain that we integrated. And it was a really easy decision to do so. One of the things that's most important about building technology is making sure that there is a community of engineers and supporters that is not only keeping up with the existing technology base, but advancing it in context with what's happening, with users and with industry. And we decided to add Tezos to our supported chains in the fall of 2019, and it was a great decision. It's not easy to be a multi-chain digital asset issuer, but it's a very good idea to future-proof. And we made the decision, one, because the Tezos community is outstanding, and also Chris is not here, and Chris is part of TQ Tezos, but the Tezos Foundation is extremely well capitalized. At the same time, is also extremely decentralized. The war chest that the Tezos Foundation has to support the independent and decentralized development of Tezos is probably greater than I think certainly greater than consensus is in terms of a war chest. And what it does is it allows for rapid development in the community, and that's kind of something that we want to be part of. Certainly there are other protocols that have communities, but most of them don't have $2 billion that they are using to seed and support the development of infrastructure. And when you're trying to modernize private capital markets, you cannot do it on a shoestring. So that's I think a big advantage to developing on Tezos. That there is there's a foundation that's in it for the long haul. It's not an exit scam, and that just. I'm not sure if those words have been used yet here, and security tokens aren't usually exit scams. They're usually entrance scams at the worst.
Yeah, well, going into from that field, like from that statement actually to security tokens, I think you're absolutely right. I mean, I think that talking about some of the things that were talked about earlier in the day, with why certain financial institutions have felt it necessary to create their own blockchains or their own sort of intranet versions of these products. A lot of it has to do with that, with the other public chains and things like that. Actually, before I go into this, actually, I want to ask this question next. Bilal, from your perspective, you guys are selling investment opportunities to investors, and you've chosen to build on Tezos. Does it matter to the end consumer, to the investor in the deal, that it's built on Tezos versus another chain? How do you guys market that fact, or is it just for you guys a decision based on product?
It's definitely a decision made on product. Just like Dave was saying, everybody started on Ethereum. And basically, when we've done the first deal that we've called ANA in the summer of 2019, we've seen right away the congestion of the Ethereum network. So we've experienced the limits of the Ethereum networks, and it was in the summer of 2019. So we've immediately have been thinking about any other blockchain that could help make more efficient the product that we were building. And we've tried a couple of chains, and basically Tezos, when we get to Tezos, we've seen that it was definitely the more efficient. So it's definitely a product standpoint, because we provide the service to the issuer, and we definitely don't want to pay very high gas fees. And we definitely don't want to wait an hour for this transaction to happen. Otherwise, all the clients will be calling us and say, what the hell is going on? So it's a product standpoint, it's an efficiency standpoint, and we've experienced, again, many chains, and Tezos were one of the best KPIs we've seen, and so we've decided to focus purely on Tezos. And right now, it's been like more than a year. Then the by default choice on our platform is Tezos, and we support Ethereum and Hyperledger, but everybody's going on Tezos. They actually don't care. They follow what we prescribe.
Yeah, I'd like to, if I could go off what Bilal just said. He said something very important, which is people don't care. Okay, they want to go with the thing that works. Most folks don't know what database Facebook uses to store their cat pictures.
Exactly.
It's not important to them. Mongo, Oracle, whatever, they don't really care about that sort of thing. What they would care about, though, is it costs them $200 to post a cat picture. Okay, and so Bilal understands this, because anytime you have to take master smart contract and fractionalize it on Ethereum, just creating the smart contract and then fractionalizing it, you have no idea how much that's going to cost if you're using Ethereum. Depending on when you do it, how long it's going to take, super expensive. And if you're trying to keep up with the advances in finance today, where people are used to paying no brokerage fees, no commissions, the notion that they're going to have to pay a commission to move a token somewhere, just to move something somewhere, that they're going to pay hundreds of dollars for a commission to trade something beyond what the exchange pays and gas fees, then people start caring about what database is underlying. And so if you can take that and make that decision for your clients and recommend a higher throughput and lower gas cost chain that accomplishes the same thing, that alone, besides all the other things that argue for Tezos, that alone pays for it.
Yeah. Well,
it's a user experience standpoint.
Yeah.
Yeah.
Oh, yeah, and it goes beyond just experience, right? Like, it's not a secret that I've loved ETH and that I still love ETH, and I love the technology of this whole industry. But it first really came to fruition to me when we're constantly talking about changing the world. We're constantly talking about leveling playing fields, giving access to everyone. And then with the simple notion of like NFTs and trading cards. Imagine, one day I was thinking about this, I was like, imagine being my 11-year-old self again, sitting in my friend's garage going, I want to trade this comic book card for that comic book card, or this magic card for that magic card. And one of the parents running in between us saying, stop, you can't do it until you each give me $10. Like, it would be impossible, right? You would never do it. Now imagine trying to transfer, Kevin, you built a US dollar stable coin. Imagine wanting to transfer $100, but $10 or $15 needed to be spent on gas. That's just as egregious or horrible as the systems we wanted to replace, right? Like when we first started talking about Bitcoin, we were talking about replacing Western Union, right?
Yeah, and not only that, but even just the uncertainty around the fluctuations of that gas. You can look on historical gas prices on Etherscan right now and see just block to block, it can range as much as 80% change in gas. And you have no way of knowing if that's just how it's been all day and for this week, or that's the new normal, or if you should just sit and wait a few more blocks before you make that transaction. Now, how are you going to automate something? You can't have, unless like the bot's going to just sit around and wait for several blocks over to see, okay, is this the average or is this unusual? We need a little bit more certainty than that. So Tezos can provide that certainty. Also, to add to something Dave said that I really liked, the great thing about the foundation, not just building up that war chest, but why they can be that conservative as opposed to a lot of other foundations for different protocols. They were just over the years spending money left and right just because they had to ship, they had to keep up with the Joneses, they had to keep something out there. Whereas I think we have the luxury of time in Tezos. Very few times can you see the first mover in any industry or any product actually be having that first mover advantage. It's kind of a myth. First mover is actually the curse because they pay the money to acclimate a market, do the research and developments that others eventually iterate on, acclimate the laws and policies, and then it's the next mover after that that says, thanks for doing all that heavy lifting, we'll take it from here. So that kind of reinforces the drive too.
Yeah, I think you could look at it, both ways, right? Because in certain situations, right, my next question was actually going to be talking about DeFi adoption versus security token adoption outside of Tezos and then within Tezos. But I think it's definitely the case in these more serious, more traditional, more regulated financial transactions to not move too fast, right? If you're looking at institutional adoption and wider adoption, and then things like what happened today with FinP2P and what's sort of happening in this space would not happen, from day one. If Ami pitched FinP2P to institutions 3 years ago when we were all first starting to talk about security tokens, they would have asked him what the hell he was talking about. They would be so confused. And today they want to participate. Today they want interoperability and the ability to transact with each other and across platform. So bringing up DeFi versus security tokens, I want to throw my hands up like I do when I'm normally pitching to investors or talking to people. I always throw my hands up and say, DeFi is on one side, right? I do the Israeli hand thing. So they're circumventing regulation, right? And they're going, they're building products that essentially are probably the most efficient versions of those products, but completely disregarding regulation. Hopefully they're decentralized enough to where that's safe. But they're going around regulation, trying to do certain things. And a part of me wants that utopian world 100% across the board. But there's certain assets and certain things, to throw up this hand, that need to have regulation enforced, right? We know that there's probably not going to be anonymous ownership of real estate. There's certain levels of transaction cross-border and around the world where regulation is there, whether we agree with it or not. And the security token technology and the technology we're all building and things like what Vertalo is building and what Bilal is building with his investment bank is going to help streamline that process. It's going to make it easier for investors to participate in more deals. And it's going to make it easier for the people who want to issue those tokens, who are going to raise money online or distribute their shares online. It'll make their life easier in being able to understand and deal with regulation instead of, instead of making it more complicated, which is what we're doing offline, right? So I say this stuff because where I'd like to go is DeFi has had this explosion now. There's, let's say tens of billions of dollars, sort of staked on DeFi on Ethereum at this moment. And we're starting to see the beginning stages of it on Tezos. And we see what's happening with security tokens across the market. Now, where do you see adoption in DeFi versus security tokens? Let's say let's start with just offline or off of Tezos, just cross chain. Kevin, I'd like to get your opinion there. You're building DeFi products on Tezos, so
yeah, and I think it kind of it started with two schools of thought. One was bringing traditional assets and into the tokenized world, and another looked at the tokenizing technologies and built assets up from there, which we could call governance tokens or even algo coins and all of that. But what do we call a hardback stablecoin that's backed by fiat? Somewhere in the middle. So, but compliance is just as important, definitely for USD Tez, and everything else that's built. But in the reimagining, it's just kind of apples and oranges with previous, regulatory laws that are there to protect us when it comes to these traditional assets. But I do see a convergence between these two worlds and a symbiotic relationship, especially when, people might not be seeing it today, but because, they can just take, their Bitcoin, wrap it, put it on Compound, and borrow against it, take out some coin, put it in something else, sure. But what happens when, we do that too much collectively? Where is the other value coming from? We're going to hit a limit. And at that point, we're going to have to start collateralizing other assets, borrowing against those assets. So, we do that all the time in traditional finance and banking. Our houses, put up our car, put up our, whatever we have that's good. And these things are, it's great because it enables people to free up capital to build things, in the finance world that they otherwise could not, for innovation to happen, businesses to get built that otherwise would not. The lending system is just wonderful on that end, and being able to take those traditional assets and collateralizing them is fundamentally a huge part of it. In fact, even in the first piece I wrote on TezFin, which is our version of Compound, our lending system, I went right into the idea of like, okay, what if you don't have the money to borrow against? What do you do? And I used the case example of the first one of these assets on Tezos to be built from Aspen coin, from elevated returns. You could, that NFT could serve as some form of collateral, and then we can get an appraisal for that. Somebody else can put a bid on that. That we can use these technologies to put a value on a certain asset, appraise it, and then use it within the borrowing system as we do anything else.
Well, in a more efficient way, right? Because we can do it now with our houses and things like that.
Right.
I'll jump ahead to a question I had. We don't have a ton of time, but Bilal, when we were messaging before this, you actually brought up lending protocols and lending based on security tokens. How do you feel that's going to pan out on the Tezos blockchain?
So, like Dave was saying and Kevin was saying, the community in Tezos is very strong. And we've been sharing the same standard or converging to the same standard very quickly in the difference of Ethereum. So in a technological standpoint, it's going to be very quick to but in a regulatory standpoint, it's different. DeFi is leveraging decentralization and some kind of gray area because they're using both decentralization and full crypto. And tokenization, like we are doing, is kind of trying to digitize traditional finance and improve the transaction infrastructure. So it's two different value propositions that will take time to converge because our client is traditional finance client. DeFi is a completely new market with people dealing with crypto for a couple of or more years. But it's like you were saying today, so DeFi didn't reinvent anything. Today, we're already collateralizing our real estate to get loans. So it's just a matter of time before we'll be able to collateralize our security token and get loans in counterpart. So we've been working on that for the previous months, and I think we'll get there very quickly within the next 4 to 6 months. We'll see the first use cases being thrown out into the market. It's just being a matter of time, a matter of regulatory framework, which is being dealt in most of the Occidental countries. And so then it's going to be a matter of adoption from traditional actors. But we've seen with the big bull run that we've seen on Bitcoin and the other cryptocurrencies that there is a huge spike on adoptions lately, and it's just a matter of time.
So Dave, I wanted to jump to you actually. So
I want to knit these things together.
Go, you go.
If you got a question for me, I'll take that too.
You go. Do your thing.
Yeah. DeFi is just debt, okay? And most people with security tokens, it's just really equity. Those things are both normal primitives, okay? And funny enough, when you bring on a collateralized object and you take out a loan against it, if for some reason that your ratios get out of whack, then there's an automated liquidation of that asset. And what the DeFi markets haven't come to grips with yet is that a liquidation of a loan or a debt like this often creates a security because there's a secured interest. And so the markets for DeFi and the markets for so-called security tokens, or programmable assets or digital assets, are naturally going to converge. The people that want to borrow are going to be in the same place where people want to raise, okay, and who want to get liquidity. So they're not really they're not apples and oranges. They're really going to kind of end up at the same place. So
yeah. So I mean, and going to Bilal's comment about the bull run and more adoption and things like that, you deal directly with issuers and folks who are looking to tokenize. Did you see an influx of inbound leads? Are you seeing a lot more people interested in this? Is it slow and steady? How do you see the growth happening? And as a secondary note on that, back to the one of the original first questions is, does Tezos matter to your issuers?
Well, Tezos definitely matters I'll go backwards. Tezos definitely matters to the issuers because they don't want to be on the hook for gas fees for either issuing the asset or for the secondary trading. But let's go to the steady drumbeat. And I haven't really heard this covered today. I wasn't able to listen to everything, but I'm not sure that folks appreciate that until Q4 2020 in the United States, the so-called security token market was largely impossible to happen. Until the SEC issued its no action letter to FINRA on September 25th, 2020, and then the SEC issued their no enforcement statement on December 23rd. This market actually wasn't really even possible, and it had a lot to do with broker-dealer custody and the settlement function. So there's a lot of folks saying there's no liquidity or anything like that. I'm not even sure those folks are even participating in any of these discussions when they talk about this, because it has nothing to do with that. There's no liquidity because no one could actually bring an asset to these markets and expect them to order match and then settle and then clear. Okay, it wasn't actually possible. So if people are looking at the market cap of the so-called security token market and they're saying, oh, it's not as much as I'd like it to be, well, that's because no smart issuer would have brought something to a market that was not regulated to provide systemic liquidity. You couldn't settle a trade, and you can only settle peer-to-peer. We're not settling security token trades peer-to-peer is not a thing. Okay, we already can do that. We don't need technology to settle things peer-to-peer. That's why it takes 4 weeks to settle a real estate transaction right now, or for you to sell your options. So creating a whole market infrastructure took time. The folks at Tezos have been working on FA2 at TQ Tezos. There have been a lot of folks like Bilal, our team at Fertalo, some teams that were featured earlier today. They've been taking a long-term approach to creating trustful, reliable, connected architecture. Onera is doing this with interoperability. We do it with APIs. It takes a while to get here. It's not, this is a get rich slow scheme. Okay. So everyone needs to be patient. And, we're very busy. Let's just put it that way.
Yeah.
And finally, maybe 2021 can be the year.
Cool. So I got lucky in that we're buying a little bit of time while another panelist for the next panel refreshes. And this is, what you're bringing up brings me to sort of what brought me to this space originally, the crowdfunding space and rules and regulations moving at what feels like to me a snail's pace, but maybe to people in the traditional finance world, we've been moving really fast. But it's felt very, very slow. But what's exciting to me is one of the things that Bilal also mentioned in advance was was, bringing this to the masses soon and trying to unlock the ability to bring in non-accredited investors to the mix, because I think that's important to the blockchain culture and what we originally wanted to do. I still think bringing on institutions in certain larger deals and more liquid deals in the short term will help create a more liquid market before we bring in startups. But allowing everyone to participate is so important. Bilal, can you touch on that? And I know that maybe Kevin can then touch on that, of course, because he's bringing, keeping it stable with USD. You're muted.
Sorry, just very quickly on the previous topic, I would like to thank all the work of the Tezos ecosystem, and particularly Nomadic Lab, who've been fostering adoption, specifically on CBDCs, where we see French central banks choosing Tezos for their CBDC. We've seen huge corporates like the energy company EDF and insurance company becoming Tezos bakers, and the first Euro stablecoin called LUG, issued by Société Générale SocGen. And so this is part of the facts that are fostering adoption. And we've seen, like most of the institutional and accredited investor hearing about Tezos and being happy with the choice that companies like us and Dave and Kevin have been choosing for a long time. And it's funny because they've been choosing, they're talking about the technology where the first mover of the previous year haven't been talking about technology. They're most focusing on the improved user experience and infrastructure that have been brought with blockchain technology. And then recording on being able to access retail investor. So retail investor represent the masses. And so this is one of the factors that brings liquidity faster. And security token companies that are trying to deal with those uncertain regulatory frameworks, it's been very hard for them to address those retail investors. And so at EquiSafe, for European people, we find a way of building secondary markets for retail investors and try to fostering liquidity. And this is also part of the factors and variables that will definitely fuel this the adoption of this space. So exciting. Yeah, that's everything.
Oh, Reg A plus. Okay.
Yeah.
Go ahead.
Dave just says Reg A plus and drops the mic. Yeah, so Reg A plus, for people that don't know, is the ability to essentially crowdfund. Actually, in the next panel, we're going to have Kinsey on. Brian as well is an expert in this. And so in the next panel, they'll talk about Reg A plus, hopefully. Well, now I hope they will. It's basically the crowdfund rules and laws that'll make it easier for people, startups and companies to raise money online from non-accredited investors. And it removes some of the limits of going public that you might have. Kevin, real quick, we actually have to hop off. We've been really, really long, but I want you to just mention maybe some of the things on the Tezos network that make it unique from the adoption standpoint and the global sort of borderless standpoint. I know we have such an incredible community on Tezos around the world, and you're a big part of that.
Right, yeah, and also, and just to, I think, leveraging the last two things that were said, really, these components that build up Tezos DeFi or Tezos security offerings, they're not, they're greater together than the sum of their parts. It's not really just about building these incremental steps and then increasing adoption. There are many situations and scenarios in which really the whole thing, you have to have a complete cycle. You have to have a complete ecosystem. So we've had assets, we've had Tez, we've had a native staking on Tez, we've had counter assets, stable coins, we have an algo coin, we have these decentralized exchanges going on, but we don't have a lending system. And with that kind of reaches a dead end for in a lot of cases, because whereas you can provide liquidity and you can make a return that way, there's more incentive also when you want to do lending to go back to Compound or Aave and convert backwards, despite all of the inherent disadvantages of Ethereum right now and what has been for a long time and probably will continue in the future. But once you have that, then we'll have what DeFi on Tezos, what Ethereum was able to achieve in the last year that they didn't have before, which was a reason to bring your money in and keep your money there, as opposed to just buying an asset, holding it, waiting for some price appreciation, and then exiting. And that's why you see total value locked as a very great metric now. So you'll start to see that TVL increase on Tezos side once we get that completion, and things will escalate very, very quickly. And just also to add to what Dave said about the liquidity, just look at DeFi Pulse total value locked. I mean, a year ago, we were not even like 1% of where we are now for total value locked in DeFi. And now we're all saying, oh, well, there's liquidity in DeFi. It's like, well, a year ago, they were saying the same things that they're saying about security token offerings. So this world changes very, very quickly. That's the point. And if you're not seeing that, you're not seeing why these jumps happen so quickly, not just the escalation, but just rapid escalation, you're not paying enough attention to see. So I think there's a great advantage to watching and getting involved early, not even just as an entrepreneur, but as a participant, because it's going to be a very interesting ride for the rest of 2021.
It's really exciting. So with that, I want to just thank everyone who's watching, and of course, Dave, Bilal, and Kevin for being here. Links to all of their websites on our site. So please check them all out, and have a great and excellent rest of the day, everyone.
Thank you, Alan. It was great to share the stage with you guys. Take care.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co. Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Our next session actually focuses on the bull case for tokenization, but also its overall importance within the sector. So please welcome our fantastic moderator, Kinsey Crowan of Prime Trust. We also have Brian Korn of Manat and Alex Nascimento of 7cc Blockchain Investments. We have Aiken Sawyer of Barnbridge also joining the discussion as well.
Okay, thank you so much. Well, here we are, the bull case for tokenization. I'm Kinsey Cronin, and I'm on the team at Prime Trust and Fund America. We have an awesome panel here today: Brian Korn, Aiken Sawyer, and Alex Nascimento. I'm going to ask each member of the panel to please introduce yourself along with a brief introduction, and importantly, answering the question, tell us, how are you involved in tokenizing the world? Aiken, you want to go first?
Sure. So my name is Aiken Sawyer. I am part of the core team of a protocol called Barnbridge. We are a risk tokenization protocol. So we basically, within DeFi, allow you to tokenize all sorts of risks, ranging from interest rate risk, price risks, and just about any sort of risk within the system. We've built a platform that allows you to quantify that risk, transfer that risk, and ultimately price it.
Awesome. Brian?
Yeah, hi. Brian Korn, partner at Manav Phelps. We're a law firm of about 500 lawyers coast to coast. I'm the head of the fintech and the crypto practice And I was formerly at Citigroup and Barclays and Paul Weiss and Sidley. We are seeing a ton of interest in taking functions that used to be offline and complicated and long dated and using tokenization in order to shorten the time and cost and complexity. And you're seeing that with DeFi, you're seeing that with what we call securitization as a service, where real world assets are being sent out through Ethereum and other blockchains. And we definitely see that with NFTs and other nexuses that it has to entertainment, arts, and other providers who can connect directly with their audience.
That's great, Brian. How about you, Alex?
Hi, Kinsey. Great seeing you. My name is Alex Nascimento. I've been in the security token space, I guess, when I met Kinsey back in 2017, early 18. I teach security tokens and blockchain applications at UCLA. I ended up writing a book called The STO Revolution that you can find on Amazon, and proceeds go back to UCLA. And I am a managing director of 7cc Blockchain Investments, where we focus on this asset class.
Fantastic. So we've got some great experts here. And at Prime Trust and Fund America, we're providing a financial rail system for connecting fiat tokens and cryptocurrencies to exchanges, securities, including securities exchanges, merchants, and issuers of new security tokens, including under Reg A+, which was just mentioned in the last panel, and I think we're going to touch on a little bit. I'm also the host of a brand new podcast called In Crowd, which is about equity crowdfunding law, or regulations rather, not law. I'm not a lawyer. And you can find that at incrowd.fundamerica.com. But let's start with you, Brian, and with the whole panel. We did promise we were gonna mention something about Reg A+, and we heard from Hester Pierce earlier today. And she's been a commissioner for the SEC since 2018. The SEC responsible for making some of these regulations that are allowing tokenized securities and equity crowdfunding that can become tokenized. How do you think that the new administration is likely to impact regulatory response to asset tokenization?
So it's a really good question. I think that you're going to see a stronger push to protect investors. And that's not just because we have a Democrat in the White House. The SEC is bipartisan by statute, so it will always be 3-2 in favor of one party. And President Biden has appointed Gary Gensler to be chair of the SEC. He was formerly chair of the CFTC under President Obama. I think that what you saw in the last administration, just at the end, and the SEC, I don't think changes all that much, but there was an increase in the Reg A Tier 2 offering amounts, where you can now offer up to $75 million to both accredited and non-accredited investors under Tier 2, which allows you to bypass the state reviews. It had formerly been 50. And this amount refreshes every 12 months. So you're able to go back every 12 months and continue to make that same offer, as long as you keep the offer open, if it's a continuous offering. And so I think that is extraordinary for the token world for a couple of reasons. When ICOs first came out, people were taking the view that they weren't securities, and therefore I don't need to worry about the SEC. I don't need to worry about Reg D or accredited and exemption or Reg S or being offshore. These are tokens. They have a use case just like arcade tokens, and I'm not going to do that. The SEC has really come down hard in cases like Kik and Telegram and Ripple. And I think that most prudent people are taking the view that it's very hard to find something that's going to fly in the use case category if the token is tied to a common enterprise. If there's a bunch of people in a room that drive the value up, it's likely a security. If it's something totally decentralized and totally unaffected by any kind of common enterprise, like you had with Bitcoin, and Chair Jay Clayton said that Bitcoin is not a security in the last administration, then I think that's different and that's decentralized. What's great about Reg A is that under the SEC rules, and this is a complete fluke of the statute, it's a Section 3 security, which means it's an exempt transaction, not an exception to the registration. So somebody that sells this out to investors can resell it right away. And so if you have a device that can be sold to non-accredited investors and is freely tradable, unlike a lot of tokens that are sold to accredited investors and then have a 1-year hold period because they're Reg D and they have to sell under 144, that's groundbreaking. You know, that moves the needle quite a bit. The downside of Reg A is there's, you know, a 3 to 5 month period where you have to respond to comments. You need audited financials, and you need to keep up public reports that are not as robust as public company reports, but still something to check and keep in mind. So, you know, a lot of pluses and minuses, but I think for this industry, more on the plus.
A plus. Alex, did you have any thoughts on that?
Yeah, no, I think that since we started discussions in the industry about security tokens, the approval of a tokenized security under Reg A or Reg A Plus was always kind of like the holy grail, right? And then back in June, if I'm not mistaken, it was 11th of July or 11th of June of 2019, that was approved. And that was a big kind of opening of the floodgates for the industry. Now we see an increase on Reg A Plus from its previous mark to 75 million. 75 million is a good chunk of change in my book for any company to be raising on a yearly mark. So we keep seeing, I think, more companies interested in this. I think the main challenge in the beginning when this was approved was that it was quite expensive from a legal perspective to set up a Reg A. And I think that as time goes by, this is going to become more affordable.
Yeah, we haven't seen too much activity in the secondary trading market yet. There's a lot working on that. But I think the tokenization aspect, it's basically going to replace the book entry shares model for these Reg A companies, right? So it creates more opportunity for secondary trading and will probably be more transformative there than in the initial raise. The initial raise right now, I think it actually complicates it a bit. The companies that are looking to apply a token to their Reg A Plus raise, it's just another level of thinking. But luckily, I mean, you can add that token later. You don't have to issue it out as a token. You can issue it out later if you want to. Akin, is that a world that you're spending a lot of time in?
Yeah, I mean, so I think to the first question you asked, you know, I think as time goes on, I think the administration will be forced to take a fairly pragmatic view into the space. I think that there are many encumbrances in the traditional finance space that make it, you know, vastly inferior to decentralized finance in certain ways. And you can already see a desire for capital to want to move into more efficient markets. And so, for example, you were talking about DeFi earlier. Our protocol launched as a DAO first. So we have no centralized entity. We have no real entity in the real world. We're purely a digital platform with a governance system that's decentralized. And we're seeing more and more projects adopt that as, you know, some sort of a protection against, you know, being labeled as a security, or at least being able to make a strong argument that, you know, these networks aren't issuing securities and they're sufficiently decentralized. And I think because of that, you know, it's just one additional attribute that makes DeFi more superior on a number of vectors. And the traditional regulatory system will need to be a lot more, you know, pragmatic in how they open up the markets. And I think it's going to be a tough balance because, you know, regulators have to balance, you know, providing, you know, some assurances to users and the public, and, you know, keeping a secure system. But at the same time, like, regulation is not there to stifle innovation. So I think it's going to be a challenge of, you know, looking at how technology can be leveraged, one, to, you know, push more fairness in the financial system and through decentralized platforms, while, you know, thinking about new rules that still protect consumers but do not stifle like the growth in the market. So, I think people will vote with their money, and as more money comes into centralized systems, then the regulators will have to sort of modernize to fit that new world.
Yeah, that leads really well into the next question, Akin. What do you see are the ways that tokenization is leading to capital efficiency compared with traditional finance?
Yeah, so I think in the traditional world we live in today, it's an intermediate. It's mostly an intermediate system, right? So at least in the public markets, intermediaries kind of control and sit in the middle of transactions. And I think within that system, plus the regulation and compliance costs, there's a lot of cost in the system, right? And there's a lot of cost between someone who's on one side of a transaction and ultimately the person they want to transact with. And a lot of that intermediated system essentially can be replaced by these decentralized protocols that can be provably fair, that essentially take out the need to have all these compliance and costs, because you can audit the code, you can see how it behaves, and there's really no, you don't have this intermediate counterparty situation. You can just trade peer-to-peer with a protocol as the intermediator. And so I think that fundamentally is a big paradigm shift, because it effectively makes, anything you can do in traditional finance world, you can essentially program into a protocol, right? At least a lot of the core functions of determining how capital is allocated. And because of that, it's just, financially as a network or a marketplace, it's like moving a lot of the functions that sit within centralized authorities into the marketplace. And everyone now gets to play in that marketplace. That's basically transactions costs go down to, right, the cost of, or close to zero. So I think that's the big fundamental shift. So.
What do you think is going to happen then for things like, gatekeepers that are put in place now in our current system? There's obviously a lot of middlemen, right? But oftentimes those individuals have to have a license, right? They have to take tests, they have to go through a process, and then they're responsible for operating in a certain manner. And if they don't, they lose their license. How does that translate into an automated system? Do you have thoughts on whether we're going to be missing something there as far as accountability?
No, so I think both systems will still coexist for a long time together, right? I think the intermediaries will, capture value by integrating into these decentralized money markets and still providing the same services that their customers and users are used to. But I think the difference is individuals will also have the option of directly entering these markets themselves, right, without permission, and being able then to transact, right? So yes, there will be challenges in that. You'll probably have some users who get burned or don't really understand how to use these systems. But I think over time, the point is people will have options. And I think ultimately, as people learn and understand how to manage their own funds, custody their funds, know how to use these systems, you'll see a transition of users into these markets because they don't necessarily need the intermediary. And I think fundamentally, where you don't have intermediaries who are fiduciaries, then it sort of puts the regulatory system we have on, a little bit aback, because if there's no intermediary to regulate, then what are you going to regulate, right? And maybe to some extent, regulation moves more into verifying that protocols are fair, right? Being able to audit these protocols in real time, right? I think the regulators, to some extent, I think it actually solves a lot of problems for regulators themselves, because if the markets move into this decentralized world where you can actually see activities on chain, you can monitor them in real time, then it actually gives regulators a weapon they've never had before, which is like, a lot more transparency into the financial system at any given point in time. So I think it'll be interesting to see how the regulators shift, right, in this new world. But I think it has advantages to users and the regulatory system as well.
Brian, do you have thoughts on that coming from the legal perspective?
Yeah, no, it's really interesting, and Akin makes a lot of really good points. The world we used to live in was one of accountability, and where mistakes were reversible. And if you lose your password, you don't lose all of your money, and variety of other types of safeguards that we have, which we count on with respect to a centralized marketplace. Decentralized is scary to a lot of regulators because the counterparties in many cases are unknown. We could be dealing with people in countries where we're not permitted to transact. There are a ton of examples of people who have lost their pass keys and not been able to recover any of their assets. And that's the kind of devastating outcome that unfortunately they don't want to deal with. The biggest driver of regulatory activity is customer complaints. And if you don't have a system where you have gatekeepers, if you had a system where anyone could be a lawyer or anyone could be a doctor, I don't think anyone would really want to do that or operate in that situation, especially the doctor. There's a lot of people who are great lawyers who don't have law degrees. But that's there are rules and there are ways that we've evolved as a society, and I think that DeFi is groundbreaking because it shatters a lot of that structure. It allows direct participation in a way that's much easier, without intermediaries, without a lot of the complexity and cost and time delay that it takes. Take a securitization, for example. That's a long dated process. You probably need about 100 million of assets to sell through. And there are DeFi protocols out there like Centrifuge that are just, selling assets out in almost the same type of transaction, but one where people could just sign up and invest, and at the end of the day, they've invested. Now, some of the safeguards were good. We want KYC, we want AML, we don't want people hacking you or working, to steal your money. But at the same time, innovation is very hard to control, the good and the bad, and so I think that that's part of the process here, and we're really still in the early innings of this, even though the market is tremendously deep in terms of the number of participants.
Yeah, no, I completely agree with Brian. I think we're far away from seeing regulators allow a fully decentralized environment. I think that there is room for that asset class, like there is room for any other kind of asset class. People invest in all sorts of things, and I think DeFi is only going to grow. But there's two parts there, right? As an investor, you want the ability to buy a security that you lose your private keys, and you call someone and you say, hey, I lost my private keys. Can you reissue my investment? Like, you want that. Like, which investor doesn't want that on the security, right? If you're buying a cryptocurrency, that's a different asset class. Then you're comfortable with that risk. On the other side, like Brian said, regulators have one single, and we've been speaking with regulators around the world to try to stitch together this kind of security token environment. There's two parts to it. Regulators are there to protect the small investor, right? And if they can't do that because it's on a decentralized ecosystem where they can't point out someone to be responsible, then why is the regulator there? And will the regulator allow that to happen? I don't think so. And then the second part of it is I feel that the crypto world believes on this near to come environment where we're going to trade securities cross-border seamlessly. If you look at history, that has not happened. Like, there's not a single overarching rule for securities across borders. Are we going to have that in the future? Hopefully, but I think we're still a few years from that.
It'll be interesting if who knows, we may see the regulators really becoming tech companies themselves, or tech audit companies, blockchain analysis entities. I guess company is the wrong word, but that's what the regulators may end up being. They may end up being highly technical. What's interesting though, when we talk about losing a key and then losing the asset, I mean, if you own a security, let's say that a stock, then that's got to be associated with your name in our current system. You have to be AML, KYC, you're a shareholder. So that should mean that if you lose your key, it doesn't matter, because under the blockchain system that is doing all the record keeping, even without an intermediary, your identity is going to be preserved, right? So just because you lose your key doesn't mean you're going to lose your asset the same way that you would if you lose a fungible asset like a or even just a non-traceable NFT. But if you lose Bitcoin, it's not attached to you. If you have your name attached to the NFT that you own, even if you lose your key, you still own it. And that would be true of a stock if it was modeled after our current system, where you have to know who owns the share. So I wonder what that is going to look like in the future.
It's crazy though, because there's people who, there's the business person who died and no one knew his laptop password, and he had $250 million of client accounts, crypto accounts on his system. You can lose access to something even if it's tied to you, and you aren't able to sell it or monetize it. And so, I think that if you're on a large network like Coinbase or Gemini, you don't need a key, right? You have a password, you lose your password, they have a two-factor authentication, and eventually you'll get it back. The MyEther wallet, the MetaMask, those kind of scare me because, I have a password that's in a desk somewhere in an office I haven't been in a year. And it's very difficult to grapple with that kind of reality. I think people are comfortable. The technology is great, and but there's also a lot of harsh realities that come with being decentralized. If you're too decentralized, then there's a lot of drawbacks.
I think
those are different asset classes, right? Like if I'm comfortable with the cybersecurity risks of owning Bitcoin, then I buy Bitcoin. If I want a security and the safetiness of calling the SEC because there was a fraudulent behavior behind that issuance, then that's a different asset class. I think there are bananas and tomatoes and apples, and I think we should think about them differently.
I mean, I think I see it a little bit differently. And I think that even today in DeFi, I think most of the capital in DeFi is actually intermediated capital, right? I think a lot of the capital in DeFi is coming from trading firms that are very sophisticated, have sophisticated systems, have Solidity developers on hand, and they're managing funds for their LPs, right? In the same way they've managed funds for their LPs all throughout history. And I think the nature of, I think over the long term, a lot of the capital in DeFi and into the protocols will just be abstracted out, in my view. And you'll have basically, I think, capital shift within the current financial system from the heavily regulated sides of the market to the more private sides of the market where they have the expertise, right? Maybe the regulatory infrastructure shifts there to some extent, but you'll be able to basically have the option of, going to your financial advisor, they manage your keys, they manage security, and they manage all your interactions with these protocols, but have built their own infrastructure around it to cater to that client base, right? So, I mean, and it's the same way I think in the future, a lot of DeFi will be on Coinbase, for example, right? Coinbase will have access to these yields, will build products, right? Will filter through and provide some level of assurances around what kind of securities or what kind of assets, they provide to their users. And you'll have millions of users on those platforms. So I still think that the nature of how people interact with the system might not really change that much, but the intermediaries who are fulfilling those functions that we see today in traditional systems could change remarkably.
Yeah, I'm going to play devil's advocate for a second on it because, there's also the school of thought, not your keys, not your crypto. And personally, my Coinbase account was hacked a couple of years ago, and all my Bitcoin was stolen from Coinbase. So if I had had that Bitcoin elsewhere, I would, and with my own key, it would have been more protected. It was a SIM swap hack, where they hacked AT&T first, and then got the 2FA authentication by hacking my cell phone first, and then that they went through that for Coinbase. So, and there's been a lot of that. So, it's an early system. I wouldn't say that I'm totally sold either way, although of course Frame Trust is a custodian, so I'm not anti-custody by any means. I think you guys are right. I think we're going to see it come out in a lot of different ways. There's going to be options. Alex, are you seeing a lot of institutional money participating in this security token ecosystem?
Yeah, there's a lot of institutional money coming into space, right? And that was the main thesis that drove us to explore the space back in 2017. We're already speaking with some large financial institutions that were playing around with it as a test lab. We saw things like back in 2019 when BTG Pactual issued the first backed bank security token, which was a REIT, and they now paid over already $200,000 in dividends. You're seeing banks like Santander, which in 2019 issued a bond of around $20 million. We talk about security tokens. It was a very interesting experience. I went to Shanghai for a conference where I was not allowed to speak about security tokens, but at the same time, in December of 2019, the Bank of China issued like a $2.8 billion bond via security token. So I think that institutionals and large institutional players are driving that, and we're seeing more institutional money coming into the space. As a reflex of that, or as an illustration of that, we're seeing like the price of Bitcoin go higher every time an institutional player comes in. And not a security token, but Fidelity just filed for a Bitcoin ETF, which is probably going to give Fidelity its in-house Bitcoin price index. So yeah, I'm pretty bullish on institutional money and the security token space.
Yeah, I think everybody, that's the common theme here, right? We're just running out of time here. And there is one topic we didn't get to, which I would like to maybe briefly touch on, onshore, offshore companies. So basically having an onshore operating company, an offshore foundation that's going to mint and issue out the tokens. Brian, do you think that is going to stand up to scrutiny?
So far it has, and we'll see if that lasts. The premise of the onshore offshore is you have an onshore issuer and an operating company and a promote company that manages assets, manages subscriptions, does a lot of the legwork. And then there's a decentralized offshore trust or other vehicle, which usually has an unaffiliated custodian. And the premise of this is that that vehicle can be the currency minter for whatever the token is, as a way of taking the security, if it is a security or token, out of U.S. jurisdiction, and also decentralizing it, removing the control element that the operating company has. We're effectively treating it like an unaffiliated third party. And so if I told you that there's a trust that's related to another company and they're issuing tokens and sending them directly back to clients of this business, you would say, well, that's probably an affiliated transaction and that would be collapsed for tax and regulatory purposes. If I told you that there's a trust that is owned by different people, run by different people, and it issues tokens to a variety of different companies and issuers, then that starts to look more and more like something that would pass regulatory scrutiny. And so what we're dealing with now are white papers and protocols where people are getting very creative and trying to convince themselves that if they're in the Bahamas or Bermuda or Luxembourg, that somehow they can build something that's affiliated and yet decentralized and not regulated. And I think that's partially having your cake and eating it too. It is a security if it's based on a common enterprise, based on the efforts of others. And it's going to be very difficult to overcome that presumption if you have a trust that only issues to you. And so, stable coins, I think, are good examples. I don't think those are securities. I think that they start to earn interest because they're used in DeFi, so they start to look a little bit like bonds. But at the same time, if you have it where it's set up in a way that you have offshore entities that are minting coins, not for the purpose of one issuer, but multiple, then I think that that's something that would likely work.
And is there a reason those have to be offshore, the minting company? I mean, is that just to avoid needing to register, or could that be done the same way onshore?
So it could be onshore. The offshore element adds a slightly better layer of protection in the event that the legal analysis is wrong. And the SEC or somebody, or a state, actually states are very active too, approach you and say, well, we think this is a security and you're issuing securities out of a Delaware trust to residents of Rhode Island and Massachusetts in violation of law. I think that aspect of it is, scares a lot of people, and there's a lot less interest from regulators, frankly, if you have transactions being done in an addressless virtual world by an offshore entity.
Akin, have you been looking into anything like that in your business?
Yeah, I mean, the way we kind of look at it is, and even if you look within DeFi, like some of the large DeFi protocols today that have a large share of a TVL, a lot of them started out having foundations that held tokens in different structures at the beginning, but a good number of them have wound down all their structures in the real world and just migrated straight to DAOs, right? And I think some of that is because of there's still real risks, right, in terms of how we regulators see, these various aspects of different, interrelated structures and how they come down on that. So that's still a big existential risk. But I also think there's a cost reason for that as well, which ultimately, DAOs and being able to go DAO first, which is what Barnbridge did, is ultimately a much more cost-effective structure, right? And I think over time, as in the capitalist world, capital looks for where it gets the best return on its investment. And I think you'll see more and more as DAOs begin to take shape, and we're seeing that already even in DeFi, where most of the new projects coming on are DAOs or have some plan to become a DAO. And I think some of that is because of all these regulatory risks, but also the cost of just operating to try to evade or design systems that are regulatory proof, and that costs money. And I think people will realize that there's a better way and a less a more secure and less cost and more cost effective way to do what they need to get done.
And the cost, you think, is the bulk of that, paying people like Brian, covering legal costs, or is there something else really that is adding to that cost?
And I think it's something else, and I think it's ultimately the other virtues of having DAO structures, right? It's the fact that you have less intermediaries that are sort of getting in the way to some extent, and that provides some level of friction. But ultimately, it gives power to the individual participant, who now has ultimate choice on if and how they want to participate, and everyone participates by the same set of rules, right? And I think that's a big novel innovation. I think that's powerful because in the regulated world, it's whoever has the most money ultimately, right, that can hire all the experts, hire all the legal opinions, and can pay for that and design a structure that works. Like, that's who ultimately has access, right? So I think the whole point of decentralization oftentimes really is empowering individuals, giving them the ability to manage their funds, their access, their power. And I think that ultimately is the reason why we're seeing more and more DAOs evolve, and then everything else is just icing on the cake.
Thoughts on that, Alex?
Yeah, not to go back to the DeFi model, but just to stick to the security token and issuance of tokens. One of the reasons and projects we advised in the past tend to go to like the Cayman Islands of the world and the Singapores of the world, which is a bulk of our clientele have been doing, because it's cheaper. You're trying to issue a security or an STO, and you're trying to do some primary raise. If it costs you a few $1 million to do it in the US, and you have the regulatory burden of doing it in the US, and you can do it offshore for a fraction of the price, and the challenges of raising primary capital are going to, that responsibility is going to be sitting on your lap, and you're going to have to, hustle and find the money, then you just go for a cheaper, more friendly jurisdiction. I think it's just as simple as that.
Well, it can be simple, not always simpler, though. I think Brian can probably speak to that. But unfortunately, this is our time. I want to thank everybody for listening, and thank you so much, Brian, Akin, and Alex, for participating on the panel today.
Thank you. Thank you, Kenzie.
Thank you very much.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
Real estate tokenization is an emerging trend representing the convergence of real estate investing and also blockchain technology. And our next group of guests will share everything that you need to know on how to approach this very specific asset class in 2021. So please help me give a warm welcome to our moderator, Kieran Aviv of Accrue, alongside Jude Rev of Durento, and Mohsin Masood of Accrue also, and Michael Flight of Liberty Fund.
Hello. Welcome to the third annual Security Token Summit. Thank you so much, Draper Goren Holm, for having us here today. I am very excited to be interviewing and talking to these experts about everything real estate and tokenization. Let's quickly hop on over for some intros. Let's start with Mohsin.
Hey, my name is Mohsin Masood. I'm the founder and CEO for Accrue. Accrue is a platform for fractionalized real estate investments, and we truly believe in making the exclusive inclusive and democratizing commercial real estate investments.
Jude.
Hello, my name is Jude Yoda-Regev. I'm the founder and the CEO of Jointer.io. Jointer is the first of its kind commercial real estate decentralized REIT, and we are focusing on solving the liquidity issue in the commercial real estate industry as an umbrella above all the tokenization. So it's a top player above everybody else.
Very interesting. I want to hear more. But Michael, please go ahead and introduce yourself.
I'm Michael Flight. I'm CEO of Liberty Real Estate Fund, and we are putting together and launching the world's first net lease real estate security token.
Amazing. I'm sure everyone in the audience and the attendees can't wait to hear more. So it's going to be a free-flowing conversation. Nobody wants to hear what I have to say. We want to hear what you all have to say. So I also want to congratulate Mohsin on his launch today, and he was speaking earlier. Accrue is the proud sponsor, the title sponsor for this event, and I'm very excited about that. But let's hear, we have our introductions, we've done some, we know what all of you are experts in real estate tokenization. I wanted to bring something up to just start the conversation. And if we can actually, everybody can mute themselves while they're not speaking. That is one thing that we're, we want to make sure so that, great, thank you. So how does tokenized real estate compare to traditional real estate ownership? If we can start with that would be great.
Well, I think the biggest issue, and thank you very much, and also congratulations, Mohsin. You've been working really hard on that, and the commercials and the website look fantastic. So congratulations. But I think the biggest thing is that tokenization unlocks a previously thing that was locked in. You've got like $280 trillion worth of real estate assets, and now it's going to give investors that wouldn't ordinarily be able to invest in this product, the ability to invest in this asset class. And then the other thing is we've been doing private syndications. And so if somebody gets into a private syndication or private partnership with us, they're actually locked up for a number of years. And with security tokens, we believe it gives investors really unparalleled, not only liquidity options, but also other extra options that we can get into later.
Great, awesome. Jude, is there something you'd like to say on that?
Yeah, I mean, I think everybody here and in many places already know my approach. So when it comes to tokenization, I kind of among the few that think that it cannot work, at least not in the way that it's been created so far. And the reason that tokenization cannot work because it's not different than digital paper. That's what it is. It's just digital paper. And you still need to do everything around it. You still need to do fundraising. You still need to comply with Reg D. You still, if you take property under LLC, you still need to be limited to 100 shareholders. You still need to, whoever buying your token from you, your security, still need to be accredited. Most likely, you want to be also sophisticated to understand what is buying. You still need to hold it for 12 months, right, as a period for Rule 144. So even if all that is not enough, there is the liquidity issue. And the liquidity issue is that if you have a property and you take a loan from the bank, let's say you find a lender, give you 70% loan, right? So the other 30%, let's say you sold it out, some of that, all of that, whatever. The point is whoever going to buy it is not going to sell it thereafter. It's real estate. They're going to hold it for a few years, or at least a few months, right? So appreciation will kick in. So what that means is that the daily trading will not be a Bitcoin daily trading. It will be a few $100, a few $1,000, maybe a few tens of thousands of dollars. There is no exchange in the world that will welcome you in, and you are not crazy enough to go to pay hundreds of thousands of dollars to be listed in order to promote $10,000 or $1,000 or $100 daily trading. So whoever going to buy from you, assuming that you're an honest person and you didn't trick them with so many ways that it's possible to trick them, they're going to be locked forever even without you locking them. There will be, it's like a, you remember the days of the time sharing? You remember that? Time sharing? That it sounds so good. And then when you're into it, it sounds like a nightmare because you cannot go out. That's pretty much what it is, right? So even if people think that have a token is a magic word, it will be if it will be part of big component, but not standalone. As a standalone, it's going nowhere.
So I'll add to it. Traditional real estate ownership where people, Michael pointed out a few good things. Jude brought up a few important aspects to it as well. But traditionally, when people are buying real estate, they're holding the title for it. And when they're investing in real estate, they're usually investing in LLCs or other corporate structures, or either syndications or funds or REITs or things like that, where they're able to own a portion of it. What tokenization does is it represents the ownership within the economic interest of the asset itself. So as Jude pointed out, the asset in itself would still be owned by a legal entity underlying it. Now, what that underlying entity needs to be may be different for Michael's triple net fund, or maybe a little bit different for Jude's liquidity platform. And just like that, for us, what we use is the concept of a publicly traded LLC. So we actually don't have the limitation of 100 members within that, with the benefits of pass-through taxation. Now, there's a lot of different ways around. A lot of different ways are going around Rule 144. There's plenty of exemptions out there on it. But yes, it is in its infancy stages, but you won't be stuck in there. We're coming up with a product with two federally mandated banks who are providing debt backed by your security tokens. So you buy a security token, you want to cash out, you'd be able to do that based just by getting some leverage on that, even if you don't sell it on the other side. You're right. People when they invest in real estate, they traditionally or currently don't trade it on a day-to-day basis. But you know what? That's what OTC desks were for, and that's how stocks were traded, and that's why they were traded on pink slips for the longest time. And there's still plenty of publicly traded companies that trade on OTC desks that have low trading volumes. So eventually, this will pick up. It is in its infancy stages. That liquidity aspect to it does add a significant amount of premium to the underlying assets. So that will result in faster trading, and that will definitely impact more and more adoption and liquidity within these platforms as well. And so it's not that people are just getting stuck by buying security tokens backed by real estate. Real estate traditionally is an illiquid industry, no doubt about it. But REITs sell, people sell, REITs trade quite frequently, right? So if REITs are similar concept-ish with major drawbacks, in my opinion, but there's high trading volumes on a lot of REITs out there. So why wouldn't security tokens be able to achieve those trading volumes?
You're saying exactly the right word. I'm glad that you said that, because you basically, I started by saying that there is an issue, and you start to kind of give us a glimpse of what can be the solution, which is basically what we are doing per se. A joint venture is basically decentralized REIT, which means if someone wants to tokenize his property, we do not tokenize anything. There is Polymate, there is Securitized, there is many players out there that doing that such kind of job, right? But when you want to sell those securities, we will be one check, like one LP that picked it up. So we will buy it, right? We'll be the buyer. And it's not even a security because it's joint venture. Only two sides, sponsor and us. There is no group. And then on the other side, we're basically selling to people two type of other asset. One is basically exchanging trading note, which is basically a bond that tied to an underlying index. So whoever invests in that bond get return not based on our portfolio. You get return based on the global REIT index, which is 2x levered. So whatever the global REIT index does, that's what your outcome will be. So it's like you come to my mother and say, you don't understand stock, I understand, but can you invest in S&P 500? And you say, oh, S&P 500, I understand, because it's very long term and it's stable and I can predict and there is history. I don't know a specific company, but I know the index, right? So people need simplicity, and investing in something that is backed by index on the NASDAQ, it's simple for them. On the other side of on the crypto industry, we have another token that is the only way of payment to buy that bond, which means you cannot buy the bond with Ethereum or Bitcoin or dollar or anything. You have to have that token as a way of payment. Now, what that means? Imagine that you have a token that worth $1, and you cuckoo want to sell it for half, right? Any sophisticated investor should pick that up and immediately convert it to the bond, because it's like to have 50% discount on real estate. So what I'm saying here is that we took the real estate industry, which is a security without liquidity, and we took the crypto industry, which is a liquidity without a security, and we somehow merged them together to support each other in the way that even if the crypto market go down, there is for the first time floor that it cannot really go down, because there is a real estate on the other side that those money can be used as a way of payment to pay for those securities. So that's what can cause the stuff to be changed. Now, obviously, to build what we're building takes time. We are late bloomer. We start in 2017. We invest millions of dollars. We only accomplish so long, only one step out of 5. It's like Cardano or Polkadot that take time to crack out, right? But we're expecting next year or by the end of the year that it will be boost, and we right the commercial waste that it's the biggest dinosaur out there. And if people can come along and participate without really holding real estate, without having security, because the crypto industry that we are offering them the token, it's not security, but it's backed by security, so it's kind of a backdoor for security. So they don't need to be accredited, but they're enjoying from having a security anyway, right? And that can open the door. That can allow investors that want to buy property easily to have access to cash. I mean, think about it. You go to the bank, you get 70%, 80%, 60% loan, right? You don't go to your neighbor, collect $100 each. You go to the bank. They collect those dollar by dollar and give it to you. Why you cannot go to another company and get check for the other 30%? Can you imagine if I want to buy a building? Boom. Bank give me 70%. Boom. Jointer give me 30%. That's it. All I need to come is find the right property and to have the right track record to manage that property because we are not managing properties. We're not in the business to manage properties. We're in the business to solve liquidity. So why not to simplify for the owner to have a property to buy or recap their property? And why not to allow user to buy into that industry even with zero knowledge? They don't need to be locked. They don't need to understand how to run the numbers. They don't need to even understand where they're building in. I mean, for God's sake, I have properties around the countries in some states that I've never visited.
No,
so
Jude,
right. So I understand what you're saying, Jude. But the other thing is that security tokens can still, solve a lot of that issue. And we're really not selling like crazy type of liquidity issues. What we're looking at is you can invest in the security token. Yes, there is a lockup. We've just completed a partnership with BlockFi so that if somebody wanted to leverage their token or even deposit their token and make extra interest off of it, they can do that. But the other thing is there's a whole ecosystem out there, broker dealers, ATSs, and exchanges. And like I said, I agree with you. And I agree with Mohsen that there's not going to be a tremendous amount of liquidity. And the majority of people are going to invest in real estate the way they've always invested in real estate. It's going to be a long-term investment. There's going to be some people that need to have some sort of liquidity so that they're going to have to look at that. So I think that you have an excellent situation for, non-accredited investors, and it sounds like it's a great, solution. And I think there's also other ways to skin the cat with professional real estate investors that are, good sponsors. And I think that security tokens are going to be an excellent way to replace the normal private placement, which is what the rest of the industry is right now.
So I think I misled you by something. As I mentioned, we have two types of token. One is a security, right, for accredited, sophisticated, and qualified purchases only. And one is a token that acts as a way of payment to buy this one. So this one that is a token is open to retail clients. And this one that is a security is a bond, right, with security, which we're going to comply with Reg A+ and take it IPO, so it will be available also through the NASDAQ. So what we built here with this security for accredited investor is not just is tokenized basically the entire REIT, it's also intangible asset from IRS point of view. And those that do not understand what that means, it's huge, big, important point. It means that when you're a foreign investor from Gibraltar, British Island, China, wherever you want, and you invest in the United States, you need to pay taxes, like 30%, right? It's been deducted before you get the penny, right? And with our intangible asset, there is no income tax in the United States. You pay only capital gain in your own country, which means if you're foreign big money, and as you know, most of the money is in Gibraltar, British Island, Cayman. I don't need to tell that secret to anyone, right? So if you're investing over there in traditional REIT, get 10%, pay the Uncle Sam 3, left with 7, versus buying our bond, the ETN, get 20, but been left in your pocket with 20 because there is no capital gain in those countries. So now you took traditional REIT, and as you know, there is no traditional REIT for 1 million, all of them worth billions, a zillion, right? So imagine yourself that you can welcome in the central area more money in 20% versus 7. It's like oh my God, it's like 3 times more. So what I'm trying to say here, Michael, is that thing about it, like when Uber took over, everybody thought, oh my God, they're going to take the taxi industry, $20 billion industry, right? No, they extend the industry to 60. Now more people driving with other people's cars than ever before.
Right,
And
I agree with you. I mean, what you're doing is solving a particular issue for particular people, and what me and Mohsen are out there doing is serving other, bases, because there's all kinds of commercial real estate. I mean, I'm investing in net leases, which are, prime, what we like to call bonds wrapped in real estate. And Mohsen, you're doing a lot of apartments, aren't you?
Right. So we're doing all sorts of commercial real estate, but single direct investment. So you're investing in an asset of your choosing. And we're enabling people who could not invest before. So we're not focused on that super wealthy people out of Gibraltar, but we're more focused on increasing women ownership within real estate. Or we're more focused on democratizing it from a perspective where people from all demographics could take benefit of this asset class traditionally not available to everyone. There's maybe I forget the exact number, but there's like less than 4% women ownership of real estate. Why? So that's exactly the problem that we're trying to resolve. We're trying to make it more affordable. We're trying to make it more attainable and achievable for people who are interested in investing in real estate, be it a much smaller amount, and then go ahead and do it. If the bank that goes ahead and raises money and from person by person by person and then gets it to you, that's what happens in crowdfunding as well. Why not do it from a perspective where you have liquidity, where you have that secondary market? Why not have it in an investment class where it is achievable? And Michael, you brought up a little while back that, there's plenty of broker dealers, there's plenty of ATS out there. You're absolutely right. All of those functionaries and facilities are there. Our core belief is that if everything is available from a single dashboard, that enables a lot more transactions than having to jump from one dashboard to the next or from one platform to the second to the third, just in order to attain some of those liquidity hassles. And that's exactly what we're building. And that's exactly what we've built. So yes, there are certain initial hold periods, but and yes, there are securities laws that we have to work with. That's our belief. We want to be 100% compliant, and that's what we are. We want to offer these securities. We want to offer these real estate-backed securities for people who traditionally have not been able to get exposure to this space, and then do it through tokenization. Now, people brought up, it's only open to accredited investors. There's more than 12.5 million households of accredited investors in the United States. More than 40% of them are between the age of 35 and 55. We're not your average dot-com boom or beneficiary or something on those lines. These are people working within corporate America who want the exposure, who don't have the time or the ability or the patience to deal with individual real estate investments directly.
You said the right stuff.
Well, and the other really cool thing that I just want to bring up in what we're trying to do is provide extra optionality for our investors. So it's not only that liquidity part, but the other thing is you can invest in dollars and then take your money out in a stable coin, and then your money is on the rails to the crypto financial world, so that you're outside the banking system. So there's just so many things. And like I said, you could do, like Mohsen said, that you can go and get, leverage your token. So you've got an asset that you can leverage again. And like I said, the big thing that I'm really excited about is the BlockFi partnership. I mean, and if we do a few other of those, it's just going to be really, really incredible. Because it gives investors the option to do the things that they can't do with private real estate. So what we're trying to solve for is private real estate.
So what I'm trying to kind of highlight here, and it's very important because people come here to learn, and some of them want to invest, some of them want to learn for different reasons. This area, it's a very complex area with very high risk for the end user. And all the time when people talk with me about tokenization, beside all the regulation that obviously, Mohsen, you cannot buy property, you cannot sell a property before you buy it, because otherwise you're a broker dealer. And then if you first buy it and then sell it, it's not scalable because you first need to buy so many and then sell. So at the time that you will scale, everybody will pass you from the right and the left. So it's not scalable. And what I'm trying to say more than that, every time we talk about tokenization, I remind to myself a story that I came across with a guy called George C. Parker. I'm pretty much sure that you don't know who this guy is, right? George C. Parker. I will tell you who is this guy, and maybe that will help us to understand how serious we take in that tokenization business. George C. Parker is the most famous comment person in United States history. He is the guy that used to sell the Brooklyn Bridge, right, in New York, twice a week, over 30 years, claiming that he owned it, and people used to buy it. And then because they thought that they bought the bridge, right? And back then there was no SEC, there was no internet, there was no nothing. And what I'm afraid of, every time we're building something, we want to democratize that, but also we want to protect people like my mother. Why? Because she's not sophisticated. She doesn't know how to run the number. I know sophisticated people in the real estate, and even they don't know how to run the numbers, right?
Right, but
so
what we're doing is we're trying to work with security tokens so we don't have that issue.
We need to protect the simple person that doesn't know how to do what to do. And like Mohsen say, and I connected to his word, people are busy to survive. Now it's the COVID, they're even busy more, but they are generally busy to survive. They want the money to work for them, but they don't have themselves how to make the money to work, right?
Dude,
so
that's
why it's not to be stupid. So even a child can play.
Yeah, fair enough. Even a child should be able to play. I think I said this earlier. Like, we granny tested our platform. We got my grandma to sign up and buy one of those security tokens. That's how simplified we made it, right? Now, I want to point this thing out, Jude. The difference between what you're saying and what me and Michael are doing is both me and Michael are real estate professionals who are making the most of the technology. Michael is historically a real estate investor, a triple net real estate investor. I'm historically a multifamily and mixed use investor. Both of us bring enough of our that we don't have to worry about bringing other people's assets before we reach that critical mass or we reach those levels. You know, we're able to commit hundreds of millions of dollars worth of assets on the platform.
And Jointer is the biggest group commercial real estate in the world with SEC underwriters and professional people. And we have a portfolio and access to assets almost like the top tier in the world. I mean, for God's sake, I mean, we're all professional here. I mean, one of our advisors is the previous chairman of the SEC.
I'm going to argue there. I think Levine and some of the like BlackRock are pretty big investors too.
It's important what you do. And
I'm loving the energy in this room.
I will want to buy them, you know, that's why my point. I will want to buy them as a jointer, right? But I will want to let Joe Schmo to hold something that he doesn't understand, because it's for sophisticated people. It's complex. It's like everybody will go to the stock market. No, not everybody go to the stock market, even if it's open to everybody. People do not.
Dude, I just want to say, do you think most investors in the stock market or even somebody investing in a mutual fund understands what they're investing in?
No.
So, no, first thought, what I think is that there is a people that acting in two ways. Either they're going to spread and pray, like put their portfolio a little bit here, a little bit there. Some of them even put on Bitcoin before they know what is Bitcoin is, just because it's diversification asset class. And there is those that want to really leverage the $100,000 that they really have, and this is the entire world. They are not family offices with a lot of money. They will need to be very careful with the little sense that they have over the years, and they don't want to spread and pray.
Right, and I want to also point out, Jude, that a lot of people invest with securities brokers and RIAs and other people, and they depend on them. And RIAs and securities brokers typically aren't getting them exposed to private real estate. And security tokens are going to get a whole new class of investor.
You're absolutely right.
Yeah.
You're absolutely right.
That's where our new product is focused on as well.
I agree with you. Everything that you say is right. People used to do for decades, centuries, what you say. The question, are they going to do it in the next century, in the next decade?
I love you like a brother, Jude.
Where it's going? Not where it was. Where it's what we know. Where it's going?
This is blockchain and booze all over again between the three of us.
I think I need to join the blockchain and booze section.
And Karen, you speak a lot during this conversation, so I don't think
I
it's fair.
did. You guys really needed the moderator here. I'm sorry I'm interrupting, but we definitely need to wrap this up. I would request again, let's quickly mute ourselves, everybody who's not speaking, just so that all the attendees can hear us. But this was an amazing conversation. I think everyone who was attending probably learned a ton about both the pros and cons and things that can go wrong, but things that are going right. I'm sorry for taking one extra minute, but if in a few words we can just end on a happier note and talk about how investors and owners can benefit from tokenization. Just one or two words from each one, and I'm going to say the name. So Jude, go ahead.
Absolutely. So our approach to existing owner or those that want to become an owner, what we offer them, instead of contribute 10% skin in the game, they contribute only 1% of the property asset. And instead of have 25% carry or promote, which is what the standard industry is, we offer them 50-50. So we give existing owner 4x more than the existing market. So when they have a property for sale, I don't think they're going someplace else because they want to leverage their money as the best as they can. So that's
Perfect.
What is.
I have someone who's babysitting me right now. So we got to move on. But Jude, that was perfect. Michael, what would you say? 2 words, please.
Well, I can't do it in 2 words, but it's bringing investors options that they never had before in private real estate. and it's bringing private real estate owners access to an entirely new capital pool that's just out there waiting and hungry and starved for yield.
Awesome. Mohsen, go next. You are muted, Mohsen, so please unmute yourself.
Accrue booth. It's in the expo section. Go check it out. I'm just going to say that. But no, go check it out. Sign up. Check out the details on Accrue. You'll find out all the reasons why it makes sense for asset owners and investors. Everything that was talked about today. I really appreciate the time. We've enjoyed this a lot. I know I have. And Jude, I love you like a brother. Michael, same thing. I know this conversation got a little heated.
Thank you so much. This was an amazing panel. We love this energy in this room. I'm sure everyone else did because I truly enjoyed it. Thanks, Draper Goren Holm, for keeping us and allowing us this opportunity. Okay, we're out of here. Thank you so much. Bye, guys.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today. Making the exclusive inclusive.
Our next session revolves around the evolution of clearing, custody, and also secondary markets, really utilizing blockchain technology. So to lead this conversation, please welcome Nisa Amois of A100X, Kyle Sonlin of Security Token Market, Douglas Borthwick of INX, Adam Blumberg of Interaxis, and Julian Shkrashki of Atlant.
Okay, that was fun. So we're going to have even more fun on this panel because we're the penultimate panel. And everybody hung around this long. So welcome and thank you to Draper Goren Holm. I am Nisa Amoils of A100X Ventures, which is a venture capital fund. I invest in this ecosystem, have been for years. Companies like Bertalo and Securitize and Aspen Coin, et cetera. And I'm a securities lawyer, also part of the Fin P2P group that was announced today as well. So I'm going to ask all of the panelists to introduce themselves. Why don't we start with Kyle?
Hey everyone, my name is Kyle Sonlin. I'm the CEO of Security Token Market. I'm the host of the Security Token Show podcast. My background is in secondary market infrastructure and all the trading assets here. So I'm really excited to dig into the panel, know some of you folks here on the panel as well, and appreciate everybody for tuning in. Looking forward to the discussion.
Julian?
Hi, my name is Julian Swierski. I'm CEO of Atlant. We have several different platforms at Atlant. Carta, which is a B2B host and guest marketplace, and 2 exchanges. Uvas, which is a securities exchange, which is 95% cheaper than incumbent exchanges. And also, as of recent, Reddit, which is a sophisticated crypto exchange that has options, futures, repo, and quite a few other interesting things.
Adam?
Hi, everyone. My name is Adam Blumberg. I'm a certified financial planner. I have an RIA in Texas. I'm also the founder of Interaxis, where our goal is to help educate financial advisors and help educate anyone who's looking to get into investing and understanding blockchain, digital assets, cryptocurrency.
And Doug?
Hi, I'm Douglas Borthwick. I'm the CMO of INX Limited. Background is a currency trader, Morgan Stanley, Merrill Lynch, a whole bunch of different places. Got into blockchain a couple of years ago and excited to be here.
Great. So we've been hearing all day about liquidity, and that's what we're focused on this panel. So, Kyle, we've talked a lot about what liquidity actually means, and it doesn't only mean trading and exchanges. So how do you define liquidity? What's happening in this market now?
It's a really interesting question because it is something that I think is misconstrued often, that we see from whether it's an investment perspective, whether it's an issuer that's looking to access private market infrastructure. And I think you hit the nail on the head. The reality is that liquidity isn't something that you just turn on, right? The ability to trade something, as I'm sure Doug can allude to with his experience with INX, just the ability to trade something isn't necessarily the only factor here in liquidity. You need to really establish investor demand for a specific asset that actually will create that demand and that trading volume for something. And that's really what defines liquidity is, from a technical term, you're talking about how much the price changes based off of a significant buy or sell order. And really what that translates to everyone else is just how many people actually care about this thing, and really, how is that moving from one person to another? And that's something that you need to build, just like you would build a community or build a strong investment relations team and all those other pieces as well. So liquidity is a very complex topic that comes with price discovery, that comes with transparency in the asset, as well as the information surrounding it and its shareholders, and how the company is building itself and reporting those things to the public. So there's a lot of different pieces there, and it's something that I think we, especially with the security token space, we really, it took a lot to get to the point of actually being able to trade these things. But that's really only the first hurdle in the process. The next piece is then figuring out, okay, now that we can trade these things, now that we have the ability to, how are we going to actually facilitate a strong and robust market for these specific assets? And I think that that's really the phase that we're in 2021 now.
And would you agree that there's a lot of the value chain that hasn't been built out yet, from market makers to analysts and price discovery that we have in traditional markets, to actual data on spreads of trading? I mean, all of that really needs to still be part of the infrastructure build out till we achieve full liquidity, right?
Yeah, I think that that's true. I think that definitely with investor demand, it comes with high quality assets, and that is still a different piece of the puzzle here that we're still looking to build. I think the last panel was really focused on real estate and tokenized real estate, and that's something that is really an asset investors are really excited about, but we're still seeing it on such a small level that I don't know if there's justification yet for large market makers to enter into the space, for example, and especially for a lot of these private markets, they don't even necessarily work directly with market makers. And from an analyst perspective, we've been doing a lot of research on that front, but these things don't trade quite as frequently as what you'd see from the public markets, at least yet. And I think that those things are definitely along the way, but I think that there's also, from a liquidity perspective, this interest is driven by new and exciting exotic assets, and that's still, I think, the piece that we're looking for from the secondary markets.
Doug, why don't you talk a little bit more about what you're doing at INX and how that could help with you're reaching retail investors, for instance, to really build awareness about what assets are trading?
Well, I mean, let's just talk, let's do a couple of things. First of all, if you want liquidity, you can't charge 2.5% to get into something and 2.5% to get out. So the pricing that exchanges give today isn't saying, hey guys, you're welcome to come here and trade. And I think that what INX is going to do is absolutely crush that price down considerably. But not just that, you can't believe that when you have maybe 5,000 or 10,000 accredited investors on your platform that you're going to get liquidity. Maybe 5% of them will log in every day. You've got to get retail trading this product. If you think about guys on something like Robinhood, they're trading on it because it's next to free, but also because they're offered all sorts of different products. And that's what you need to do with security tokens. You've got it so that it doesn't have to be an exciting project, but it's got to be something that's actually accessible to people. And right now, you've got to be a rich person, an accredited investor, and you got to be willing to pay 2.5% to get into something, or pay 3.5%, whatever the prices are, at other firms to get out. And that's not going to give you an active market. So what INX did is we said, you know what? Let's create a security token that retail can invest in that doesn't have lockups. And at the same time, let's just bring the price point down to next to nothing. I think that that's going to be quite a surprising thing for folks. I think they're going to realize that you can get actually a lot of volume on these types of exchanges, because the reality is when you ask about what's liquidity today, it's pathetic. There's more volume that's done in the Italian restaurant downstairs from me in New York City than there is in all of the security token market in New York. And the fact that Kyle's got a website that talks about the volumes, and it's 10,000 for this one, $1 million for that one. These aren't volumes that you can build companies off of. or businesses offer.
I actually would disagree with that.
Considerably.
If you run liquidity ratios on some of these assets by trading volume to market cap, you actually see that it's decently healthy for a lot of these smaller assets. They're small market cap for sure, but I think that there's certainly a demand for these assets. We're not nowhere near the liquidity that people want. But I actually want to ask your question there, Doug, on that note. Do you really think that the barriers to liquidity are due to the fees that investors are paying, or do you think that it's probably more about the asset demand and the interest for what's currently trading? Because potentially I think that there's more on that second piece, that a lot of the trading security tokens are things people don't care about.
Get someone to trade something every day when they're paying 2.5% just to get into the trade. That's not asking people to trade. What that is that's saying, you know what, I've got a project that needs liquidity, and that I've got people that own this project and they want to be able to get out at some point in the future. But that's not saying we want a tradable asset. And I think at INEX, we want to have tradable assets, but also the assets that we're going to be listing, I think are things that are going to be quite exciting to people. When we talk about, and you look at our videos on our YouTube channel, but you got a musician's music catalog. They've got maybe 30, 40 million followers. Those followers want to buy and own that catalog. And I think that sort of is a way you get excited people to open up e-wallets for the first time. It's not, real estate, yeah, there's plenty of opportunities in real estate, but it doesn't quite get the sizzle that you'll get from offering out Madonna's music catalog or Taylor Swift's, or you start getting your young artists that want money today and they already have revenues coming in, you find a way that you can tokenize it. These are the types of things that add the sizzle that get folks onto a website and open up an e-wallet for the very first time.
As we've seen with NFTs, of course. And, the gas fees on Ethereum didn't prevent anybody from trading when they had an asset that they were excited about, right?
Well, I'm not talking about the gas fees in Ethereum. The gas fees for Ethereum are going to be less based upon, what the smart contract is. If the smart contract's pretty simple, you're going to have a pretty low gas fee. If you've and if you've got a complicated smart contract, it's going to be more expensive. And we're going to be able to prove that at INEX, and we'll be able to show the world. But it's not this. It's not like the cost of Ethereum that's killing this market. It's the fact that in order to trade it, the exchanges charge you fees that are above 200 basis points just to get in and just to get out. And I think that's extortionate.
Who does that? What exchanges are currently charging those fees?
I'm not going to name the names, but just go out there and try to trade on one of these exchanges and look at the fees.
Yeah. Well, and I think it's an interesting point.
Okay,
I'm going to be somewhat biased here. I'm going to argue that some of the liquidity is because this is a really new product, and people don't even understand what a security token is, much less the fact that they can trade now, potentially trade real estate. They can potentially trade royalties from their favorite artists. They have no idea that that's even an asset that they can trade. Plus, as you've said, most people don't even understand very much about their financial plan anyway. And I can tell you that as a financial planner, most people have no idea what they're investing in. And they're just trusting their financial advisor. So once we get more people to understand the fact that there are these asset classes, and we know that millennials want more alts, more alternative assets. We know that people are looking for more yield. And once we get, as you said, Doug, the exciting assets like being able to trade your favorite artist, being able to trade their record catalog, that's an exciting asset class. And then you're going to have analysts that are able to take a look and say, what is my potential yield from this? How much this is actually worth? What kind of income am I going to derive from it? And therefore, how does it pertain? How does it look against some of the other assets I could potentially invest in? And from there, you're going to have, investors, you're going to have fund managers that are going to be able to create funds specifically for me based on what my tastes are, based on my age and my risk profile. That's when it's going to get exciting. And that's when liquidity is going to come, when you have people that kind of understand, that do want to open up a wallet and figure out how to trade art and real estate and royalties and NFTs, in addition to Tesla stock and Bitcoin all at the same time. That's going to be really exciting, but it's just going to take a while to get the education there, for the fact that people can actually do that now and have a ridiculously personalized, customized portfolio.
So Adam, tell everybody what you're doing to educate people.
To start with, we're trying to educate financial advisors about
cryptocurrency, digital assets in general. And as you all probably know, that is quite a road right there, because financial advisors up to this point have not wanted to really get involved in Bitcoin and crypto. There hasn't been a good reason for it. So we have to start from the very beginning. To get to security tokens, you really have to understand blockchain, wallets, security, crypto, all of that to get to where security tokens even make sense. And then we're also trying to educate individual investors really along the same lines. Here's what Bitcoin is. And once we start there, we can go through custody, wallets, and the membership course we're about to release is going to have a whole section on security tokens, so that hopefully investors can understand that. We want to work with security tokens issuers. We want to work with guys like Kyle and Doug to educate the potential investors as to what they're really buying and why what they're buying is not Bitcoin, why what they're buying is not cryptocurrency. It is an asset. It potentially produces income. It has growth. It has liquidity, all those benefits. But what they're buying is not a cryptocurrency. We're just denoting it using blockchain so they can have some liquidity, so they can have some transparency, and some more options.
Julian, tell us what you're doing, what you want to talk about real estate, and I know that's what you're focused on.
We actually, so you're probably talking about UVAS, which is one of our projects. We abstracted away and have, we can tokenize, trade, and settle custody any asset, not just real estate. It could be private companies, etc. But and we have, and just a quick plug, we also run two other projects, which is Carta.com and Redout.com. One's a BNB marketplace, and then second is a crypto exchange. But to kind of address what Doug was saying and sort of a little bit what Adam was saying, I think the problem actually is not commissions, that are high on exchanges. And I think the problem is potentially not, let's say, that investors aren't aware or don't know what security tokens are, etc. I think it's actually regulation. Because in essence, there's a lot of talk, and if you Google, everyone's tokenized half the world, and it seems like it's done before. But once you start actually getting to a deeper level of understanding what they have actually tokenized, where it trades, in which jurisdiction this exchange is set up, what's the path from the actual underlying security to its tokenized form, everything starts really breaking. Really, there's very few sort of properly regulated in the first world, let's say, exchanges that are able to take real assets and tokenize them. I would say the market actually doesn't exist. I think that we're, in this kind of like precursor to the market. And I think that it's not a tech problem, by the way. Again, very much a regulatory problem. Once I think the regulatory issues get aligned, again, the problem is not commissions, but the problem is actually cost borne by by basically charging the issuer, and the cost is all the back-end stuff, the sort of post-trade, which blockchain solves. So in the regular exchange, say NASDAQ, LSE, whatever, Hong Kong Stock Exchange, there's trade reconciliation, clearing, custody. Each one of those actually is not a part of the exchange, unlike crypto exchanges. And those costs are what basically weigh on the issuers. And this is why you have large oil stocks and large banks and now some tech stocks on major exchanges, and which is why you don't have real estate or you don't have mid-sized companies. And this is what, let's say, my exchange can fix, but regulatory clarity has to be there to allow us to custody securities, to allow us to trade them, so on and so forth. And so just sorry for making this long, but basically there's an ATS regime in the US, there's an MTF regime in EU, right, which are the two biggest, probably markets. The MTF regime, no one's sort of set up an entity that does this, and there's a proposal 1 year out in EU to make this work properly. SEC has issued guidance on ATSs, how they can basically custody securities, but FINRA hasn't, sort of done anything on the back of it. So I think we're in early days. Once that is done, you'll have a whole slew of exchanges trading a lot of interesting assets.
Well, it was really just in the fourth quarter that the no action letter from the SEC came out, and then FINRA will follow after. So you're right about that. But I think all the exchanges that we've seen present here today would have an issue with you saying that there's no market. In fact, Douglas, didn't you buy Open Finance?
That's right. Yeah, we did.
Yeah. So tell us, why you did that, and what you think about the exchanges out there, and is Coinbase just going to come in and take over the market, or what's your prediction?
Well, look, digital securities are sort of like equities in the early stage, and at that time there was a lot. It wasn't just NASDAQ and New York Stock Exchange when equities came out. There were exchanges all around the United States, the Philadelphia Exchange, Chicago Exchange, God knows how many there were. And I think that when you look at the market cap of blockchain today is $1.6 trillion. For equities, it's 85 trillion. For fixed income, maybe 100 trillion. So there's a heck of a big pie. And it's not just going to go to one guy. It's going to go to a whole bunch of different folks. Why Open Finance? Look, Open Finance were the absolute pioneers in this business. They were the first guys to go out there and get that digital ATS and digital broker dealer. We have great respect for those guys. And we thought, this is a great way to take something under our wing that also has obviously the licenses that we're looking for. And there's only a handful of broker dealers and ATSs with digital securities in the United States. And so this made sense to us to bring that under our wing and put it next to the crypto trading platform that we have that goes live at the end of this month. And so what we're able to do is we're able to take over the guys that are trading crypto and then have them turn over and start trading security tokens. And so obviously offering a security token that has what you're always looking for, what Adam discusses, which is sort of like, we want to know what you're trading. Heck, I've got a 265-page prospectus sitting there's an F1 at the SEC. You can know exactly what you're trading when you're trading my token because I've got absolute transparency. And so being able to take guys from one place and put them on the other, and take guys from the security token side and put them on the crypto side, I think makes a lot of sense. I think you got to have that ability to trade back and forth, because if you set your business up just doing security tokens, that's a heck of a long runway you have before, as Adam says, people get educated. So you got to be able to have a business that's making money in one pocket while the other one is still sort of suffering. And it's going to take some time, obviously, for folks to really understand what security tokens are. I agree with Adam in that 1,000%. But at the same time, we have to make the exchanges to be such that they're welcoming to people, but not just to accredited investors and not charging huge fees, but to retail as well, and let them come on in and say, what, guys, you're welcome. Come on in. Here's some things you can trade.
Yeah, for the past.
But how does it jive with existing regulations? I mean, it sounds really nice, but does it really work? And I mean, the granddaddy of all of this. Look at every single ATS platform that's in the US. How much volume is traded on there? Moreover, how many real assets?
And that's because every single one of them, all they have is a couple of accredited investors coming in there. They don't have an SEC registered
or retail
security that's trading there.
Invest tens of millions every single year in this platform.
And
what trades there?
Exactly. That's what I'm saying. There's a problem with what's been offered, number one, and number two, with exactly how it's being run. And so we're trying to change that. Now, I think it's going to take some time, obviously, but we're going to try.
Doug, for the past 3 years that we've been doing this, the crypto traders do not cross paths with the security token traders. Typically, they're different groups and kind of adamant about that. So how do you see them merging on your platform?
Well, I think that you'll hear shortly about why we expect there's going to be some sort of merger between the two. I can't talk about it right now because obviously we've got an ongoing IPO, but I'm quite confident that there is an absolute huge interest in folks crossing the side and getting involved.
Okay, so how do SPACs fit in here if it's so expensive to issue, a security token, and you're doing this IPO, and companies with very little revenue have SPACs, right? So how do you see this fitting into the landscape here in liquidity?
How does a SPAC fit into what we're doing?
Why would an issuer, choose one route over the other?
Well, I think that when you're doing a SPAC on the New York Stock Exchange or NASDAQ, they're normally looking for something with $1 billion market cap plus. They're not looking for something that's really going from a 25 million to, let's say, a $400 million market cap. And so anything that's trading on a security token platform obviously doesn't have the audience that could handle something that's anything larger than $400 million, in my view. Now, that's going to change, obviously, as more folks, as you say, cross the aisle and go from crypto onto security tokens, which is going to come, as Adam says, through education. But obviously, you can't take $1 billion company and have it trade on a platform when most platforms have at most At most on their security token side, I'd say maybe what, 20,000 accredited investors. And correct me if I'm wrong, but on the back of that, you can't. You've got to have millions of people trading on a platform in order to attract the larger companies coming on board.
Kyle, what do you think about SPACs?
Oh boy, we could have a whole panel on SPACs. I don't know. I think that SPACs don't solve the main problem of security tokens, which is international access to international assets and investors. You're talking about interoperability between exchanges, as Douglas was mentioning. We're not just talking about the US here. Obviously, NASDAQ and the New York Stock Exchange, I think they made 11 or maybe it was 13 exchange acquisitions in the 2000s to scale up their operations, but we still don't have a market where the New York Stock Exchange can integrate with the London Stock Exchange. Those investors are separate. Those settlement and clearing processes are different. Those asset requirements are different. And I think that those are the realities of the security token industry, of connecting the world in this way is totally so much larger of a market and opportunity than what you'd see even just from the traditional public markets from a SPAC perspective, let alone the fact that I think I just read an article that a significant majority of the SPACs that SPACed in 2020 are actually down from their listing prices. I think that a lot of those were honestly just consequences of the fact that those investors were not able to get liquidity earlier. And so a lot of these later private financing rounds combined with some of these companies that are stuck in this illiquid state where they can't quite get to that public listing, but they're way too big to get acquired by a different company. That's a real problem, and it's something that private markets can solve by developing more liquid secondary markets that I think SPACs are just a consequence and maybe a more inefficient way of solving the same problem.
Yeah, I think you're talking about two totally different markets, because with security tokens, you're talking about smaller companies. As Doug said, you're talking about some really interesting investment opportunities that aren't just private companies, that are not just real estate, that go into places that most people have not really had the opportunity to invest in. And now what you're doing is you're giving them the opportunity. A SPAC is really nice to have that initial funding mechanism. But overall, I mean, look at how many companies are public anyway versus the number of private companies in this country and all over the world that are ridiculously profitable, that so many people in the world would love to be able to invest in, but don't get that opportunity. There are, insanely profitable companies all over the world. And the beauty of blockchain and crypto and DeFi and all of this is opening up the opportunity, and the fact that we can efficiently transfer value and efficiently transfer money that's sitting in my pocket doing nothing to someone who's really good at their job. And that job might be real estate or music or creating some sort of public or private manufacturing company, whatever it might be. But if I can officially get my money to those people that I've never met before, that's what we want, I think, from the security token market. And then we can take that, as the panel before us said, kind of into the DeFi market and go, okay, now that I have this token, can I collateralize it? Can I look at my income stream and figure out how it fits in my overall portfolio? Now it's getting really cool, because now we're talking about incredibly efficient financial markets, which is really what the financial markets are supposed to be, and what the idea, the ethos of Bitcoin was to begin with. And now DeFi is, let's take the internet, let's take what we have now and be able to make it even more incredibly efficient, because we can take out so many of those intermediaries.
Totally agree with that. I love that point.
So we're being told to wrap it up. I think we have some celebrities waiting, and a few last words. So, what do you think? What do you predict is going to happen in terms of build out of custody, settlement, clearing in this market in the next year? Kyle?
I think that we will see some very interesting decentralized solutions. I think that Uniswap has really opened a lot of people's eyes in terms of understanding how smart contracts can leverage, or how we can leverage smart contracts for that settlement and clearing opportunity. I don't know if that will be able to scale at the level that security tokens will need based off of the asset sizes and just the addressable market. But I do see this coming tremendously forward. And we see ATS licenses and broker-dealer licenses being approved at a significantly larger rate in 2020 than we ever saw in the 17 to 19 era. And so with that, I think you're going to see many additional players and an additional growth in this market because of the infrastructural rails that are developing.
Okay. Adam, 5 words.
5 words. I think we're going to see a whole lot more of these exchanges and a lot more data aggregation going into these security tokens to inform the value.
Okay, that was more then. But Doug, go ahead.
I think we'll find that custody actually gets sorted in the next 2 or 3 months. And I think that's going to change this landscape absolutely considerably, because we'll be trading security tokens just like we trade Bitcoin.
Okay. Julian.
Much more cynical. So I think that in places like US, oddly enough, guys like NASDAQ will take the lead. They have they bought Second Market, which they, for instance, can run blockchain on on the back end. I think in some of the more, I would say, adventurous countries like Singapore, maybe Canada, or somebody where the regulatory sort of framework might be shaped somewhat earlier between and not mired between multiple different agencies or sort of interests. Some smaller players such as us can also compete with big boys and basically form something that would work and create an interesting marketplace. But I think, sorry, just one last touch. So 5 years out, I think the game really changes, and you do have a lot of players.
Okay,
everywhere.
great. Thank you to everybody on the panel, and thank you, Draper Goren Holm.
Thank you so much.
Thank you.
Complicated? Accrue lets you focus on what is really important: life. Invest in premium commercial real estate for as low as $1,000 without hassle and worry. Accrue, making the exclusive inclusive.
Well, our final guest is no stranger to crypto. In fact, he took part in really creating the first ever security token. Please help me welcome Mr. Brock Pierce alongside Daria Albright of Daria Albright Media.
Wow, this is fantastic. First, I just want to say thank you very much to Alon, Joseph. It's been a phenomenal event. These sessions have been incredibly educational, and I hope we could end here on a high note. It's an honor to be here tonight with Brock Pierce, who I don't think needs an introduction. He's a blockchain entrepreneur, an investor, a philanthropist, actor, even a presidential candidate. Is there anything, Brock, that you haven't done? This is now, it's truly an honor to be here with you tonight. And while I could probably ask you a gazillion questions on a number of topics, we're going to stick to focusing on our discussion, which is lessons you've learned while creating the very first security token. So, ready to jump in?
Born ready.
Okay, awesome. So, let's go back, rewind, go back to history in 2017 when the ICOs were all the rage and capital was really being raised outside of the purview of the SEC. What made you decide to take the compliant path and really change the course of history with the creation of the first security token?
Well, let's take a step back even further, which is one, I was an advisor to a company called Distilled Jeans out of Los Angeles, which was on track to be the first ever Reg A offering in the United States as a result of the Jobs Act. I think we were number 2. But the reason I got involved in textile denim was not because I wanted to be in the fashion business, but I was convinced that the Jobs Act was going to have a very big impact on capital formation. I also then started running one of the first ever syndicates on Angel List. The Brock Pierce Syndicate was a top 10 syndicate on the platform, and I was very involved. I also was a co-founder and the founding chairman of Mastercoin, where we were the first ever ICO. We invented the ICO market in the summer of 2013. And so as someone that was straddling those two markets, it was obvious to me that most of these early ICOs, not all of them were really needed to be utility tokens. What they wanted was access to non-dilutive capital. And so having seen the opportunity, everyone's going, Brock, I want to do an ICO. I want to do an ICO. I'm like, but you're not really a utility token. I have this idea. Let's invent this new thing called a security token that's compliant. We don't have to circumvent securities law. There is a way to do it all compliantly. And I pitched people for 2 years and tried to convince anyone to do this, and they kept going for the non-dilutive capital every single time. And eventually, due to my own frustration that I couldn't get anyone to see the light and to figure this out, I finally said, okay, I'm just gonna have to do it myself to show people how it's done. And so for Blockchain Capital, the first venture fund that I co-founded that was funding these companies exclusively, I said, let's do our third fund as a security token offering, which we did as BCAP, which was really just to open source the idea, praying, hoping that everyone that's been here in this this event today and everyone that's contributed to the development of this ecosystem, it was just to show you that this is possible. And so it brings me incredible pleasure, great pride to see all the work that all of you have done. Thank you so much for seeing the vision and helping to manifest and make this a reality.
No, that's fantastic. And it's incredible because look at you choosing that path. A lot of these other companies that went the ICO path, look what happened. So, and you really, you really created a whole new industry, out of this. So a whole new industry was born. So that's pretty incredible. Were you kind of following the whole crowdfunding movement? I mean, was some of this born out of that, do you think?
Absolutely. And the first ever public talk I gave was actually at the founders of this conference's event, which interestingly enough, the keynote speaker years ago, back before it was a crowdfunding conference, before it became the Security Token Summit, Tim Draper was the keynote. And Tim Draper, due to a health issue or something, got sick. I forget what it was specifically, had to cancel last minute. And Alon was like, what do we do? What do we do? And Tim Draper said, I know that the perfect replacement. He's the best speaker in the world to talk about crowdfunding, to talk about everything that's happening. And the introduction was made, and I filled in for Tim Draper. It was so last minute, though, that they weren't able to update the program. I gave the speech, as Tim Draper's stand-in. And then the funny thing is, Tim Draper and Alon kept getting emails afterwards saying, Tim Draper, your speech was so great. It was such an honor to be there. and we were sending emails to each other, laughing and joking about it all. And I want to sing Tim's praises as well. I ran for president in the last election cycle. He was one of the first people to say Brock would make an incredible president. And again, he wrote the original reference letters for me at Blockchain Capital. He was an LP telling all of our early investors or LPs that, I was like the smartest guy you could get behind if you were looking to put money into this sector. And so I owe the Drapers so much, and so grateful for their support, and so glad to show up and speak here at this event for people that have done so much for the collective benefit of this community.
Oh, that's fantastic. I remember that event, actually. I was there as well a couple of years back in those early days. And how has the industry changed? I mean, it's pretty remarkable. Have you been following a little bit of some of the new rule changes for Reg CF and Reg A Plus? And just how do you think that will now impact security, this whole security token environment and marketplace?
Yeah, I think both of these trends ultimately are, going to culminate in this I think great change in the world. And so yes, so when we did BCAP, it was a Reg D and a Reg S offering. We were the first. It was like, what are we doing here? What are we doing? And we were definitely pioneering, trailblazing, and for pioneers, sometimes that does result in arrows in the back. Katie Hahn from the Department of Justice had just left and joined as an advisor right before that first offering, which gave me, again, it allowed me to sleep very well at night, that we had assembled all the appropriate parties. But yes, know what's happening here in terms of raising the limits. So I believe in democratization of opportunity. It makes me very happy to know that the American people have the ability to participate, in opportunities that are being created, and they don't exist exclusively for the elite. I'm a big fan of the Reddit rebellion and stopping the game, GameStop, and all of these things. And so I think the idea that accredited investors should not be the only people in the world that get access to opportunity. I want to see every American win. I want to create all win solutions, not just for America, but for the entire world. And so, yes, the raising of the limits and continuing to change capital formation, the democratization of opportunity, I think is a great thing. I think it also benefits security tokens. The last panel of speakers, I think, hit a lot of the core nails on the head there. And that is that we need global markets that run 24 hours a day, that are interoperable with systems. And so I agree with almost everything I heard. And yes, I think that, we continue to make major advancements, new major milestones have been reached. And yes, I'm so happy to see the changes legislatively that are occurring these days. I spend a lot of my time traveling around the country, educating state legislators, federal legislators, the House and the Senate, Financial Services Committee, and otherwise, testifying to continue to help support this very important progress that, again, democratizes opportunity so that all Americans can participate and win.
And you're right. That's exactly what it's all about. And, it's interesting because you're doing it for the first security token actually with a venture fund. How many Americans have the opportunity or have had the opportunity in recent years to invest in these early stage companies as a VC would, and especially do that through their retirement portfolios? And that's, just even that alone and giving them access to these, earlier stages from a venture opportunity is just that's what it's all about.
Yeah, there's no question. And here's just some facts and figures. So in the 1980s and 90s, when innovative companies, pioneering businesses, technology companies like Microsoft went public. Remember when Microsoft went public? It went public for less than a $1 billion market cap, meaning these private companies on the forefront of innovation, when they went public, the private investors, the venture capital investors, captured less than 1% of the terminal value of those businesses. Fast forward to the 2000s and this last decade, when leading pioneering technology companies go public, the private investors are capturing close to 100% of all the upside or terminal value. Now that varies deal by deal.
Right.
But what that means is the private investors, the venture capitalists, took all the money off the table and then left the public investors, the non-accredited investors, holding the bag. And it's not fair. We are not allowing the public to participate in value creation because the financial engineers have taken everything for themselves. And that's why this movement, the ability and democratization of opportunity, is so important, because I believe everyone should be able to participate in value being created by those of us on the front line.
Yeah, you're spot on. I mean, retail investors, and I think that's what we're seeing a lot happening too, just with the whole Reddit rebellion and everything that's going on there. Retail investors are not the exit strategy for the financial elite. And that's what we've become because, our capital markets became so messed up over the years. So, you're spot on. In fact, I did a little research on that. You had mentioned Microsoft went public. at less than $1 billion. Well, Uber, when they did their Series B, their valuation was around a $340-something million market cap, which was about the average size of an IPO in 1996. Ultimately, as we know, Uber went public, at an $82 billion valuation. That's, 82 almost $1 billion of wealth that was created from the Series B to their IPO that years ago would have been an IPO that would have been appreciating in the portfolios of ordinary Americans. And instead, it was just appreciating in the hands of just a select few. And just to put that into perspective, $82 billion is more than like 60% of the GDP of 60% of nations, their GDP across this planet. So it's, you're talking about numbers. It's, it's astonishing, really.
Yeah, that's just one company.
One company, exactly. Just one.
It's called the American people, the retail, have been deprived of historic opportunity, which is things are getting worse. The rich are getting richer. Now, the Reddit rebellion is what's so exciting about it is like the little people can challenge and potentially win. I mean, GameStop, GME is holding strong because we are hodling the line.
Right.
I threw some money in at a very high price, prepared to lose it all, because I want to know when the history is like checked on, when her story, our story is written, I stand on the side of the people. And the lines are being drawn. Which team are you on? And I stand for all of us. And this is, I believe, a watershed moment. Jobs Act, security tokens, Reddit rebellion. This is a watershed moment. This is not a one-off instance. The American people are standing up and choosing to participate. All these stimulus checks are for the first time. It's changing. The American people, American businesses, the American government, we have a really big debt problem in this country.
Oh, yeah.
We have a major debt problem. And, all this money's been handed out because they couldn't go spend it and participate in traditional, kind of soulless commercialization. The American people are learning to take financial, basically security, creating financial security for themselves. It's happening. This is a beautiful thing. The silver lining in all of this is the American people have been empowered and they are rising to the challenge, the occasion, the opportunity, and they're creating financial security for themselves. And yes, some of it's going to go badly. Some of them are going to lose all their money. But we allow people to go to Las Vegas. We allow them to gamble.
Exactly.
We ply them with alcohol, and we permit that. Welcome. Let them participate in the stock market. Yes, there are going to be some casualties, but in the end, America is winning, and I'm so excited to watch all of this.
And also, it's the people's money. If someone earns the money, they should be able to spend it the way they want, whether, it is going to Vegas or whether it's on a startup, investing in a startup. I mean, it just makes sense.
Yeah, give people choice, freedom of choice. And it's so exciting, everything that's happening now. And it's always a pleasure to be able to create awareness, bring attention to these trends, because I couldn't be more enthusiastic. I have so much faith, so much belief in American people and the retail. All these people are like, oh, they're not sophisticated. I take that back. I think Americans are pretty smart. And if you give us the opportunity to prove it, to show it, I think that we're capable of making some very big decisions for ourselves.
Well, they certainly outsmarted some very big hedge funds that, needed multi-billion-dollar bailouts. So do you think that we have a good regulatory framework here to move forward, using the Jobs Act exemptions? Or do you think that there are other countries that we should be looking towards, or maybe even other states that maybe are ahead that we should be looking and changing on a federal level? Like, what are your thoughts about the existing framework that's in place?
Yeah, America, historically, we've been the capital of innovation. And I feel like we're really falling behind, whether it be on stable coins, which I also co-founded Tether, in the US digital dollar that's doing 100+ billion a day, 40 trillion a year. China is years ahead of the rest of us. There's 70 other countries piloting. The US is behind. And this could literally destroy the US's reserve dollar status, reserve status in the world, which would have a catastrophic, I can't even begin to understand, catastrophic impact on all our lives, all of our businesses, and our government. We cannot afford to lose that. We're living through the fourth industrial revolution, and it is imperative that America stays on the forefront of innovation, which is why a big part of my running for president is to bring attention, to create awareness around this. I spend a lot of time assisting, supporting legislators, informing them, making them aware so that we don't accidentally make a mistake that causes our nation to collapse. And this is legitimately a real concern. That is, what's at stake. This one's for all the marbles. And so I think that, yes, we're failing on a lot of fronts. The Jobs Act is great. But I think, part of the problem is, when you're a hammer, everything looks like a nail. And a lot of the regulatory sort of legislative decisions that have been being made are more of an enforcement thing rather than a nurturing of innovation, supporting, fostering, innovation. The deck is being reshuffled. Right. And I think that Switzerland and Singapore, for security tokens in particular, are leading the way because they recognize that Wall Street, that the settlement of financial transactions, that entire business is up for grabs, and there will be winners and losers. And that, Switzerland or Singapore could become the new United States when it comes to financial settlement. And this one is now interoperable, cross-border, 24/7. And I play for Team America. I want America to lead as much as possible. But it is up to our legislators. It is up to our regulators. We have to choose, and recognizing there's two sides to the sword, right? Innovation is scary on the one hand, and the way that we conquer fear is with knowledge, but it's also a challenge that presents opportunity. And I pray, and I'm doing everything in my power to support America leading in this process so that the American people become the beneficiaries of it. And we're seeing great things at a state level. Wyoming has passed 17th law now, fostering innovation. Startups by the thousands are incorporating there, speedy banking licenses and all things. Alaska seems to have really exciting stuff going on. Utah, Idaho, Colorado, we're seeing a bunch of it in the center of the country. And then I've been spending time with Mayor Suarez, the Bitcoin mayor of Miami. I've spent a lot of time with elected officials, but this one actually knows his stuff. He knows what he's talking about, and it's like it's in his DNA. And so we're behind on a number of fronts, but we're the United States of America. It's not too late. We can get there, and we can get there quick because, we are a great nation after all. And I will do everything in my power to make sure that we stay on the forefront or as close to that as humanly possible.
And that's what we do. Americans, we innovate. And because we innovate, we have been able to become this global economic, superpower. It's all about innovation. It's interesting what you're saying. You're right. I think that this really is one of the biggest challenges of our time because, I don't think what regulators realize is that if we don't do something to really democratize the markets and level the playing field, we're facing right now. It used to be that when people would go and they would invest with their retirement money, and then, they would be able to build their retirement portfolios. We're not allowing people access to those type of products that are now producing the yield and the growth. We're going to be facing a retirement crisis, which we're already starting to. Of unimaginable proportions. It'll make the 2008 meltdown look like the Roaring 20s. That's how, big a deal that this really is. So I commend you for everything that you're doing here, because I think that this really is the most important issue of our time.
Yeah, there's no question. I mean, we're living through a period of time where the great wealth divide, the separation between the haves and the have-nots. I mean, we're living in the divided states of America when we're supposed to be the United States of America. We're divided politically, racially, economically, and how do we find our path, our way back to unity?
Right.
You know, and at the core of it is, you know, the American dream. You know, at the core of it is the ability, you know, life, liberty, and the pursuit of happiness, and giving people the opportunity to pursue that happiness. And opportunity is dissipating at a time where it should be increasing. And thanks to the work of all you participating here, we are trying to bring greater opportunity to the American people. We are living through the greatest wealth transfer in the history of the world. There's nearly 1,000 new billionaires that made their money in cryptocurrency.
It's amazing.
We're talking about something extraordinary. And because these people made their money quickly and more easily than some of those in the past, those elite that feel so entitled, they're going to do more with the wealth and the abundance they've been given. They're going to support more charities. They're going to support more change. They're going to give back as stewards, custodians to those that are creating the next wave of stuff. You know, we're at a time where the world needs it, right? The world needs wealth in the hands of those that are going to give back and do more with the things that they've received. And so I think this is fundamental. It's core to our survival as a nation and as a species.
I completely agree. What do you think? I mean, just, I guess, speaking about, you know, innovation and sort of the next big thing, even in this market, everyone is talking now about non-fungible tokens. What are your thoughts on NFTs? Is this, you know, is this the next big thing? Is this crazy? Like, what is this?
Well, I mean, I've been doing NFTs just like ICOs and things since before they had names. I mean, going back to the 90s. I ran, prior to Bitcoin, all the world's digital asset, digital goods, video gaming markets. I was like the guy. And so I've seen this market again since the beginning, helping friends at Wax and Block V, again, and the first NFT companies that came out of Los Angeles. I think it's phenomenal. I think it's where we're going. It's not new. We've had digital art. We've had baseball cards, memorabilia, and otherwise. But what the blockchain has done, in the same way that it's assisting security tokens, is digital certificates of authenticity, right? You know, known scarcity and, you know, non-counterfeit and all these sorts of things. And we're watching a whole new market emerge. We're watching a democratization of art and these types of assets creation. And I think it's a great thing. It's back to value capture, right? And value creation. We talked about what happened with Microsoft and otherwise, and all the value these days are being captured by a very small select group of financial engineers. And so I think a world that democratizes opportunity is a great thing. I think NFTs and the markets for digital assets, art, memorabilia, goods, whatever they are, non-fungible tokens, is democratizing opportunity, again, in a phenomenal way. And so I think it's incredibly exciting. I've been watching. So I'm like a doula for creation. So what I do is I help birth ideas, and I create the blueprints, the open source roadmaps, and then I go run off to create the next thing. And then I normally show up a couple years later to help fine tune and to make sure that everything is working as intended.
Well, do you think with these NFTs, it's history repeating, just what you did with the very first security token? I mean, do you think that they're doing this outside, again, of the SEC purview? Do you think that they should now go back and learn from the mistakes that others made with ICOs, that you did correctly with creating the STO market, and that we should see these, you know, them actually kind of use the regulatory structure we have in place right now to create these non-fungible token products?
Different markets. I would have thought security tokens would have come first. This would have come second. I don't always get the timing right. NFTs have taken off in a monster way, even before security tokens have really realized all of their incredible utility, which I think is going to disrupt all financial settlement. NFTs are different, though. You know, this is art. It's not a security, right? You're not getting access to a revenue stream or equity or, dividends, which is, what we look at, Howey Act, things of that nature, the Howey test. And so this is, you're buying a gift card, or you're, buying a piece of art or memorabilia, which is regulated differently. And no, I don't think these are securities, and I don't think that the regulators, I think, have the right with utility tokens is one thing. I agree in utility tokens, but a lot of the early ICOs were really securities that were creating utility tokens to circumvent securities law.
Right.
And in that case, if it quacks like a duck, it walks like a duck. Let's, yes, sure, you can do all sorts of things to not be a duck. You can go through a lot of changes, but at the end of the day, let's protect investors, because those things look more like securities. And that's, again, there are utility tokens are real. And there's layer 1 blockchains and things of that nature, or layer 2 even, that are utility. But the vast majority of innovation that sits on top of those layers, really probably look more like securities, and then startups in general changing capital formation. NFTs, I think, are a completely different animal, apples and oranges, right? And so I think that, yes, regulators will try and get involved. But they're going to have to use a different set of tools to regulate a market that is fundamentally very different. But change is coming. Change is coming everywhere. We're building systems that are literally going to change the world, probably even more than the internet itself did. At least because the internet that we think of historically as the internet of information, this is the internet of everything, including value, and we're changing the underlying systems of value and governance and all that stuff.
Right. No, I completely agree. Do you think that we should offer this panel for sale as a non-fungible token? Does anyone want to give us $1 million? We could offer the panel for sale, create an NFT out of it.
I mean, I think the answer is, I believe in free markets, and having been around the conference space in this industry for so long, I know how hard it's been. This has not been the most lucrative thing, it's not been an easy business. Historically, there's not been a tremendous amount of sponsors, maybe through a season. And so I commend anyone that's been able to withstand the test of time, and nothing would make me happier than seeing those that have, continually built these watering holes, continue to build these opportunities to convene those people that have a shared interest, and to bring us together, because I think that this is creating tremendous value. And yes, if you could sell this panel and the creators of this event and those that support it could be the economic beneficiaries, I think that would be a wonderful thing, because I have a lot of compassion, sympathy, and understanding. I know how hard it's been to get here.
Yeah, no, and you're right. I mean, I think if we solve this economic problem, there are so many social problems that we'll be able to solve, just not only even just across the country, but even across the planet. I think you made so many amazing points. This has been really such an honor for me to talk to you, to hear your story, and thanks for all you do. This has been really fantastic.
Well, so glad to be here. Thank you, everyone, for tuning in. Thank you for facilitating this fireside chat, and thank you to all those that made this happen.
Secure commercial real estate investments, finally made possible in an accessible and affordable way, granting you complete freedom to manage your portfolio. A disruptive and innovative blockchain-backed platform that keeps your money completely secure while efficiently unlocking new possibilities. Sign up today at accrue.co.
So before we end the day, I'd like to invite our conference organizers, Draper Goren Holm, Sean, to say some last words. So please welcome Alan Goren, Joseph Holland, and Adam Levy.
Boom.
I'm muted.
What's up?
What's going on, Alon?
Dang, it's been a long day. It's been a great day. That was a great way to end it. Like going the whole journey from crowdfunding to STOs and everything in between, and all the positivity and the funny stories. Actually, I was just texting you while they were talking. Brock, that first time he spoke, he filled in for Tim. Tim had like a sore throat or a cold or something. He was actually in LA, like on his way to the conference at the LA blockchain or at the convention center.
Right.
And Tim calls and he's just like, I'm sick. And he texted Brock and his daughter, and Brock responded faster, literally like hopped in an Uber. I don't even know if they're this is over 5 years ago, hopped in a cab or an Uber, got there. But I remember one of the things he talked about on stage, and nobody had a clue like what he was talking about, was that his shoes were tokenized. And they were tokenized on the blockchain. Like there was like a certificate of authenticity or something like that. And all of us were just like, the hell is this dude talking about? You could tell, like, talking about the crowdfunding stuff and talking about the fundraising, like brilliant, knew what he was talking about, but it was so like awesome to see how way ahead of his time he was on that.
Were these like Nikes or Gucci shoes?
These were like just cool, like they look like skate shoes or something like that. I'll share this on Twitter later, because in my Google Photos, I have pictures from it. You'll also see how far the conference has come. We were like we were just in a big room at the convention center, all set up like the way we've had setups, but like you can see how far it's come. Back then, we just had like a basic stage with 2 chairs on it. The backdrop that had our logo on it was like printed on shiny vinyl, like, you know, that you print at a print shop like the week before the conference, and that was that. It is a tough business to run conferences, which is why we decided to not focus on the conferences being our full-time job. So that's a good segue to, if you're an early stage startup in the blockchain space, or interested in getting involved in what we do, go to drapergorenholm.com. That's our full-time jobs. We do the conference because we get to meet you, because we get to learn from the smartest people in the industry. And it's really, really important for us to meet you if you're starting a company. We like to be the first check into the companies that are building in this space. So if you are, reach out to us. We wanna be your friend.
So let me ask you this: how do you feel about the conference overall? We had over 22 sessions, over 70 speakers, all within their respective verticals, from tokenization to compliance to real estate to shoes, like you just brought up right now, to everything kind of touching upon the security token, digital security sector. How you feeling?
I'm feeling good. I'm feeling great. I'm watching the comments too. It's been crazy fun. So if anyone has any last minute questions before we go, but it feels awesome. This space has grown tremendously. And like we look at the DeFi space, we look at NFTs, we look at all this Wild West craziness going on. But this space is really like incrementally getting better and better and more exciting when it comes to security tokens. Amazing. I mean, I think that like it can get lost on the people who aren't in the weeds or haven't been in the weeds in the past, how exciting that Fin P2P announcement was today. The fact that multiple custody providers, multiple technology providers, multiple blockchains, multiple financial institutions all are working on an interoperability layer to allow us to transact globally. Like, so if we're talking about the actual democratization of capital, not just the richest people in the world being able to access the deals that then we get access to after they've extracted all the value from them, but actually allowing us to participate, this is the first step. There's 2 sides to it. I threw my hands up earlier. There's the DeFi side, where they're circumventing regulation completely. We're seeing that happening. And then there's the actual regulated side. When the banks make it easy for everyone to transact globally and comply with regulation, we're 9 steps out of the 10 steps in to making it so that I can also invest in that small business in Africa, that small business that my cousin in Israel is starting or my friend in Canada is starting that I can't invest in today. That's huge, and that's going to change the world. And the way I look at DeFi is either the banks are going to go out of business trying to compete, or they're going to have to compete to stay in business, and that only benefits us. So watching the bankers, the politicians, the regulators all talk about making these incremental changes is huge. So I think a lot of ground was covered today.
So did you say you have family in Africa?
No, I don't have family in Africa, but I was thinking about Africa because of yesterday. I spoke at the Prime DAO event, and 20% of the attendees at the DAO summit they created were based in Africa. Wow. Lunar Crush recently launched a specific Africa channel because so many cryptocurrency followers and so many rules and laws are changing in Africa to allow this. And I think that I was just thinking about this because when I was in the crowdfunding space, one of the most important and toughest things for us were micropayments. It's what's actually, in 2013, my first exploration into crypto was mining some crypto so I could see if it could be used for micropayments on our site. And it wasn't ever really that useful. But Africa and some parts of Europe, but mostly Africa, completely leapfrogged us in innovation on micropayments with cell phones and with other mechanisms because they didn't have the infrastructure. So because they didn't have old shitty infrastructure locking them in and holding them in, they were able to leapfrog, right? And so in Africa, you can transact at corner stores in different places with your cell phone in a way we couldn't do here in the United States. So I think that culture and those companies and those ideas are going to actually make them leapfrog us when it comes to micropayments and transacting. I want to invest in those companies. Yeah. So that's why I get excited for this stuff.
So one thing I wanted to kind of cover and share, because I think it's important to Draper Goren Holm's story, and it puts a lot of emphasis on why we chose to do the Security Token Summit, because there's a lot of interesting topics popping off in crypto, popping off in blockchain, and a lot of industries, new buzzwords and so on and so forth. But what is it about security tokens? And I'd like to hear from you, because I know you're very passionate about this space outside of Draper Goren Holm, right? Like what is it about security tokens that got us so excited about Onera, got us so excited about Symmetria, and all the things that industry brings?
So I think that the reason why security tokens is interesting to me is I started in that crowdfunding world. And when I launched my first crowdfunding platform, the main idea for that crowdfunding platform was so I could invest in my neighbor's company. I actually created like a use case. That was, well, there was two use cases I was hoping for. One was a little more personal, and one was I thought was like the way it was going to work for most people. And the way I thought it was going to work for most people was I used an example that I actually took from one of my best friends growing up. I thought about him in my mind, that he worked for a landscaping company. He was like one of the biggest experts in that world that I have ever met, like took it seriously, was super into it. But he worked for a company. And I knew the only thing stopping him from starting his own service and probably being the best at that in the world was having the equipment, buying a truck, buying all the things you need. And that's thousands and thousands of dollars. And I thought, what if he could go to his friends and family, his customers or his neighbors, raise that money, buy the truck, and then they could own a piece of his company, and he could promise to maybe mow their lawns and do more intricate landscaping and things like that, but the services that he was going to offer. But on top of that, they would own a piece of it, right? But I actually helped somebody launch a campaign like that. One of the first days we launched our site, and then all these lawyers swarmed in and were like, "Are you insane? This is public solicitation. This is illegal." And I had no idea. This was over 10 years ago. And I had no idea that this wasn't allowed to be done on the internet. I also thought that me and all my friends that had punk bands could raise money this way, and then also provide like dividends or distributions based on how many records were sold and things like that, right? And that of course was the same problem. It was illegal according to U.S. securities laws. So the U.S. securities laws started sort of incrementally changing over time. Like Brock mentioned, the Jobs Act, that was signed in 2012, but it took a couple years for the rules to actually be written after that. And then it's taken till now from the numbers to go from a $1 million cap to a $5 million cap. And now it's starting to be usable. But when it comes to security tokens, what was really crazy to me was, one, the accredited investor laws and all those things that are still, to me, offensive and completely messed up and should be abolished completely. But those are going to exist whether we like them or not. How do we comply with them fast and easy using technology so that if you share with me on the internet that your company is raising money, I could invest as fast as I could invest in a crypto deal, right? If we can get to that with security tokens and with regulated securities, then now, like I said, we can actually democratize capital. And if the US doesn't get off their ass and make it happen in a way that works for the United States, somewhere else in the world is going to do it. And you know, to me, I have conflicting feelings that if I care if somewhere else in the world does it, but as an American, I want to stay living here. I want to raise my family here, and I want to participate from here. I don't want to have to be one of the thousands of crypto friends we have that have left the country to run their companies. Like that's not what, you know, that's not what we want. So you know, the reason why Onera and all that stuff, and we should wrap it up soon, is because I sort of started pitching some of these ideas I had in the past to Ami after he had launched the first ever fully tokenized fund. So Blockchain Capital was the first, but then Spice, Ami's previous fund, was actually the first one that tokenized 100% of the shares of it. It was a very cool and innovative thing, but he instantly realized that it wasn't going to be built on Ethereum in the way it was being built at the time. And he had some ideas on how he could do it differently. And then I started pitching ideas to him of how these things could scale, and these ideas I've had in the past. And by the end of one conversation, we basically decided we were co-founders in starting this new company. Now, Ami took it to a whole different level. Joseph and I sort of, you know, with you act as like CMOs kind of, but with the rest of the team, they've really taken it to a whole different level and are now doing some incredible things.
Amazing. I think that's a perfect way to wrap up, because we had a kick-ass day. 70 speakers, 22 sessions, from the SEC commissioner to the senator of Wyoming's team, to people from IBM, eToro, Onera, Symmetria, Crew. The list goes on and on and on. The people who know it best taught us the most. Guys, I want to thank everyone for tuning in and give one quick shout out to our title sponsor, Crew, who was able to make that happen to all of us.
Before you play, yes. Accrue, thank you so much for being a title sponsor. Your presentation today was amazing. It was awesome to see the technology work. Also then Symmetria, the presentation was amazing. Onera and the FinPDP group. I think each demo was mind-blowing and historic today. And let's give it up one more time for Accrue, of course, for being the title sponsor. And then one more thing I wanted to add is Adam, every Tuesday night, does Blockchain and Booze. Every Friday morning, I do What the Block. I'm doing it tomorrow morning with John from Lunar Crush. So we've had a crazy week in the crypto space. We'll go over it with John. It'll be a lot of fun. Oh, dang. But go to drapergorenholm.com/events and check out all the rest of our events, because we're going to have the DeFi Summit coming up. We added an NFT Summit that's not even up here yet. And of course, our LA Blockchain Summit at the end of the year that, you know, I wonder if we'll be able to have it at the convention center this year. It'll be interesting to see what happens. But we will have it online. We had over 150,000 people stream it last October, so it's going to be a lot of fun. Please, thank you so much, everyone, for participating. You guys have been absolutely amazing, and hope to see you at the next one. Adam, killer job today. Adam did almost all the producing and organizing of this event, and he absolutely killed it. So give it up for Adam. Somebody buy him a drink at the next Blockchain and Booze.
There you go. And again, one last shout out, Accrue, Symmetria, Onero, Bertalo. You guys made this possible. Thank you so much, guys. We'll see you. When is it? You said tomorrow. What the Block, right? What are you doing on What the Block? You're doing Lunar Crush, right?
Lunar Crush, 9:30 a.m. Pacific tomorrow. Join live. You can ask questions live. You can participate live. And so go to the LA Blockchain Summit YouTube, my Twitter or LA Blockchain Summit on LinkedIn.
Yeah, and then this Tuesday, Blockchain and Booze, we're talking all things social tokens, creator economy, and NFTs with some of the biggest.
Ooh.
Stay tuned for that announcement. Guys, we'll see you soon. Thank you so much. Bye-bye.
Free your tied-up capital. Eliminate costly middlemen. Access to liquidity with reduced risk. Capitalize the true value of your assets. Portfolio and investor management made simple. Real-time risk profiling and robust security. Commercial real estate investment revolutionized using secure blockchain technology. Tokenize with us today, making the exclusive inclusive.
So thank you all so much for joining Draper Goren Holm's 3rd annual Security Token Summit. We hope you enjoyed your time and also took away some really worthy notes. Be sure to continue networking in Hopin and also leverage all those virtual handshakes there are to do. And we hope to see you all again very soon. The Security Token Summit was brought to you by the LA-based early stage blockchain venture studios fund and also Draper Goren Holm, who outside investing is hosting over 100 blockchain events this year alone. So see what else they're producing by visiting drapergorenholm.com/events. My name is Jessica Walker and it was a pleasure guiding you through this summit.